Thanks, Captain. All right. Good morning. Good morning. It is Friday, October the 10th. We got about 40 stocks, 35 stocks green on the NASDAQ 100. S&P 500 looks pretty good. We got Lennar at the top of the list for the S&P. And we got Marvell Technologies, Marvell Semiconductors, and Intel, the top of the NASDAQ 100, followed by MicroStrategy, AstraZeneca, and Team Atlassian. Let's look at those real quick. Marvell's been trending lately. Marvell is up 2%, more than 2%. Intel, okay, still consolidating. It is up 4%, 1%, 1%. MicroStrategy is up a little bit this morning, consolidating near these levels, recent levels. Bitcoin is trying to push a bit higher. Let's see, Palantir, inside day for now, Palantir. Let's look at the New York Fangs. New York Fangs. Okay, they're kind of mixed right now. CRML's on the move right now. CRML.
Yeah, indeed. Michael, thank you so much. Good to see you. Coming up on Yahoo Finance Opening Bid, executive editor Brian Sozzi is the host of that program. I'm sure he's going to bring us a lot of puns in the next 30 minutes.
No puns, Julie. Well, I will say it's unlike the government will reopen the show in the next 30 minutes. So we're going to go into all things, everything rally, crypto.
Okay, let's see what's going on here. Okay. All right, we've had a decent week. S&P 500 to start off. We're still in this upward sloping flag or channel. We tested Wednesday's low on Thursday, came back up, trading in the upper half of this 5-day, 6-day range. Okay, so that looks pretty good. With VIX where it is, I would suggest, just a suggestion, I don't know your personal circumstances, but if you think like I do, that there's a possibility we could pull back, given we're up 10 weeks straight without a reprieve or a bounce or a pause, I would be buying some puts while you can, while they're cheaper, maybe structure some put verticals or something like that. Brent's been late lately. Let me see if he's updated yet. Yeah, okay, so here we are, Friday. Okay, let's just look at this real quick. I'll post this in the Gamma channel at some point. Brent remains weary of a risk potential below 6,700 because of the negative dealer gamma. With negative dealer gamma, if we drop below 6,700, they start selling futures. to hedge, which exacerbates downward moves. So we want to stay above 6,700 if you're bullish. Okay, so pretty short update this morning. Support where you would expect and resistance. Just take a snapshot of that. All right. Okay, you can see resistance right overhead at 67.50 and support right below. Positive gamma, so that's telling us we're probably going to stay in a pretty tight range.
ARMG. CIFR.
77.50 to 67.50. 67.50. I wish it was 77.50. 67.50. 67.30. All right, so that's a 20-point range.
CIFR.
Okay, we've got less than a minute to go. First 15 minutes, all I'm doing is taking profits off the table, reassessing the markets. We've got CRML up this morning.
CIFR.
Okay, futures are starting to pop. Let's get ready for the open here. Riot, looking for a follow through and Riot. And we're open. Gonna take some profits off here. Let's see what's looking good. Okay, LAES, that's up.
High took alert plus 800.
LAES from yesterday. Okay, gapping up this morning, LAES.
CRB. BITF. HIBE. IONC.
LEES. Okay, let me take a little more off here.
Jefferson Capital getting trading underway over at the NASDAQ. It's going to shut down day 10. And as you know, resolution political gridlock after government.
Okay, LAES is up again this morning.
SCRB. BTQ. LDI. BAIG. AAOI.
We have too much demand, but I just think when I saw those numbers, I said, okay, so now it's really a very one of the most expensive vacation centers.
Disney, they've raised price at the parks. Yeah, big. Not to mention Disney Plus's price has also gone up.
Did you get that bill?
Well, I'm the idiot who's still paying for Hulu, Disney Plus, and RIS. I don't know why we're doing that.
YGD now.
I can't. So many things on my list. I can't.
CRWG.
All right, first 15 minutes, all I'm doing is taking profits off right now.
OMD.
SGPS.
LDI. GGD. TMQ.
LDI, FKWL,
NRIX, BITF,
There's some people are making lists of these. You mentioned
SLE,
LAES, taking a little profits off there.
everybody's coming.
UNS,
This is the problem. I said, you know,
PABS,
that once they start issuing,
SGBX,
like the day that you have the
LEVI,
stock really,
Tesla.
there's really just
CCT,
Tesla trying to push a bit higher right now. Tesla.
SGPS,
ONMD,
and so they're gonna
RGTZ,
and they're gonna be too much supply, and then we're gonna have to
RGTZ.
rethink the whole thing.
LDI,
We don't want too much supply.
CCTG,
Think the whole thing.
LDI,
What whole thing are we talking
It's
about?
part of the market. This part of the
BITF,
market's out of control.
USI,
Okay? It's out of
All right, there goes Google. Google on the move.
CIFRW, STAI, PABS, CCTG,
SGBX,
DGNX, SGBX,
Okay, there goes Riot. Riot on the move.
CRML,
VSME, LDI,
BINI, ONMD,
VINI, FKW,
Riot on the move.
CRMLW, QS,
Okay, watching. All right, so that looks good. Riot's on the move.
CLSX,
Riot's on the move.
FKWL,
Okay, Riot breaking higher.
GABS, RKLX, ABV, DGNX,
SGBX,
VAIG, RGTZ, VITF, PONX, VNTG, VSME, CCTG,
CCTG,
VINI, FKWL, SGBX, APLX, ABAT, PABS, STAI, ABV,
PONX,
VAIG, MRM, CONX,
APLX,
Apple still moving. Apple on the move. Riot looking good. Riot. Apple.
QNRX halted to the upside, CCTG,
Apple.
DGNX,
STAI,
CLSX, APLX, NVX, STAI,
Apple looking good.
BAIG,
ABV, VAIG,
SGBX,
VG, MRM,
RGTZ,
All right, CRML.
CCTG halted to the upside,
CRML continuing.
LD,
Okay, I do have some 1750 calls.
resume in less than a minute,
SGBX,
APLX, BAIG, IONC,
GNY, ABV, VINI, VAIG, PABS, VG,
SGBX, ONMD,
DGNX, CCTG, ABAT,
CAN,
APLX,
LDI, CCTG halted. CCTG will resume at 9 hours 39 minutes and 47 seconds.
ANVS, STAI,
STAI,
All right, so
RML,
Riot's still going.
QNRX may res in 10 seconds. APLD,
Riot's still going here. Rocket Lab's up again. Looking good.
AMPO halted.
Netflix up again. Let's see, Netflix. I have put credits. I did buy some calls with Frano yesterday. 1250, 1255. Looking for a grind up into earnings. 1250, 1255. Okay, not too far out of the money right now. We got up to 1242, almost 1242. Netflix looking good. Okay, futures continue to move higher. Let's take a look at Trace. Okay, so we got a lot building overhead. Let's see if these are any 99 percentiles here. The significance of 99 percentiles is that the seek and destroy algo usually goes after them. 67.35. Okay, those are done. Okay, so yesterday we had a fade from the open, right? We had a gap up. We had a gap up yesterday right here, and then we faded the rest of the day, and then rallied into the close as dealers and trades came off. Right now we're gapping up. We're going to gap up and fade again. Highly possible. For now, we're testing yesterday's high S&P.
The SOB are halted to the upside.
But they also seemingly mentioned being in advanced discussions about another gigawatt
TRON.
sale
ARAY.
with a potential hyperscaler. I guess that's me saying that. They didn't say specifically who the customer might be. No one knows. This gets back to
All right.
LTI. But now we can talk
I like to take profits the first 15, 20 minutes, then reassess the markets. That way I have a standard practice of what I do instead of chasing the very first prints to see if I can go with the trend and then it winds up reversing. I don't like that. So I usually wait a few minutes. Okay, S&P up against this liquidity up here. My guess is that we're going to fade, but what do I know? What I do know is that got a lot of purple here, a lot of positive gamma, which is telling you you're probably going to stay in a pretty tight range where it's 67, 57 right now, just shy of this strike right here at 67.60, positive gamma. Next step, 67.75, then 67.90. We're going to get 860. Whoa, look at Riot go. Oh, look at Riot. Riot is on the move. Riot gone. Okay, squeeze play. Okay, Riot. What happens when we get above the call wall? Okay, so Riot. Right out of the gate, popping. Dealers are having to scramble, buy shares. That's creating a squeeze.
CCTG may rise in 10 seconds. GORB. VITF. TDIC halted down.
DWM.
Somebody else come along and want to buy this thing.
That makes sense.
AMPO may resume in less than a minute.
Nebius needs something.
Maybe it's
Nebius can use its
STAI.
stock price. Nebius also walked up by. I know.
Nebius has been
WOLF.
incredible too. They did that Microsoft deal.
I think Nebius at GTC conference and the nice conference that we have for NVIDIA.
CCTG.
And I said, look at those guys. No one's
STAI.
going on. Their booth is empty.
CLSKW.
I just go over there just to like talk to them. I feel bad for them. I don't feel bad for them now.
Wow, look at Nebius.
You gotta go out there and talk to them all your life. They're like, how you guys doing?
I could have talked
TTRX.
CCTG.
STAI.
It would be like the toughest thing in the world.
Where was this?
QNRX may resume in less than a minute.
Oh,
They had a booth. They were like terrific, but there were like three
AMPO
guys.
may rise in 10 seconds.
Oh, let me throw them a bone. I wish I
STAI.
had a Nebius bone now.
CLSKW.
Right?
I know.
CCCX.
Yeah.
APLX.
Put up a higher ratio.
All right, looking good.
But we'll see.
Oh my God.
We'll see.
It could be.
See what happens. Who knows? Guys, I want to do an update as well.
Okay, nice pop here on Riot. Starting to see a little profit taking. Nice breakout. Riot. Okay, Riot. Let's see. Netflix. Nice pop on Netflix. Tesla trying to hold. Riot, nice pop.
SOBR may resume in less than a minute.
Dealers are having to scramble. Let's see, Riot.
CCTG.
Riot.
LD.
Above 2250 is the next call wall. Okay, we're above that call wall.
CCTG. EWM.
does not appear that that has yet been the case.
ONMD.
Were it the case, we probably would have gotten a press release telling us
STAI.
of
QNRX.
this transaction. Now, on the Warner Brothers side, as we've said many times, they're looking
STAI.
at a split of the company that they believe will
APLD.
bring real value, and there certainly is a belief as well that when that split occurs, let's call it April.
All right, just taking some more profits off here, reassessing this market. Very strong open.
SLNHP may resume in less than a minute. SMU.
YDDL. SMU. ONMD. QNRX.
Time, risk, any number of other things, particularly given the
STAI.
history of this company, the difficulties that it still faces when it comes to
APLD.
linear networks. You would imagine that if in fact they were able to get up to a price that I've indicated previously based on at least
WLACU may resume in less than a minute.
let's say 24, largely cash, that the board of directors of Warner Brothers would say, I don't take
YDDL.
that. Don't believe that that has been the case as yet. So
ONMD.
the question is, if and when Paramount will say, we haven't been able to make enough progress here,
QNRX
we're
halted
just
down.
going to make our offer public,
STAI.
whatever that offer may be.
AMB.
SLNHP may rise in 10 seconds.
Pressure the company. They don't have any
ABAT.
real mechanism that typically
Riot.
rely on
Nice.
in terms of a force function.
Okay, Bitcoin looking for that bounce.
The likes of which we were just talking about, for example, with Core Scientific
CENA.
or some other mechanism.
NAK.
The only one you
VINR.
can call a special meeting, consent, but you got to get 20% of the votes
TGIC
in
may
order to
resume in
call
less
that
than a minute.
special meeting.
WLACU may rise in 10 seconds.
Have had to hold their shares for at least a year. That's a high bar, very high. So, Jim, this is going to be an
ABAT.
interesting one. My sense is, given the weeks that have already taken place, gone by
APLD.
since the original leak of
CCTG.
their interest in Paramount,
YHGJ.
that they're either gonna wanna
YHGJ.
try and get something done privately
VINR.
very soon, or perhaps we
NAK.
will see it. Larry Ellison, my understanding is, remains committed to a potential transaction here, is
SGBX.
fully bought in on it. Not as
CCTG.
though there would not be other investors that conceivably would come along. And there is a willingness on the part of Paramount, is my understanding as well, to at least offer, for example, David Zaslav a
NVX.
chairman's title of some kind for a period of time and things of that nature.
CCTG.
TGIC may rise in 10 seconds.
Issues that
AMB.
also can become important.
VINR.
This is going to be up to the board.
RGTZ.
If they hit
Okay, Riot. Riot's still pushing here.
SGBX.
It's Anthony Noto. It's Anton.
Okay, nice move, Riot.
Strong directors on that board. It's a fairly strong board that conceivably will say it's not just about what David Zaslav wants.
I think that, David, this is the most logical deal you could have in a very challenging industry. You see the stocks.
Okay, Apple.
This stock, of course, was
Apple pushing.
because the studio
But it was also a $10 stock.
YHGJ.
this is what all of us are
CCTG.
in terms of remember you said
Okay, what do we got? STAI. Okay.
SMU.
Google. Okay, all the New York Fangs are looking much better.
ONMD. YHGJ.
Oklo. Let's see, Oklo's higher. Oklo looking good.
LFS. VINR.
The idea of making 40 movies a year when you put Paramount and Warner
ABAT.
Brothers Studios together. These are all the benefits that at least
Riot.
CCTG.
and we are keeping a close eye on that stock price. Which is hanging in there, but obviously,
CCXW.
as we've said many times, doesn't have a particularly large flip.
but there is, without a doubt, a raison d'etre for doing this. And
ONMD.
you want to own that one because it's going to be a winner and a very
ONMD.
challenging.
And as well, I think we've said many
CCTG.
times as well, this is Paramount's opportunity because
VINR.
there's no one else expected to come in here. As I said, many
Oklo. Okay, Oklo looking pretty nice. Trying to break out. Oklo trying to break out. Oklo and the nukes.
CCCXW.
Thing for Paramount if they get it. If Paramount doesn't get it, then what is it going to do? Like, what has it got?
I don't know.
ONMD.
I don't know.
CCTG.
Okay, futures continue to rally.
ABAT.
So, Carl, we'll keep an eye on it till you see what's going on. Right.
Okay, Coinbase, that's finally breaking out. Remember Coinbase, we were looking for it to pop above this level. Okay, Coinbase, we were looking for it to pop. Okay, so it's still trending. Coinbase, I have CONL. CONL calls. Nice little cup obvious. Cup.
LIDR. ABAT NRX may resume in less than a minute.
I don't know. I mean, to me, it seems like it's a little dicey.
Okay, looking good.
It was the 11th best economy in the world. Like,
Well, our first intervention in EM.
Coinbase.
since the late 90s. And Evercore today thinks maybe
CDIC
might not be
halted
enough.
down.
Gotta see
ONLD.
how these midterms come together.
We need some investment bonds, possibly. When it comes to the credit markets as well, still keeping an eye on the alternative asset managers, certainly focused on private
Coin.
First glance, just first
ABAT.
glance, ABAT is on
LIDR.
I think of the HYG will get some people's attention, Jim.
I think high yield. And then you take a look at the shares of Apollo.
CLSKW.
Or even Blackstone. Now, today, not really moving too much, but they have not had a good week.
but you have got to stay
SLDG.
QNRX may rise in 10 seconds.
No one knows what it is, and everyone wants to work.
SMU. CRON.
WM.
Nice rally so far.
CRON.
FLUX.
Coinbase.
STAI.
That's looking good, breaking out.
QNRX.
Okay.
BATG may resume in less than a minute. CXW.
Apple, Amazon, Google,
NVX.
Netflix,
TRON.
Microsoft bouncing.
AIG.
All those looking good. Looks like Tesla's trying to do something. Got Snowflake rising. Broadcom looks good too. We've got, let's see, let's go check real quick. Survey says up volume is currently leading. We've got 4-to-1 up volume on the Qs. Okay, this is the good. This is good so far.
NVX. CCTG may rise in 10 seconds. BAIG. SOBR halted down.
QNRX.
Okay.
STAI.
BAIG. QNRX halted to the upside.
Okay, we got an upward swing. And up volume, we've got the futures pulling back a bit. Okay, Apple, Google at highs, Netflix, got everybody excited chasing. I'd be taking some things off into strength. I still don't trust this market. It's Friday. It'd be pretty interesting if we had a 10th week up. It's 11th week up, so we're definitely going to have a pullback now. Nobody knows what the market's going to do. All we can do is analyze where money's flowing. Currently, I don't want to say speechless, but I am acknowledging the strength that the bulls have. It just feels like this is going to fade. Maybe I'll take some puts here. S&P. Okay, I'm going to take some puts. We could very well hold on to this, but I'm going to take some puts. Let's see, 0 day, the 10th. Okay, let me go like 67, 30 lotto, something like that. Buy.
LIDR. SLDP. QNRX.
Okay, let me take a few more things off here. Okay, we got about 8 minutes to go for the opening range. I'm just taking things off here and there. I want to cash my chips. Let's sell half of these Coinbase.
LIDR. NVX.
Sell half of these
TH.
50-55s. Let's see, Coinbase, COIN. Still going here. Wow. Very strong price action. Let me cancel that order. Cancel. Okay, Netflix. Netflix very strong. Okay, I'm trying to get out of Netflix credit spreads for 50 cents. Netflix.
CAN.
Okay, we're waiting for the opening range anyway. So let me just take a look at this Netflix real quick.
NVX.
Netflix, we did buy some, 1250, 1255s, Frano, for the earnings run. So,
GORB.
okay, so this is what it looks like. We got put credits below. This keeps heading higher. 1250, 1255 calls. Frano, if we go in the money here, if we get to 1255, you're not going to get any more out of these calls. Okay, so I'll take profits near 1255 if we hit that level before earnings, and then we'll take another trade. Makes sense? The profit loss curve maxes out, so you don't make any more profit above 1255. It's capped up there.
CCTG.
Okay, Tesla's trying to do something. I agree.
NVX. LIDR.
TDIC.
QNRX. may
Big Bear AI, that one's up today too. Big Bear, let me take a look at that.
APM
Big Bear
multiplier.
AI, BBAI is up this morning. Okay, trending, BBAI. Currently have January 7 calls on that one. So that one's doing well. Maybe I should add to that. Looks like we're going to break higher. It's cup and handle, BBAI.
LIDR.
TDIC.
Breakout above
TDIC halted to the upside.
850.
CAN. DENA.
TIRX.
MSPR. QNRX may rise in 10 seconds.
Almost 10 straight points. The Elliott people have to be impressed. I've always liked Ramon. I think that he's been the only guy who has said, listen, GOP-1 is a threat to
We'll do another one. We'll do another.
I like his honesty. All these other guys say,
Uh,
don't worry about it. Don't worry about it. He said, look,
I wouldn't worry about it until 1255, Frano. I don't think we're going to get there anytime soon. Max profit is 1255. So
MSPR.
MSPR.
His comments about the lower cohort were concerning, but yes, to your general point.
Yeah, look, I think all snacks went up a lot in price. It's one of the high. My daughter's snack, her potato chips, took a lot of the price. It's like, geez, the price is too high.
Yeah, well, I also thought interesting his comments about the Hispanic community, which is an important
BEM.
same as Constellation. Just people are not getting together because they're worried about immigration rates, frankly.
Frano, what we would do is take another trade. Probably same expiration. Cash in our chips.
These are companies that you hear about all the time.
BITF.
You hear about ARM all the time. What are
MVST.
they really doing when the stock's going up? Broadcom's been an amazing stock. Domino's stock's been going down. Starbucks, most interesting because I think they're doing better. It doesn't seem to matter. Lyft is broken out here. Rubik's broken out. Accenture not broken out. SoFi broke out. And we got to cover these companies.
OKLL.
Wow. What? This is huge. Well, I got
LPTH.
Just two guys.
Well, I'll tell you, I'll send
That's all
some
I got.
guys to you. They have
MSPR.
Mondo, swear, man, you never miss a beat. Never miss a beat. You're funny as hell. Room wouldn't be the same without you, man. Oh man, you're tripping. You're tripping, dude.
Okay, LL.
Okay, so wait for the deal. So wait,
MSPR.
Angel. So wait till after to make a
MSPR.
play.
VITF.
ZER.
Okay, LL.
Last talk was positive. Okay,
CCT.
the last talk with the farmer was positive.
STAI. NKLR. JFU.
VITF.
I would assume more of the same. Okay, futures are just sitting here right now. They did pull back a little bit. I'm almost inclined to take a strangle, take some calls here on the S&P.
CCTG.
MBST.
Okay, S&P 0-day. We could just sit here and do nothing, right? It's the 10th of October.
VAIG.
Okay, I'm going to take a strangle.
VITF.
I bought some calls and some puts. They're just 40 deltas for S&P. Okay,
GWH.
I bought 6760 call.
CCTG.
I bought the 6760 call and 6745 put. Okay, let's see which way this goes. Okay, Fridays are usually, less stressful, not really interested in. Okay, there goes Coinbase again. Oh, there goes Coin. Thought I saw Russell in the room. Okay, I'm seeing things.
GWH.
Okay, NVIDIA looking good. All right, so I got calls on NVIDIA. NVIDIA.
JFU.
NVIDIA, let's see, that's up nicely, NVIDIA. Okay, so let's make sure we don't get the, okay, what was that? Okay, what was the news there? That was a financial juice alert. Okay, University of Michigan sentiment. Uni, Michigan
And UAIW.
sentiment. 55. Forecast. 54.
UNRX.
Previous 55.
ONMD.
Good Friday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with David Faber, Leslie Picker here at Post 9 of the New York Stock Exchange. Sarah Eisen has the morning off. Trying to wrap up the week with a little bit of risk on. Every sector is higher except for energy and healthcare. 10-year getting back below 4.1. VIX still around 16.
QNRX halted to the upside.
Obviously, the government shutdown now in
NKLR.
Coming up this hour,
QNRX.
11 founder sours on the
TTIC.
company. Chip Wilson slamming the company's trajectory in a new full-page ad in the Journal.
QNRX.
Saying it's in a nosedive and needs to, quote, stop chasing Wall Street
NKLR.
at the expense of good customers. Wilson's going to join us in an exclusive interview, talk about his criticism of the board.
SHPH.
Plus, was Amazon's October Prime Day a dud? We'll talk about reports of soft demand and if it is a red flag for the government.
Okay, S&P pulling back a little bit more.
Consumer data is just crossing, and Rick Santelli has it for us. Rick?
QNRX.
Snow backing off. NVIDIA popping. Okay, that looks good.
TTIC.
QNRX.
55.0 on headline, a bit
APM.
better than expectations, very close sequentially to the 55.1 in the rearview mirror for our September final read. And that compares, well, at 55.0, you'd have to go back to May of this year to find a lower number current conditions. Pretty juicy here. 61.0, better than expected, sequentially higher than 60.4. If we look at expectations, 51.2, a little bit of a disappointment in both directions, less than expected, less than 51.7 in the rearview mirror. You have to go to May of this year to find a lower number. Now, the inflation numbers, 4.6.
Coin. Okay, let me take a little bit more Coinbase off here.
And less than the 4.7 in the rearview mirror. 4.6 will be the lowest read going back to February when we were at 4.3. And finally, 5 to 10 year inflation stays at 3.7, both matching expectations and in the rear view mirror. To find a lower number, you'd have to go back to August at 3.5 to find a higher number here in June at 4.0 to give you some context there. Very quickly, the government shutdown has caused us not to see construction spending, 2 jobless claims, factory orders, September jobs report, wholesale inventories and sales. However, maybe CPI on Wednesday, scheduled at least the 15th of October. It may be released. I'm not sure if that's going to be the day. Think COLA here in terms of the reason.
Netflix looking good.
Finally, on the week, 409 is current 10-year. It settled at 412 last week, down 3 basis points. David, back to you.
Rick, thank you. Thanks, Santelli in Chicago. Let's stick with the macro picture. Federal Reserve Governor and Fed Chair shortlist candidate Christopher Waller joined
IBM.
here this morning.
Let me see if I can close this IBM. Let's see. I have a. No, I don't. Okay.
I'm still in the belief we need
IBM.
but we need to kind of be cautious about it because here's one of the things you're looking at. You're seeing this very weak labor market, but GDP growth seems pretty good. And GDP now is forecast going close to 4%. You can't have negative job growth and 4% GDP growth. Something's got to give. Either the labor market rebounds to match the GDP growth, or that GDP growth is going to pull back.
Let's bring in Gabriela Santos, Chief Market Strategist for the Americas at JP Morgan Asset Management. You heard Waller there. I'm curious to get your thoughts. Is one going to give, and which one?
So I think it's interesting that even Governor Waller, one of the most dovish members, is also repeating what we hear from other Fed members, and we saw in the minutes released earlier this week, which is that this is really just a normalization of rates. This is not an
Apple, Netflix,
and I do think the futures market is now
Nvidia hanging in there.
Versus peak dovishness in September, rate cut has been taken out, and it's just 100 basis points over the next year to get us to that neutral of about 3%. I think that's the right reading. In terms of which one will give a little bit more, we think it's the GDP report. It's been particularly strong. Second quarter over 3% is our estimate for the third quarter as well. But we don't think the momentum is accelerating that much. So we might actually get a pretty weak report in the fourth quarter. We're not saying recession by any stretch, just that there's a lot of noise in the data. And if you look through it, it's an okay economy, not a red hot one.
What are you looking through when you say a lot of noise?
Yeah. So the first half of the year, so much noise from net exports, subtracting 5 percentage points, then adding 5 percentage points from inventories as well. And then beneath the surface for the consumer specifically, very weak first quarter and then a strong.
Okay, let's go take a look at some of these credit spreads.
When we look at our Chase data for high
Okay, Nvidia looking good.
Slowdown in October and consumer spending, especially around
IBM.
So we're very interested in hearing from the consumer companies later.
IBM credits looking good. Got $1,000 there, sitting there waiting for profits.
Again, no major alarm bells, but just one reason that we're cautious about some of this very cyclical rally in the market we've seen since the middle of the summer. Still very unprofitable, cyclical.
Okay, QNRX, not sure what's going on with this, but that's gapping up there. QNRX.
Government shutdowns. I guess the longer they go on, potentially there is some reaction there. If some of these furloughs.
Okay, let's see what the news is here. QNRX.
What might otherwise be a fragile labor market at this juncture?
Okay.
I think, yes, equity markets are rightfully looking through the shutdown noise and just focusing on
Investment agreement. Sally Lawler as CFO. That was later. This is the recent news.
double digits likely for the fourth quarter in a row.
Okay.
In terms of the shutdown itself, part of it is this data fog. We don't think we will get CPI next week. Still enough there for the Fed to cut rates by the end of the month. But again, the longer it goes on, if we don't have any October
Securities
data,
purchase agreement with a new healthcare-focused institutional investors, potential to raise up to 104 million.
negative jobs
Okay,
from the
this is
federal government, and we might even
QNRX.
see more already without any additional measures because of some of those
QNRX.
6 month
It's up 169%.
federal workers drop off. I do think the Fed looks beyond that, really looks at private sector hiring, and is taking a little bit of a warning sign from just the cooling there in private sector to basically a standstill, and especially only coming from an industry or two at this point.
Okay, Coinbase. Okay, Coinbase coming back. Netflix.
We had a couple rough days for the XRT this week.
Netflix looking really strong. Okay, Riot coming back a little bit. Riot.
In September. I mean, to what degree is that a worry? And would it even move headlines?
Oklo looking good. Oklo. Oklo breaking out. Whoa. Oklo.
Spending, especially in the second quarter into the third, that seems to be fizzling off.
Whoa, Oklo, that rhymes. Okay, cool.
Places in terms of where the services spending is going was very weak on airlines and travel earlier in the year.
Oklo going nicely here. Okay, looking good. Let's see what the deal is with Oklo.
Retailers that we'll be watching here in the third quarter are margins, right? So margins have been actually surprisingly decent despite the tariff headwinds.
Okay, S&P chopping around here. Okay, so no flow, no positives here. Okay, looks really good. Oklo, the nukes. If you don't want to trade, Oklo directly, you can trade NUKZ. Okay, you can trade NUKZ.
Levi Strauss shares falling despite boosting their full-year outlook as price hikes help margins, but tariff costs continue to be a headwind. Those shares down almost 10% right now. And Venture Global shares slumping after the company lost an arbitration case against oil giant BP over disputed and undelivered gas shipments, leaving Venture Global potentially facing billions of dollars in damages.
End of the month. Frano has, I have end of the month. October 31. Frano has the week prior.
October Prime Day sale a dud. We're going to discuss if the company missed the mark with customers.
And basketball diplomacy will take you live to Macau, the site of today's NBA game between the Brooklyn Nets.
Yeah, Frano has October 24th. There you go.
China since 2019. Squawk on the Street is back after this.
Okay, nukes, you can trade that one. Oklo looking good. Oklo on the breakout. Okay, Oklo. What is Oklo's Oklo? Okay, Oklo. What is their ATR? ATR is $11. It's up 15 3/4. Okay, Oklo looks good. Breaking out of this consolidation. Okay, so what do you have here? All right, so do you want to take profits right now, or do you want to look for more? So this is what I would look at. Okay, so you have the trend up. Okay, trend up, and what happens? Prices consolidate. All right, so trend and consolidate. What do you think it's doing right now? It's starting a new trend. Does it follow through? Does it hold here? The volume is lower, so we'd like to see volume increase. MACD's turned up, stochastics looks good, RSI's right. I would say a swing working. I know Frano's been in this forever. Oclo. I tend to trade it a little bit more actively. Okay.
LAZR. OKLO. SMU. BAIG.
DVLT.
ZENA.
Okay, so that's Oclo. Okay, what other? Netflix is looking really sharp there.
LAZR. NBTS.
Welcome back. Amazon kicking off the holiday shopping season this week with its Prime Big Deal Days, but some shoppers questioning how valuable the bargains really were. The Washington Post says some items actually increased in price compared to the week before, and others that were marketed as discounted hadn't actually changed in price at all. Joining us now is Evercore ISI Head of Internet Research, Mark Mahaney. He has an outperform rating and a $280 price target for the stock.
CRML still faded a little bit more. Okay.
And then a few hours later, the discount disappeared. It was just kind of regular price again. But just broadly speaking, what do you think this means for the brand promise that Amazon offers its customers? And does it degrade that trust a little bit?
Okay, top of the S&P 500, Warner Brothers, Palantir, PepsiCo, Palantir attempting to break out again. Above 190 would be good. Palantir. Palantir grinding higher. Okay, Riot pulling back now. Riot pulling back. Oops, I hate this interface. Riot. Okay, a little shooting star for now.
And it's possible that it reflects a little bit of consumer softness. That's possible that's in there. So it's hard to know. But yeah, I don't think it certainly wasn't overwhelming. And the question is just how whelming or underwhelming it is. And I think there are other reasons to like Amazon. But yeah, this was a little bit of a soft report, I'd say.
So I want to get into those other reasons as well, but first, you noted the softness, at least in terms of how engaged people were with Prime Day and how much they were spending. Does that indicate to you this dynamic that the Washington Post laid out, where people felt like they weren't really getting a deal, so they opted not to really go all in on its Prime Day, or do you think it is the consumer getting weaker, and this is just the first indication of that?
It's very hard to know, Leslie.
Warner Brothers, Dollar Tree, PepsiCo. PepsiCo, nice breakout.
My colleague Greg Melnick on the retail side does. We're not seeing we're seeing a little bit of a slowdown in retail spend, but it's not dramatic. And Amazon is so big now.
PepsiCo, day 2 out of a new base. Okay, PepsiCo looking really good. Squeeze. Squeeze play.
And I guess that's the best read. And I'll just still stick with our survey work.
Riot fading. Riot. Okay, so here is PepsiCo. PepsiCo. Constellation Energy still going. Constellation. CEG trending.
I'm giving you a couple of different answers, but I don't think Amazon's pricing has changed as much as that article suggested.
Always worth noting, of course, Jeff Bezos does own the Washington Post. He is the founder of Amazon, still the chairman as well. Mark, what moves the needle for Amazon, though, is often not as much retail as it is AWS. And I'm just curious, what your sort of reads are right now in terms of margins there, given that's been such a focus for investors in the company.
David, you're right. Look, we should change the ticker. It should be AWS, not AMCN. That's what's going to move the stock. If they don't accelerate AWS growth in the back half of this year, like Azure did, like Google Cloud did, the narrative that Google has really lost out or missed a lot of steps in this AI race is going to just get stronger and stronger. The stock is capped.
Okay, so Riot.
Four quick reasons why.
See what's Warner Brothers,
Last quarter it exited at 25% year-over-year
PepsiCo, Marvell,
the industry as a whole. I mean, we are seeing an inflection up because of AI.
Intel.
Cloud compute,
Intel's hanging in there.
Needs. Third is the supply constraints that Amazon and other people have talked
Gilead.
about. We think
Gilead is trending.
There's more NVIDIA chips out there. And finally, they've got this Anthropic deal. Anthropic seems to be winning the Gen AI enterprise race, at least for now. That's a major customer for AWS, and that should help with that acceleration. So we think we will get this acceleration. If AWS can leave this year, exit this year, growing close to 20% year over year, this stock gaps up materially. That's one of the reasons Amazon's my number one pick right now.
Yeah, obviously we see the year-to-date performance. Hey, Mark, I like to take an opportunity when I see somebody who's been around.
Okay, futures kind of grinding lower here. Futures. Let's go take a look at that. Okay, hedging flows continue to move lower. Okay, we have a 99 percentile at 67.85.
In the late 90s?
I see one similarity and one
At
difference.
67.85.
Here's the big difference.
67.85.
On the balance sheets of the major tech stocks than there was market cap back then. I think that statement is probably true. I mean, it's not, it's darn close to true. Like, hundreds of billions of cash. I mean, these companies are so profitable now, whereas back in the dot-com time, I think there was one company that I looked at in the internet space that was profitable. That was eBay, and that was
Okay, nothing below 0 day.
It's just the financial
Non-zero day, we got 67.30. Got a lot of sticky positive gamma here, so we could see this stay above 67.30.
So that's the big difference. That's the big difference. The similarity is, I think some of this AI spending, I'm sure these companies, the management teams that I look at, I think have a mentality right now that the biggest mistake they could make would be to underinvest in AI. So that probably is leading to somewhat overly aggressive AI spend. But look, I'm seeing this return on AI. If you look at the revenue per employee of the four major hyperscalers, throw it in there: Microsoft, Amazon, Google, and Meta.
Okay, hedging flows just sitting here.
The last 2 to 3 years.
Let's look at Hero.
Efficiencies coming from AI deployment.
Still making lower highs and lower lows for now.
Major differences and one or two similarities.
Yeah, you did. I mean, I think it was Sundar Pichai yesterday from Alphabet who said half their
okay, calls are starting to.
By humans, but I mean that goes to your point in terms of productivity.
Okay.
Yeah, we are. Just again, I'll stick with this.
All right, let's see what is active today. Active, Coinbase, Meta, CoreWeave, Iron.
Now, there's a lot of noise in there. There's a lot of factors in there, and these companies, part of it is that they've really curtailed hiring, and so that will increase your revenue per employee. Or they also fired people. Like, yes, some of the people they fired must have been pretty inefficient. So there could be a lot of factors in there, but it's hard to avoid a conclusion that these companies aren't getting a better return on their AI spend, and it's showing up in that revenue per employee, and it's helping them develop better product for their customers, both consumers, us, and for advertisers. That's clearly the story from Meta, and that's why the companies, the market's giving them a little bit of a green light to continue to accelerate that spend. As long as that revenue growth stays high, they get the green light.
That's a good point. Mark, thanks so much. Mark,
thanks, Leslie.
Meantime, Bitcoin on pace to end the week lower as UK's
QRNS.
issues a stark new warning. We'll get details next. Plus, a tough October for the big banks, but could results next week be the catalyst for a rebound? We'll get you ready for that. And is Lulu a lemon? The company's founder, Chip Wilson, slamming its current trajectory and board in an ad in the Journal today. He'll join us exclusively to make his case in a minute.
QNRX is about to resume. It's halted presently.
QNRX may res in 10 seconds.
10 seconds.
BBAI. UEC. BAIG.
SHPH.
Looking for pop and QNRX.
ZEO.
Okay, that looks good. Oklo flagging at the highs.
Week of one day up, one day down. What do you make of all of it?
Oklo looking good. Apple.
BAIG.
Okay, Netflix is still hanging at the highs. Nvidia is trying to go some more. Nvidia, Netflix, Broadcom. Nvidia. Nvidia. Nvidia looking good. Futures trying to turn back up. Futures.
Yeah, they've been calling it sort of the everything rally, haven't they? Which is not exactly typical. I'm just wondering, you know, in the absence of data, and hopefully we might get some fearless data next week. If
Nvidia
they're able to get
looking good. Nvidia.
business and perhaps get that release out, that'll be great. But in the meantime, we continue to rely on some of the more private data. Consumer sentiment out this morning. It was interesting because something we didn't touch on earlier was actually the sentiment listings for consumers with large stock holdings continuing to stay pretty robust.
Oklo. Meta. Nvidia still pushing. Nvidia looking really good here. Coming out of the squeeze or flag. Very strong on Nvidia. Okay, what's CRML doing? CRML. Okay, that pulled back a little bit. Critical metals, it did that yesterday and then it rallied into new highs this morning. Yesterday, CRML also dipped. It was later in the day, around 11 o'clock, but it dipped.
This is the important caveat, Sam, that I think people need to understand is the market is really psychology, and the better people feel, the more they're willing to buy, the more they're willing to spend, not only just on
Futures turning back up.
services, but also on investment. Once that psyche starts to turn sour, once that
QNRX is going to resume again. Trying to get this to resume.
SGPX.
SES.
Fifth Third Bank Corp buying Comerica for $10.9 billion deal. That was mentioned last week, I believe. I have a car loan through Fifth Third. Riot.
SGPX.
I would say, if anything, it's getting a little bit more narrow, which is interesting. We have less
SES.
than 50%
QNRX may res in 10 seconds.
moving average, and that's kind of a near-term and intermediate-term signal. But longer-term signal still very healthy and constructive. Well over 60% of the stocks above their 200-day
But it is becoming more and more narrow. I think it's, the AI premium trade continues to kind of lead the way. This belief that, that we're going to get some more rate cuts, I think, is emboldened investors as well, too. But it is something where, we are seeing kind of a narrow leadership. And what's interesting about
NVIDIA.
Let's just call it what it is. But one of the things that I would caution investors for is that
NVIDIA is still looking good there. Netflix, got a little fade in Netflix. No, Netflix is still at the high. NVIDIA. Again, top 10 on the NASDAQ 100. Warner Brothers, PepsiCo, number 2. Marvell, number 3. Intel, number 4. Gilead, number 5. 6 is Applied Materials. You guys mentioning Applied Materials yesterday. Starbucks. NVIDIA, number 7. Zscaler, number 8. Intuit, number 9. And VeriSign. Verisk Pharmaceuticals. Verisk Pharmaceuticals is number 10. That one's jumping around there. Zscaler's trying to climb the list. Warner Brothers, top of the list. NASDAQ 100. Big Bear AI, looking good. NVIDIA. NVIDIA stretching its legs.
Yeah, and just very, very quickly, we've got 36 of the S&P names that are set to report next week. Obviously, the ones that are important, the financials, but also internationally, we're going to be hearing from them.
Okay.
And also ASML. What are you expecting to hear from these companies?
Nice move on NVIDIA's part there. Looking good, NVIDIA.
What's interesting about the financials is, for a good couple months, they were some of the leaders in the market, but right now they've definitely softened in terms of their
QNRX.
and you started to see some pullbacks in some of those names, I think.
NVIDIA is still pushing. I got 195 calls on NVIDIA.
What they've been able to do with that and give positive guidance going forward. They're not financials aren't necessarily bothered by tariffs. It's not going to hit them, but it does give you some sense of maybe what consumers are doing. We're starting to see a little bit of a pickup in the housing sector again as rates have come down. So maybe some information about mortgages and
PWM.
I think that would help.
SGBX. BAIG.
All right,
QNRX.
always appreciate your time. Thank you so much
QNRX.
for joining me today. Joe Mazzola, head
SES.
SGBX.
Enjoy your weekend. Coming up in
STAR.
for the morning trade, we'll take a closer
Okay, QNRX. This one just keeps going. Okay, gapping up.
ASPI. BBAI.
Trading at Schwab is powered by
PWM.
giving traders even more ways to
ONMG.
sharpen their skills with
QNRX.
education.
Yep.
BAIG.
Expanding library filled with new online
QNRX.
videos, webcasts, articles, courses, and more.
SES.
All crafted just for traders. And with guided learning
NEBX.
paths stacked with content curated to fit your unique goals, you can spend less time searching and more time learning.
SGBX.
SGBX. ASPI.
Schwab Network
BBAI.
delivers real-time market insights, live from the NYSE,
PWM.
NASDAQ, CBOE, and beyond. From earnings to
QNRX.
economic data, we cover what
BAIG.
matters as it happens. Streaming 24/7, anytime, anywhere, free on schwabnetwork.com.
Whether you're an
BIOX.
experienced investor or just getting started, Charles Schwab offers a webcast right for you. Are you a long-term investor?
SES.
Our investing webcast
NEBX.
breaks down different
SGBX.
SGBX.
value,
ASPI.
more.
BBAI.
You can ask questions by
PWM.
chatting with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching
BAIG.
and start learning today.
BIOX.
ZEO. SGBX.
From the
SGBX.
most iconic trading floor in
ASPI.
the world, this is Opening Bell with Nicole Petalides. live on the floor of the New York Stock Exchange.
CBAI.
The countdown, the
NVTS.
setups, the stories that make markets move. Minute-by-minute breakdown of the biggest headlines,
BAIG.
earnings, global movers, just the trades that matter.
NUKK.
As the bell hits and the markets react in real time,
BIOX.
opening bell live at the NYSE, right when it counts.
SGPX.
SGPX.
We're back to morning
ASPI.
trade live. Let's focus on Qualcomm.
NIXX.
As low as today after China announced an antitrust probe into
All right, QNRX, NVIDIA. NVIDIA, nice pop there.
sideways over the last 12 months. You can see how it stacks up here to
BAIG.
names like Texas Instruments,
BBAI.
ARM Holdings, and Intel. During that time, Intel, the outperformer in this group.
SES.
Qualcomm is the focus of the morning trade. Joining us now,
SGPX.
Chris Look, I'm pleased to say, is Next Gen Investing host Jenny Horn. So seems like
SGPX.
Qualcomm is the latest to be sort of
NIXX.
in the crosshairs of this US-China trade tension. Jenny, what are the details here?
Yes, so we are seeing the latest string of the tit-for-tat back and forth between, of course, President Xi Jinping as well as President Donald Trump.
BYND.
As we do see, there's lots of key meetings ahead for the two leaders to hopefully make some peace, because China right now slapping these new port fees on U.S. ships and starting an
SGPX.
antitrust investigation.
SES.
Qualcomm is the latest we're hearing from the overall China nation, but the move does coincide with
NIXX.
Washington plans
QNRX
to
may resume in
limit
less than a
charges on
minute.
large Chinese ships
LTBR.
at these various
NVX.
U.S. ports.
QNRX gonna
Regulator did open specifically this antitrust
resume.
monopoly investigation into Qualcomm over its investigation of Israel's
NVX.
auto talks. The measure
ZEO.
does add to Beijing's move this week, though, to tighten various export controls on various rare earths as well as critical materials, as well as the ongoing halt we're seeing on U.S. soybean purchases,
SLDPW.
further escalating
BYND.
again the pressure we're seeing on American farming communities. But besides the planned ship levies, officials in Washington
NVX.
have reportedly in recent days proposed barring
BAIG.
Chinese airlines from flying over
BBAI.
Russia on flights to and from the United States, and expanded sanctions we've seen from the likes of Huawei, which is then really restricting these U.S. goods.
QNRX
So
may
taken
rise in
together
10
right now, we know
seconds.
these are all seen as bargaining chips, but for Qualcomm today, modestly
NVX.
lower here, but one obviously regulator going after the company. It's not
NY.
necessarily coming from in-house, from here domestically. So take it with a grain of salt, as I do think it's seen as more of a bargaining chip, less of a
NVX.
knock on Qualcomm's business, although we are
NVTS.
lower today in reaction.
BAIG.
Yeah, no doubt a bit of China
BBAI.
headline risk got weighing on things
LTBR.
today, but as you say, it does look like
ZENA.
China is looking for a bit of leverage as it heads into these talks, particularly as it tries to show, look, hey, we can try to put the squeeze on some of your big names over there, you know, those that are very
OKLL.
important to the
RKR.
technology space over here
OKLL.
too. But we're also seeing that NVIDIA chips also reportedly
NVX.
in focus. Chinese customs
SGPX.
authorities are going to be
ONMD.
setting up the scrutiny,
ONMD.
according to Financial Times, and sort of my read into this is
NUKK.
that we've heard a lot about, you know, leakage, sort of backdoors through Southeast
ZENA.
Asia, etc., with China seemingly has been turning a bit of a blind eye to, but I'm just wondering, you know, how you're reading into the reaction.
All right. NVIDIA looking pretty good there, NVIDIA.
Frankly, I didn't realize the massive, really black market we're seeing in the nation for these most advanced chips, as we did see
OKLL.
for the Financial Times to your point,
ONMD.
Sam. They reported at least $1 billion worth of NVIDIA's top AI chips were smuggled and sold in China in the 3 months from May on. So that goes to show there's still an appetite
RKR.
fully in the country for these most advanced processors.
ZENA.
But China's recently now stepped up its enforcement of its control of
ONMD.
chip imports, as
AKA.
Beijing does seek to wean the country's technology companies away from U.S. products, very specifically the
NVX.
targeted processors being
OKLL.
NVIDIA H20 as well as RTX
ONMD.
600D.
OKLL.
Which are designed to adhere to U.S. export controls and also maintain their market share in China. But checks have been extended more recently to more of the advanced semiconductor products. So this is going to be more wide-reaching, and again, another bargaining chip. It feels like, or another sort of attack back from Beijing on Washington, as it's targeting the mass demand that we still are seeing for NVIDIA's most advanced chips. NVIDIA's guidance doesn't include any revenue impact from China. I do think that's important to note, but not exactly what you want to end the week on. Although NVIDIA is shaking this off quite well, we're actually higher in NVIDIA shares currently.
Yeah, it's interesting, isn't it? Because I heard an interview with BYD recently saying, hey, look, we haven't been told by Beijing to not use
All right, NVIDIA hanging in there, looking pretty strong. NVIDIA.
hey, look, we've got a
BAIG.
plan. So it's really playing out. So thanks for filling us with that piece of the puzzle, Denny Ho, and I'll catch you a little bit later. Let's trade it now with Dan Deming, managing partner KKM Financial. How are you approaching your example trade for Qualcomm? Good morning to you.
NVX.
Good morning. Yeah.
BBAI.
As Jenny pointed out, I mean, there's some headwinds here.
LAES. Just kind of sitting here. The S&P is doing the same. We've got sticky price action with positive gamma in this area. Okay. So prices are going to stay around these purple strikes. There's so many of them. Non-zero day. Non-zero day, you can see all of this. 67.50 all the way up to 67.85.
SGPX.
Long the stock at a better level. If it moves higher from here, still get the collect the credit on the put spread, and therefore, and let's see where the stock goes from there. But it doesn't cost anything to put this trade example on. Gives you some downside protection down below that 155 level, and possibly even get put in the stock at a much better level.
Okay, good look at Qualcomm there as we are continuing to track these lines out of China in this investigation. Just want to park that there now, Dan, and get your overall thoughts on the market action today as we continue to hit these sort of threshold highs, certainly for the Nasdaq.
NRX may resume in less than a minute.
It seems for the week. What are your thoughts?
Yeah, it's interesting that we're able to hold these levels. I mean, the Nasdaq and the S&P possibly putting a new all-time high as well. Now the Russell and the Dow are under a little bit of pressure, but really just off their all-time highs. What is interesting is what you and Joe spoke about, just the dynamics in the market, the dollar moving higher with gold moving higher. You know, there are a lot of cross currents here. The VIX at 16, now historically a lower level for the VIX, but you look at realized or historic volatility, it's running around 7. So in theory, the VIX is too high at these levels, as Joe pointed out. We have not seen a 1% move to the downside since August 1st. So there's a lot of cross currents in this market, a lot of head scratching. But overall, market is king, and we continue to see that upside momentum in the equity markets.
QNRX may rise in 10 seconds.
These levels today, I think, is key for the sentiment going into earnings next week.
Yeah, and as I said, we're going
QNRX is about to resume again.
next week. The financials, no doubt, the first cap off the rank. Dan Deming, thank you so much. Have a happy Friday and a great weekend ahead. Appreciate your time managing partner KKM Financial. Coming up, we will take a closer look at the sectors on the move this morning and the news moving markets overseas. Morning Trade Live. We'll be right back.
Looking for a resumption on QNRX.
OMD. LTBR.
ONMD.
REKR.
It's up 294% right now. QNRX gapping up for 1, 2, 3, 4th time, I guess.
ONMD.
ONMD. ONMD. That's a penny stock. It's about $4. Looking for a follow through. One MedNet. ONMD.
NBTS.
Morning movers, be the first to find out what's shaping early market action. Check, options corner, futures focus, technical analysis, morning movers.
REKR.
Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network. Stay connected to what moves the market. Download the Schwab Network app and stream anytime, wherever you are. Live from Chicago, this is Trading 360. I'm Marley Caden. We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable context. From inflation data to sector rotations, earnings to policy, it's a comprehensive...
ONMD looks good. NVIDIA having a good day. NVIDIA trending.
a look at the sectors that are moving markets this morning. Kevin Hinkson joins me from Chicago today. Happy Friday to you, Kevin. What stands out to you about this market today?
Well, it's certainly a broad rally that we're seeing here. I've got
Futures just sitting here, not going anywhere at the moment. Hedge flows turning down.
We have industrials that are basically unchanged. The rest are all green, Sam. It's not a big update, but it's certainly a solid update. If you look at individual names, you know, it be Broadcom,
OKLO.
Google Alphabet, all higher.
Oklo.
OKLL.
It's a good
SMR.
not all the stocks up though. Microsoft is down fractionally. Meta Platforms down fractionally. Healthcare stocks are a bit heavy as we start the day. But that being said,
Oklo. Nice breaking out. Nice trend we're looking at. Oklo.
9 o'clock on consumer sentiment. It came in
QNRX may resume in less than a minute.
changed to a few weeks ago, but that was higher than expected as the expectations were for it to be dropped to 54. So this is a market moving along. And here's the key things I'm looking at Sam, as we move into midday here. The dollar lower. Why? Well, it's a rally in the Japanese yen that has been under pressure lately. It's back up about 0.4%.
Oklo looks good.
Yields sitting right
OKLO.
1%
Oklo still moving here.
If crude oil breaks $60 and ends with a 5 handle,
Really?
there'll be headlines all weekend, Sam.
Yeah, absolutely. We're going to be watching those developments in the Middle East when it comes to commodities and gold. Just recouping that.
QNRX may resume.
I didn't catch that, Mondo. All right, QNRX is about to resume, perhaps.
Really appreciate your takeaways. As always, Kevin Hinks there. Let's widen our scope and take a look at some of these global markets because Tesla's made in China cars are seeing a slight pickup last month. Shipments from the
Okay,
Shanghai factory
looking
rose
good.
2.8% year on year.
QNRX.
Growth after 2 months of declines.
QNRX.
Partly being put down to the launch of the
NVTS.
six-seater Model YL. Tesla's main Chinese rival, however, BYD, seeing its first
SMU.
year-on-year sales drop this year for that month.
QNRX
Meanwhile,
halted to the
China has
upside.
Canadian research company Tech Insights on its unreliable entity list. The firm is known for its semiconductor coverage analysis and teardown reports, including on China. It recently revealed that Huawei's AI chips were made with components from other countries like
QNRX.
South Korea, raising questions about China's tech self-sufficiency.
QNRX.
On that trade blacklist means Tech Insights is banned from working with Chinese businesses and unable to retrieve the data and other information it needs from organizations in the country. And we continue to track the political developments in
NISX.
Japan. The ruling Liberal Democratic Party facing uncertainty after the governing coalition collapsed over a disagreement on funding issues. The move dealing a blow to LDP leader Sanae Takaichi just as she was on
QNRX resumed again.
the announcement coming up. Japanese market
Another gap up. Jeez, look at this thing. Need this on.
after record highs this week. But as Kevin pointed out, the yen strengthening off the back of the news after what has been called the so-called Takaichi trade, which saw
NVTS.
Japanese currency actually
Supermicro needs a gap day like that.
soaring this week. All right, well, coming up, it is time for Inside Out, and we will take a closer look at Alphabet and bring you an example trade on that name when morning trade might
LTBR.
QNRX.
QNRX.
SLDPW.
You know the market moves. Schwab is here to help you move with it. So, whether you're buying, selling, holding, or planning,
Myrtle Beach.
whether you're ETFing or 401k,
NVTS.
saving,
COTI.
spending, or even retiring,
SES.
you can count on Schwab for market insights, live support, powerful
Um,
trading platforms,
just
100 branches. All at your
LTBR.
service,
a little northwest of that low.
your way. Sounds nice, right?
SLDPW.
And I'm Jenny Horn.
QNRX.
This is Next Gen Investing, where we track the trends shaping tomorrow's market.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear
NVTS.
analysis and providing market coverage every trading day.
SES.
This is a make or break level for this stock.
That could certainly be a short to near term catalyst. Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network.
Okay. Okay. For those of you still in QNRX, that's a nice one. That's just still going. It's halted right now again for what, a fourth time?
NVTS. SES. RR.
It's interactive learning at its finest. Tune in live or on demand.
SMR.
Head over to schwab.com/coaching.
Yep.
HOND.
Yeah, BBAI. I have January calls on that BBAI. Okay, sevens.
Real-time access, data-driven
NVTS.
analysis from U.S. equities to global macro
RR.
matters. Schwab Network.
RR.
Watch live.
SMU.
Subscribe free at schwabnetwork.com.
RGTX.
We're back on Morning Trade Live. Let's
Big Bear looking for a pop.
shares are up nearly 30% this year, and nearly half of that gain has come
HOND.
since September the 2nd. That's when a district court ruled that Google would
Oracle?
have to divest
One sec.
browser as part of an antitrust case.
NVTS.
Alphabet hit its all-time high on September the 19th, and shares are trading just 5% below that mark. Wedbush has a $245 price target on Alphabet, and joining us now is Scott Devitt, Managing Director of
QNRX may resume in less than a minute.
Wedbush Securities. Thank you so much for your time. So we're not far away from
WAI.
2.5 right now. It seems that very much the
HOND.
latest that we got out from the authorities seem to have lifted an overhang of the stock. Where do you see things moving from here?
Good morning, Sam.
RR.
The tightness with the target wouldn't overly focus on them. The stocks moved a ton since last earnings on that announcement, as you mentioned, and it's up about 35-40% since the summer. So, we'd like to see more results before making modifications to our model, but I think the backdrop has gotten significantly.
QNRX, that one's just crazy, crazy. BBAI, watch BBAI. BBAI. BBAI.
Okay, so you believe that there is a compelling case for multiple expansion. What else sort of offers a tailwind here?
CATX.
So, this company's original mission was to organize the world's information and make it universally accessible and useful. And so, I guess I would argue at points in
NVTX.
time when it lacked competition,
HOND.
maybe got caught up on being addicted to the drug of monetization. And so,
QNRX halted down.
of innovation actually has the potential to be a net positive for Google because it's forcing this giant to act in ways that it wouldn't naturally have done on its own, and it has all the assets to be able to be very competitive. And you're seeing that with the integration of AI Overview into the search results and really throughout the entire platform. Now that this innovation wave is underway, and so businesses multiples already expanded a little bit from
GRAF.
20s. It's more on the where
WS.
Meta trades now.
AREC.
But I think on an ongoing basis, this company has the ability to grow revenues low double digits with some operating margin expansion over time. And so you get like a 15% operating income growth rate and a stock that probably has a return that's similar to that over the next 3 to 5 years on an annualized basis.
Okay. Gap down there, and looks like we got the top in QNRX now. Top for now.
AREC. ONMD.
I don't think it should be overly.
Okay, let's look at BB. Oh, that is BBAI. Okay, BBAI, looking for a nice breakout and a follow through. BBAI.
ONMD.
large companies that have been successful continue to be successful in this battle against China. When you look at the EU, relative to the US, I think that there's just not enough that can be done there.
AREC.
That's problematic to really slow down the pace of the companies. Anytime there's an opportunity that presents itself around, government scrutiny, we're usually on the other side of that. You've seen the outcome of that in the determination in the US recently.
Okay, ONMD's on the move. ONMD. ONMD's on the move. Okay, taking off to the upside. ONMD.
SES.
Talk us through your sort of neutral to bullish approach. Good morning to you, Tom.
Morning, Sam. Yeah, the way that I looked at this, it's run up 28%. It's just about 5% below those all-time highs. If it starts to consolidate, I believe it's got price targets around 245. If you think it's going to continue,
Okay, S&P is still just chopping around.
which we've seen in the market this week, this strategy takes advantage of it. So I went out to the October 24th weekly options. You're going to avoid earnings, which are on the 29th. So you take advantage of maybe some upside exposure, but at the same time, you avoid that earnings event. We're going to sell the out of the money October 24th, 237.5 strike put. And then to make a risk defined, we're going to buy the 227.5 strike put to a short.
CRML, is that starting to pick up again? CRML. CRML bounce. CRML bounce. Sold.
Cushion to the downside of about 3% below the current share price above 242.
Okay, CRML. I'm holding on to calls. November 21 November. 1750s.
So that gives you better probabilities of success, and that's the trade-off why you have more risk.
SMU. QNRX may resign in less than a minute.
You do not want the stock to go below that break even, which is about 235.25.
Oracle looking pretty good for you guys and ladies that are in it. I know Frano's in it to win it. Okay, what's Bitcoin doing? Bitcoin, all right, just sitting there. Nvidia, Netflix, those are looking pretty awesome. Okay. CRML. I need that CRML. I need that maybe up to 2022 would be nice. CRML. CRML. Fridays, I take it a lot easier on a Friday. We've had a good week. We've had a good week. A good week. We just continue to grind. 10th week up. I can't believe it. I cannot believe it. It's just maybe we're gonna hit 6,800. Whatever. I don't know where we're gonna stop. Nobody knows. But since that big red candle 10 weeks ago, trying to guess which directions the market's gonna go is a fait accompli, right? Just got to go with the flow. Watch the money flow. I will say that there's been some shots across the bow, like junk bonds. Junk bonds are risk off.
SMU.
Or even $7. That's the whole concept of this neutral strategy that takes advantage of falling implied volatility and positive time decay.
Okay, a good look at Google Alphabet this morning. Thank you so much for that, Tom White. As always, happy Friday to you.
SHPH halted to the upside.
SHPH.
All right, SHPH, another gap up. SHPH. Okay, that looks like it might go. SHPH.
TURB. SMU.
offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge
All right, NVIDIA.
features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/.
ONMD is still trending. Okay, looks good.
Low tick alert minus 800.
Okay, low tick
Extreme
alert.
Low tick alert.
Low tick alert. Okay, we just dropped off here, S&P. Okay, S&P dropping off. Okay, S&P 500 dropping off. Big drop there, S&P. Okay, take some of these puts off. Let's see what we got here, S&P. S&P.
MSTZ.
Okay, sold some puts. Okay.
UBXY. SOXS. PLTZ.
All right, sold the put lottos.
CONI.
Okay, still have hedges.
SRTY. FAZ.
Put flies. SPX and SPY. Puts. 660, 650. Mentioned earlier in the week. Yeah, what was that, right? What was that? What was that? Okay. S&P still moving lower.
Low tick alert minus 800. Extreme low tick alert.
UBXY.
EXIU.
CONI. UBIX. SOXS. TSDD. TSLQ. TZA. MSTZ.
Good morning. We're 90 minutes
QBTZ.
into the final trade day of the week. Welcome to Trading 360. I'm Alex Coffey. Marley Cade has the day off. I'm coming to you live from our Chicago headquarters. We got a lot to get through coming up on today's show. Our 360 spotlight will be joined by the executive chairman and president of Energy to discuss the latest deal within the state of Illinois and more within the nuclear energy production space. Today's disruptor is Baidu. We'll be joined by George Hillis at the back half of the show to discuss why that's on the mind, particularly off the price target adjustments. And then for our 360 round, we'll set up next week's earnings. A lot to get through on today's show. And for those who are watching the screens,
SMCZ NRX halted down.
handful of minutes. As you now see,
Okay, we're still driving a bit lower.
I guess Q come over the market today as we're down about 0.5% across the board.
SHPH may rise in 10 seconds.
Here, looking at the S&P 500 in real time.
Put flies are working.
Points at 0.6%. The Nasdaq 100 down
UBIX.
200.
UBXY.
Point actually over 200 points here.
SHPH.
0.8%. From a market
SOXS.
breadth standpoint, you
TZA.
see the S&P 500 only showing about
SMCZ.
25% of its components
TSDD.
higher. The Nasdaq the same.
SRTY.
And the culprit, it appears, the U.S. President Donald Trump discussing both tariffs and facilities with China. A big red headline.
Extreme low tick alert minus 800.
Chinese goods, this hitting at the top of the hour, and it really did send the equity markets here on the final trading day of what had been a relatively strong week, one that saw several attempts to make new all-time highs, a few closing all-time highs suddenly turn red as we round that first 90 minutes of trading in today's session. When you look elsewhere, you see a pretty significant risk-off reaction, whether that's a treasury bid sending yields lower, whether that's a volatility index in the form of the VIX moving 6.5% higher on the session to 1738, whether it's crude oil moving substantially lower on the heels of what could be what is perceived as economically destructive in terms of growth, sub 60 in crude oil, 59.80. The gold market, which has been all the talk all week long, at least in the active December month futures, back over 4,000 a troy ounce, so 4,011. Very much a dynamic story. It looks like this is a post on social media as well.
Hey, bro. How you doing? What's up?
What happened to the S&P?
Just doing exactly what we thought it. See, with daily, we've been looking for this to happen for a while now.
SOUX.
One that sudden change, almost like an interception in a football game. Defense running on the field as equity bears take control. We're going to welcome in our first guest, though. That's Tim Davis, wealth manager at Davis Executive Wealth Management at Steward Partners. Tim, it's always a lot of fun when we're looking at the market and things change.
What's up?
Low tick alert minus 800.
SOXS.
We're looking at the bigger picture,
MP.
and we're still constructive on this market. This, as Tom Lee likes to say, this is the most hated rally, and the most hated rally continues.
Yeah, I want to get your thoughts and expand on that because I like that framing.
All right, S&P pulling back.
Adds credence to its sustainability. It's like if everyone's doubting it, one of my favorite market phrases is a hedged pot rarely boils. So if everyone's concerned and they're under, exposed to the market, or they have these hedges on, doesn't that make it more difficult for there to be some sort of a pullback, or is it more rhetoric than actuality when it comes to positioning?
I think you're dead on. History tells us that when there are, what's the latest number, $6 to $7 trillion in money market assets. The
AREC.
REIT index.
YANG. SBI halted down.
So it's actually more towards the fearful side of neutral than not.
QNRX may res in 10 seconds.
Intraday, it's fallen even more. You've got people that are just the
AREC.
AI bubble seems to be the talk of the town.
METC.
Obviously gold exceeding 4,000.
SMU. METC. CRML.
AREC.
Okay, everything pulled back.
There's a lot of things to be constructive about, but obviously we got seasonality challenges coming up here later on.
SPY.
LEU.
AREC.
SPY puts those. I look for a bounce here, I guess.
Constructively for the remainder of the year, I think we're in a pretty good spot.
All right, so let's talk about how we got here? You mentioned the AI stocks. Obviously, there's always discussion of the federal.
I'm going to sell half of those 660, 650s. SPY, going to sell half of these 660, 650s. Okay, looking for a bounce. S&P.
USARW.
UANY.
Yeah, I think that the thing we really have to pay attention to in Q4 and also going into
USARW.
2026 is the Fed
SHPH may resume in less than a minute.
Fed is clearly dovish. If anything, the shutdown is going to make the
AREC.
Fed more dovish.
MP.
With the government shutdown, that's probably
AREC.
lead to a spending slowdown at the very least. Yeah, I know that everybody talks about the fact that we've got a blackout here with data, which is obviously, a bit of a concern.
UANY.
But there are other
QNRX.
sources of data besides the federal government that the Fed can look to.
USARW.
Market provides.
UVIX.
And clearly, we've got two cuts. Seems like we've got two cuts of 25 basis.
USARW.
Priced in for the rest of the year.
USAR.
Another 1 to 2
MP.
next year.
Okay, Microsoft, Apple, everything taking a dive on that pullback, whatever is going on here.
SHPH may rise in 10 seconds.
Okay.
QNRX halted to the upside.
USAR.
More importantly, what's the outlook for 2026?
UVIX.
And I think
UVXY.
USAR.
NVIDIA.
USAR. MP.
Okay, all these taking a hit on that move in the markets. Bitcoin dropping off as well.
QNRX.
And in the second half of 2026, that's when the year-over-year comps will begin to roll off.
USAR.
Any inflationary effects that were caused by
UVIX.
tariffs, causing, don't forget, tariffs are taxes. So, that's going to be a one-time hit. And those one-time
Low tick alert minus 800.
hopefully in the second half of next year.
CRMLW. YANG. SOXS. UVXY.
QNRX.
But I think everybody knows the concerns. They just aren't as aware of what the positive things are and the positive parts of the outlook for our market.
Tim, I'm sure you have conversations with your clients around the concentrated nature of the market and how some of these
USAR is on the move. USAR.
CRMLW.
Okay, USAR is on the move.
USARW. USAR. CRML. MP.
QNRX.
Okay, USAR on the move. Maybe some options.
USARW.
Okay, I'll go for November, I guess.
NBX.
USAR on the move.
CRMLW.
3840.
MP.
Buy vertical. 4050.
CRML. XBIO may rise in 10 seconds. UANY.
Is when is this AI trade going to start?
SMU. CRML. NBX. TMCWW.
OKLL.
So,
TMC.
that's a big
CRMLW. OKLL.
SMU. CRMLW. NVX. USAR. MP.
USARW.
NB. LTBR. UANY.
No worries. Hey, final question before we let you go. Not
SMU.
sure how tactical, not sure how
NBX.
active you typically
CRML.
USAR just bought some 4045 call verticals.
NVX.
whether they last a week, an hour, a few minutes, is opportunity or concern?
We look at some
USAR.
opportunity in this market. The question is,
USAR on the move.
NB.
USARW.
TMC.
I would probably lean into that dip, all things being equal.
NBX.
Obviously, things can change,
TMQ.
but at the margin right now, we've
about a Fed that's lowering rates.
WWR.
AI spending that, we're getting
Meta.
further evidence that that is for real.
Okay, Meta dropping off there. USAR on the move. USAR.
CRML. MP. USARW. NB.
USARW. CRML.
All right, they got warrants on USAR too. USARW. USARW. Warrants. Okay. USAR.
CRMLW.
USAR ripping here.
CRML. MP. NB.
CRML.
CRMLW.
WWR.
USAR. I bought some shares there too.
SMU.
NBX.
SMUP.
CRMLW.
QNRX may res in 10 seconds. CRML. SHMH may res in 10 seconds.
CRML.
CRML. All right, CRML. CRML. CRML rocking.
WWR. QNRX.
CRMLW.
CRML going.
PTGX halted to the upside.
PTGX. CRML.
Okay, all the metals, all these rare earths.
SMUP. CRML. TMQ.
Wow.
UAMY. MP.
CRML.
NVX.
Okay, make sure you don't make any mistakes trying to jump into some of these positions.
CRMLW.
Okay, CRML, those 1750s are doing really well. All right, CRML. CRML. Okay, that's rocking there. CRML. 1750s are working. November 21st, 1750 calls are working really strong. Okay, S&P is starting to bounce.
CRMLW.
NBX. PTGX.
OKLL. SMU.
Opening bell live at the NYSE, right when it counts.
Believe me, when it comes to
AREC.
investing, you'll
XBIO may resume in less than a minute.
take a lecture, please. But there's
Okay, looking for a lot of these stocks that dropped, looking to buy dips, small, maybe options, a week or two out. Okay, let's see how far this goes. All right, we're already starting to move back up into the range. S&P reversing now. All right. So it took half of those spies off 660, 650s. That was for a nice profit. They're still looking good. I'll hold on to the rest here. I got 10 left. SPY, I have 660, 650 put, long put verticals. For this very reason, something like this, where we out of the blue, just bam, gets smacked across the face. Okay, Netflix. Netflix is hanging tough.
QNRX.
And Netflix holding up very well. Institutions are basically, meh, I don't care. We don't care. Let's just keep buying Netflix. Netflix for white soldiers.
SPHL. QNRX.
QNRX, yeah.
XBIO halted to the upside.
QNRX.
SOXS.
Very pro-tariff. Haven't changed my position going back to the election. I think it's good for the economy, good for the country. And look at these these situations as opportunities to buy stock.
XVIO.
Tim, speaking of opportunities, tell us about the first name that you're looking at, a name of TeraWulf, for those maybe unfamiliar.
Yeah, exactly, Cayman. Yeah, I would agree. 100%.
RX halted down.
Even with the tariff news, I mean, I think
AREC.
Yeah, QNRX on, when you get these gap ups, you got to be quick. All right, 1, 2, 3, 4 gap ups. All right, after the second gap up, you need to be thinking, okay, I'm not going to be greedy. I'm up from what, $12.14. This was trading pre-market around 12, 13. And once you get your first gap up, you got to start thinking, okay, I need to start scaling out of this. Use market orders because you have to be fast on these. Totally out of this now. Totally out, but still much better than where it was earlier. All right, that's done for today. Okay, a lot of these stocks like NVIDIA pulled back, looking to reload some calls on NVIDIA. I guess it's assumed that because China and the U.S. are having some issues, that this will pull back a little more. What's IONQ doing? I have a short on this one, IONQ. IONQ. Okay, I have IONZ, the short. Okay.
Low tick alert minus 800.
SMCZ. CONI.
Okay, looks like they're not done.
SOXS.
USARW.
Okay.
Extreme low tick
If
alert.
you've been taking any hedges, this was perfect. Okay, what's Oklo doing? Oklo's still going here, looking good. Oklo, contemplating taking a little bit off into strength. And then take the profits in these calls and buy some shares on the next dip. I'm at maximum profit anyway. Let me go ahead and take these off. All right, let me take these off. I'll look for another reentry on Oklo. I'm at max profit. 155 was max profit. The volatility, I captured some of that too. I had the 150, 155s. Okay, so my idea here is that I'll take the profits and I'll buy some shares on the next BC pivot. What's up, Paulo? All right, so give it a little bit more time. I wouldn't just buy immediately just because it dipped. Let's see if we get some buyers to step up. SPHL. All right, USAR pulling back a little bit.
UBXY. XBIO may resume YNG.
So this is, kind of interesting. This is another kind of name that I've been bullish for quite some time. I was actually on the at the New York Stock
MSTZ.
Low tick alert minus 800.
More low ticks.
In the summer, obviously AI was the biggest thing, and she kind of was like,
UBIX.
kind of an unheard idea. And I came to
SMCZ.
what I really like is the cooling aspects of things. So I actually started an internet company way back in the dial-up
QNRX
days,
may resume in
back
less
the
than a minute.
90s. That was my first career. And, we were growing huge. The 90s, internet, all of that. One of the biggest, roadblocks we constantly ran into was cooling.
XBIO may rise in 10 seconds.
Because we were growing so fast. APLD really
RGTZ.
data center, but they really
UBIX.
focus in that
IONC.
cooling aspects of things.
SOXS.
And another stock been on a
SMCZ.
heck of a tear since the summer.
MSTZ.
Great earnings.
PLTZ.
I think it was either yesterday or last
UBXY.
night. So,
VXX.
just another
RGTZ.
similar to Wolf, but just love that cooling aspect because that's going to be not only is it energy, they got to get enough energy, but keeping that stuff cool
YANG.
in order to be able to add more
TSLQ.
capacity
VIXY.
as they grow.
QNSD may res in 10
It's making
seconds.
a monstrous move here today. I mean, it's
RGTZ.
up almost 20%.
UBIX.
So certainly one that I can
IONZ.
see why not only is on your radar
SOXS.
today, but maybe has been as this has been bubbling under the surface
SMCZ.
clearly. But hang on, we know we got one more. I want to bring Rick back in. Walk us through sort of the short-term look once again, then we'll get a big picture assessment. APLD.
RGTZ. That's Rigetti 2 times.
So it's an interesting thought here that maybe kind of more of a picks and shovels type play in this case. But what we can see now, a very similar short-term chart, a 20-day, 1-hour chart. Maybe the price movement doesn't look
PTGX may resume in less than a
but
minute.
it's the same type of gap up activity and then followed by a brief pullback here. In this case, we are taking out our previous lows that we established here, but that's not
BIOX.
really, necessarily cause for alarm here. That would be, part of this phase of the behavior. What you would hope bullish is that then pullback after the profit.
RGTZ.
Past those initial highs here,
SOXS.
39.07.
RGTZ.
So we could see maybe
CONI.
perhaps a pullback to this
SMCZ.
channel level here that comes in right
SPHL.
around 33, or maybe even the gap that gets
MSTZ.
built near 30.2998 or so specifically. Those would be some possible levels to consider for this one here. But when we look at our longer term chart, in this case, we are at 1, 2, 3
PTGX may res in 10
standard
seconds.
deviations to the upside here. So we topped out, or not topped out, we
UBIX.
opened right around that
UBXY.
level. 36.92 is where that one came in here. So that would be an upside level to keep an eye on here on the way back to that 39.
Low tick alert minus 800.
Have something in common, I'm noticing.
Extreme low tick alert.
Not only are they maybe accelerating in terms of the movement today,
RGTZ. IONZ.
Okay, we'll continue to drift lower. S&P. Keep your hedges.
CONI. TSLQ.
QNRX.
SPY. That's looking good.
This stock always cracks me up because we talk
NBX.
about it a lot, in the community that I run, and every time I say it, I always end up. I think I say
Close.
6 U's because it's like you. I never know when to stop. But anyway, when it comes to the trade thesis,
Netflix.
name that I've loved for a while, but going back to AI data
IONZ.
center.
Okay, all the New York FANGs have headed lower.
SMCZ. UBXY. RGTZ.
So
NBX.
as another data center play, I think.
All right, CRML. RGTZ, that's Rigetti 2 times.
UBIX. SOXS. IONZ.
Okay, RGTI.
RGTZ. UBXY.
NBX.
Okay, RGTZ, that's 2 times, I guess, short. RGTZ, 2 times short.
IONZ. SMCZ.
Low tick alert minus 800.
RGTZ. UBIX. QBTZ. UBXY.
So whether it was investment in uranium-based things, whether it was these nuclear, utility companies or others in general, what do you personally look for?
Extreme low tick alert.
Trying to get in there earlier, do you need something on a technical front or a chart to say, hey, we've arrived? Well, that's what Rick does is, I've been on with Rick, I think 5 or 6 times. I don't know if I've ever disagreed with him. What we do, what I do, what I trade, what I work with people in stocks to trade, is we always like to have that story attached with the chart. So it's like
CRMLW.
we're looking for the type of chart
QNRX.
that screen is red, Rick.
CCCXW.
Yes, and it's looking like the more defensive
SPHL.
safe havens today, consumer staples and healthcare. Those are the areas that are seeing some modest gains. Financials a little bit too here, but a bit of a turnaround.
YANG.
No doubt about it. We'll obviously continue to monitor as this
UVXY.
red becomes more
NBX.
red, but
PTGX.
UVIX. SOXS. CONI.
President of NATO Nuclear Energy after it was announced a deal with the state of Illinois is the
All right.
BGMSP may res in 10 seconds. IONC.
Okay, we continue to drift lower. S&P 500. Oops.
UVXY.
S&P 500
Tickler minus 800.
still pushing lower here.
Extreme low tickler.
VIXY. IONC.
Every trading day at 8 a.m. Eastern, only on Schwab Network.
YANG.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you.
CONI.
Platforms and Tools webcasts are designed to help you broaden your
RGTZ.
knowledge of platform
UVIX.
features and resources
UVXY.
available from Schwab.
ETHD.
You'll learn tips and tricks to help navigate
S&P, big move there.
SMCZ. MSTZ.
Best
IONC.
of all, you can ask
NCW.
questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Kick off the morning with the data and the decisions moving markets. Morning Trade Live breaks down the macro moves driving.
Okay, so if you're, this is why we want to take hedges before VIX spikes. Okay. So you want to take puts when you can, not when you have to. So next time we tell you that it's a good time to take some hedges, this is the reason why. Okay. Because now if you're going to chase puts now, you're going to be paying up for them. Okay. There's always a reason why we tell you time to look for some protection. Okay. Most of my positions are longs. So I just want to see some protection and take some hedges. And we were doing that earlier in the week. Took SPY 660, 650. Let's see what those look like.
Low
SPY,
tickler minus 800.
SPY, 660s.
Extreme low tickler.
UVIX. UVXY. SMCZ.
last year plus for you and your company. But for those who
GDIC may res in 10
super
seconds.
familiar, I know the name does a lot to get us to what you guys do, but maybe the elevator pitch of what NATO is all about.
Yeah, thanks for having me. Nanonuclear is a vertically integrated microreactor company, and what that means is 20 megawatts or less. So we're able to mass produce our reactors in a factory setting, transported by traditional road, ship, and train, and assemble this at site.
UVIX.
There's a huge bump recently in the AI.
UVIX is getting a bid. UVIX. Okay, that's headed higher. UVIX.
SMCZ.
UVI.
RGTZ. CONI.
I can see why.
SOXS.
One,
MSTZ.
just to be fair about it, there's been a stigma that's kind of plagued this industry, but it seems like we've certainly worked our way at least
SOAR.
partially past that in the last few years.
IONC.
From a political
QBTZ.
standpoint, from a
VXX.
maybe public interest standpoint, but then you mentioned it, this AI build out and the pace
UVXY.
at which it's happening
SMCZ.
has created a tremendous need for power. Talk to us about your general energy
RGTZ.
demand outlook in this
SOXS.
ever-changing environment.
VIXY.
Yeah, the U.S. wants to quadruple
CRCD.
nuclear energy by 2050. So with that thesis, how are you going to get there?
PTGX.
You're going to need nuclear and a lot of nuclear too.
I think one of the areas that especially the current administration and the Department of Energy is focused is they continue to state that under this administration there will be a nuclear renaissance, and I think the new reactor technologies like what Nano Nuclear is building with our high technology readiness level Kronos modular microreactor.
Okay, so for most we want to stay put, basically sit on your hands. If you didn't buy puts, if you didn't buy any hedging in the last week or so, as we eased up into 8 weeks higher without a pause, 9 weeks higher without a pause, starting this week, 10 weeks without a pause. Okay, we told you that junk bonds were giving us a warning signal. Okay, so this was a pretty good warning signal that we got earlier in the week. So junk. Gave you a warning signal on Tuesday. HYG2. And Bitcoin. Okay.
OKLL.
It looks like we might have lost Jay's audio, so we'll work on getting that back. We want to hear
All right. Rigetti, RGTI, Rigetti. Still moving lower, Rigetti. Looks like that could pull back a little bit. Set up the next leg higher, like it did right here. Back on the 22nd. Okay. 22nd of September, this started to fade. That's all I'm looking for in Rigetti. Maybe a little bit more. You can play this short for now, Rigetti, with RGTZ. That's a short. It's a new looks like a new ETF. New ETF for Rigetti. SPY still pushing lower.
We understand DC, we understand what the needs of the American public are, but yeah, nuclear is one of the few areas that there's national bipartisan support. So, you know, this is a rare case in DC, obviously, because there's been always a tug and pull there, but with nuclear, everyone's supporting. Even the previous administration, the Biden administration, supported it. So it's just a carry on. I think under the Trump administration, we're really breaking out here because they're really bullish about nuclear, especially the new nuclear technologies where Nano is developing for the next generation.
Talk to us about that next generation and where things are going. You've got a front row seat to this space at the moment. It's ever changing. Demand is off the charts. What's something you're excited about? You know,
all right, looking for a little bounce here. Okay, hedging flow is still dropping off. Below 6,700, remember?
Low, tick alert minus 800. Extreme low, tick alert.
Okay, below 6,700, we're risk off. Can we get a race back up to the highs? Can we, yeah. Pretty decent sell-off today.
At the University of Illinois on the campus, and you know, being supported by the state, federal, and the university, which is a leading institution in nuclear engineering. I mean, this is an incredible time for us.
It really does feel like a tipping point. I know I'm not alone when I say I'm super excited to see where Nano and the rest.
Okay, so SPY We have 660, 650. Put verticals, 660, 650. We're into the 660. We're tapping that level right now, 660. 660, 650, SPY. Okay, if you took those puts,
Triple digits in the S&P 500, 1.5%. So, hey, look, 100 points isn't what it used to be when you're talking about an index that trades, well into the 6,000s, but it's still eye-popping, well over 1%. The Nasdaq is pacing the losses. It's down 2.2%. We'll continue to monitor that as it continues to develop. This, of course, after President Trump threatening massive tariff adjustments on Chinese goods in the form of
Low ticker alert minus 800. Extreme low ticker alert.
impact today on this Friday. Coming up, the disruptors will be joined by George Tillis, and we're going to actually be looking at a name from China. We'll be discussing Baidu on the heels of an upgrade. We'll be right back.
yeah, it looks straight down. I agree with you. Yeah.
IMTG may resume in less than a minute.
SOAR.
SOAR.
Okay, CRML. Let's take a look at that. CRML. Critical metals, CRML. $17.50.
SOAR. INTG may res in 10 seconds.
SPHL.
Holiday season in 2026. And then, that's confidence.
Okay, CRML.
SOAR.
Indicating expectations
SOAR.
to increase spending compared to the prior year. Explain that for us, Brad. What explains that trend? And I'm also curious, what are they intending to spend on? Is it
We're starting to see some stocks catching a bid a little bit.
That's right.
Okay, Oracle pulling back on that. Oracle.
7% of our respondents in this quarterly survey that we've been doing going back to 2017 saying they expect.
Okay, the initial move lower probably scared a lot of people. Looking for a bounce at some point right now. I agree with you guys. Down is the direction. A lot of people got way over their skis buying shares into a 10th week higher. We've been saying hedge and reduce your risk as we continue to cruise higher. CRML looking for another pop. I got 1750, 2250 call verticals, so my max profit will be at 2250. That's a little bit higher, probably. We'll see that next week sometime, maybe. Unless we get more of this concerning trade. Let's see, what's Oklo doing? I sold some Oklo into strength. Okay, Oklo pulled back a little bit, but it's holding up very well. What's QNRX doing? QNRX. Okay, that one's just sitting here. It started off the day near 10, so QNRX, that was a big move. Completely out of that one. Okay, PTGX. PTGX. Protagonist Therapeutics. This one's gapping up. PGTX. What's the news here? PGTX. J&J talks to buy.
CCCXW.
When you cut the data, it's interesting. It was the age demographic of 30 to 44 that seem to have
PSMA resin 10 seconds. UAMY.
seem to have the greatest improvement in confidence over the last couple of quarters, and it shouldn't come as a surprise to us that those are folks that probably have more exposure to the stock market and some of the benefits of the one big beautiful bill from a personal finance standpoint. As we move forward here, in terms of demographics, there's also some challenges of the market. No question, inflation will nip away a little bit more of their spending power.
TTIC.
Probably under a little bit more pressure from some of the softer labor trends that we've seen of late. And where we're seeing that show up in our consumer survey is an increased likelihood to shop at the dollar stores.
And UAR.
When we ask the question, which dollar stores have you shopped at?
SOAR.
The likelihood to check those boxes has been going up for a couple of quarters now. And we think that bodes well for some.
All right, Protagonist, PGTX in talks. Looks like the J&J in talks to buy the company.
It looks like you prefer. I see Walmart, I see Ollie's, I see Lowe's. Are there common themes and trends among those picks, Brad? There are, and thank you for asking. There's two sort of buckets.
PTGX.
About our top ideas has fallen in. The first is sort of the all-weather bucket that are names that we think have company-specific tailwinds that are going to drive market share gains and an ability to perform in good consumer times and challenging consumer
All right, PTGX. Cruising higher. S&P with a bounce. S&P bounce. Look for rejection to start or add hedges. Don't think this is done. All right, we got a nice little bounce so far. S&P is starting to cruise back up. Okay, let's take a look at the hedge flows. Wouldn't that be a hoot if this thing runs right back up? I don't see it happening, but just saying, it'd be a hoot if we see these 0 days go crazy here.
SHPH may resume in less than a minute.
Exposure on the discretionary side of things, more so as we look at 2026. Brad, appreciate your time and those picks. Thank you.
S&P 500. More than likely, we're going to see more bear flags. Okay, this is a snap of support. We took out the range that we've been in. Plus, we've been up for 10 weeks straight. We've been looking for this. We've been looking for this move. Okay, we came right down to the previous area of a bounce. This could be a head and shoulders top. We could bounce over the next few days and roll over again. Okay, potential head and shoulders top.
SHPH may rise in 10 seconds.
Left shoulder was 21 September.
2 years longer than the current one. So at least according to history, this is not an old market just yet, old bull market just yet, and there's more theoretical room to run. Now let's see who did the heavy lifting.
EPSM may resume in less than a minute.
Turn to the S&P 500 sectors.
PTGX flagging a little bit right now. PTGX. In talks to get bought out by J&J.
Number two, that's communication services. That has Alphabet and it
CATX.
Then we have industrials, financials, each up more than 70. And then XOY is consumer discretionary, bunch of real retail names with Amazon.
S&P. S&P hedging flows starting to turn up a little bit. Let's see what we got here. We took out these levels. Down below is 65.75. Remember, 6,700, below 6,700, we're risk off. Just keep that in mind if you're doing anything on the long side. One day does not make a trend. However, junk bonds gave us a warning signal on Tuesday, drop below the 50-day. Junk bonds, clear bearish signal. Tuesday, Wednesday, we dropped below the 50-day, and then we followed through. The volume picked up. That told you that these traders who are risk averse, they were getting out of the way over the last couple of weeks. 50-day was the line in the sand. We mentioned that in the weekend video. Okay.
QNRX may resume in less than a minute.
We got a lot of green on this chart and not a lot of red.
NB.
Skip over to some of our leaders. Where in the upper left,
DGXX.
ETFs, GBTC, that's my Bitcoin proxy, up over 800% over these last 3 years. In second place, we got the chip stocks at 166%. Then Meg 7,
SOAR.
then ARK Innovation Fund, and we got software,
MLTX.
basically the NASDAQ 100, an internet ETF, and ITA. ITA is interesting.
NVIDIA 60-minute looking good. Dollar posting a good chart there to pay attention to. We might get a little reversal here. Netflix bouncing. Okay, S&P is grinding higher. S&P. Junk bonds. Junk bonds gave you a warning signal. Did you heed it? Did you take hedges? You always want to take hedges before VIX spikes. That way you're not paying up. Okay, let's go take a look at S&P. Okay, where are we right now? Currently, we're at 66.50. Okay, we're starting. You see this downward sloping? See the downward slope there? 65.95, 65.80. Drop below that. We've got the dealers will start selling futures. Okay, you don't see what I'm talking about. At this downward slope here to the left. Okay, as we're starting to move lower. Okay, this downward slope. Dealers start selling futures. Okay, that exacerbates any move downward. So we need to get back above that 6,700 point. You see that? The purple vertical there, noted as a low volatility point, 6,700. We want to stay above that. Okay. It's possible. Look, let's say we bounce. Okay. And you do a great trade and you make a move. You buy down here calls. Let's say you win. Okay. You get a winner. What I would be doing, aside from taking that trade, is to reduce my exposure because we got a warning signal this week with junk bonds. I'm telling you, it's very significant to pay attention to junk bonds. We also had the 1 month core 1M. Core 1M. Okay, so this has jumped back up now. Okay, so this was below 8. Now it's back. Okay, this is pretty interesting. That was pretty interesting. So the correlations were very similar to February of 2025 when the markets took a dive. We knew that the last couple of days. So you should have been ahead of this with hedges. Let's say you missed the whole thing. Let's say you're a new member. Don't fret. These conditions happen often. You know, after a 10-week rally, what would you expect, right? I don't want to sound like I knew it was going to happen because I didn't know what was going to happen. I suspected that we were getting more and more risky
Low ticker alert
with the number of weeks we pushed higher, right? All right, so we're starting to show a bear flag here. The number of weeks we were pushing higher, we're getting more and more risky. So we're looking for bear flags now. If these bear flags start to fail, it's an opportunity to take some hedging, some shorts. I'm going to keep the 660, 650 put verticals I have on SPY for now. Also have a put fly. SPX put fly, which, let's see what that's doing right now. I'm trying to get out for $3. I bought for $75 per contract. I'm trying to get out for $3 per contract. All right, so I got 5 of those. If we manage to bounce a bit more. All right, so S&P 500, SPX. We need to get back to where we once belong. All right, 66.50. Calls got toasted, man. Calls were toasted. All right, CRML. What's that doing?
Extreme low, ticker
CRML. Okay, we got another wave of selling. All right, they let this bounce and they're starting another wave of selling here.
QNRX may resume in less than a minute.
Okay, it may pay to, on these bounces, to take some more puts.
TDIC may resume in less than a minute.
Okay, maybe next week's put vertical. Puts. Okay, what do we say here? We said that, all right, below this level here, 60, 65, 75. All right, what about 6,600? Buy a vertical. Let me see what those go for. Vertical. 66. Okay, that's not much. It's not much. Okay, buy some. What do we got here? 60, 65, 75. 65, 75. And 60, 75, 65, 55.
One thing to keep in mind, a change of exchange won't really affect investors who own the stock. Shareholders could see changes in trading volume, but the actual ownership and number of shares held by existing shareholders will not change. One quick precision, I believe the 15.5. That's something to keep in mind. And that does it for our Market Catalyst. I'm Julie Hyman. Thanks for watching. More Yahoo Finance coming up.
Extreme low, ticker
Okay, so trying to buy some put verticals, S&P 500. Put verticals. Let me go to working orders here. Should get filled here, I would imagine.
QNRX halted down.
These are very jumpy. Puts are very jumpy. They're jumping like $1, $2 in either direction. Okay. So we want to stay above. We want to stay above this 6,700 level. Okay. Obviously, we're below it right now. So most stocks, if you're trying to buy something right now on the long side, good luck. A lot of these stocks will show a lack of interest in buying. All right. So CRML is at the highest. Maybe I bet take some of these off. CRML have some calls. It would just liquidate some positions. Okay, CRML, that's a nice gain. Okay, I just bought some 65 puts. Let me just post this real quick. Filled. I bought the 65.75 put, 65.65 for $2.30, 17 October. Okay. For $2.30 debit. Okay, so this is more insurance.
Low tick alert minus 800.
All right, I bought some more put insurance just in case we do drop off. I would like nothing more than these puts to evaporate and the markets bounce and go crazy to the upside, but I know better. I'm just hedging right now. You don't have to do anything either. If you've been reducing your exposure and you're down to 2 or 3 positions, just sit tight. Sit tight. Oh boy.
ASPI.
CEPT.
CEPT.
All right, CRML. Okay, let's see if we get another pop. USAR. These metals, rare earths, doing well.
In less than a minute. AREC.
CEPT.
USAR.
SOAR.
At the high of the day, USAR. USAR, and we've got CRML. CRML. CRML, we've been watching that one for the last couple of days and trading it.
Low tick alert minus 800.
I have 1750, 2250s.
AREC. QNRX may resume in less than a minute.
SOAR.
Okay, so USAR, USAR. All right, pushing the highs, USAR. Do. We had a good day going. We had a good day going until that news hit the wire.
CATX.
Okay. USAR, watching that.
QNRX may rise in 10 seconds.
Extreme low tick alert.
CEPT. CATX.
First up, let's take a look at what's going on in stocks here today. Right now, we've got the Dow trading higher by about 157 points, about a third, 1%. The S&P 500 up about a quarter of 1%, and the Nasdaq up about a third, 1%.
Okay, so let's look at some other things like UNH. What did that do? UNH pull back a little bit. Okay, UNH.
CEPT.
As we go throughout the session, and it has been an up week, but an up week with a lot of ups and downs in a relatively tight range. So that's something we'll continue to watch. We'll also continue to watch what economic data we're getting. And speaking of which, we just got.
Oh boy, hope everyone's having a good day. I know it's a little alarming when you get these surprise moves lower. We've been trying to convey the fact that after 10 weeks up that we were due for a pullback. We've been trying to convey that, I think, effectively for the last few weeks. Okay, so what I'm assuming is that we're going to get another red day like the one we had here 10 weeks ago.
Minus 800.
11 weeks ago, we had this big red candle. We held the 10 EMA on the weekly. I'm assuming that that's what we're going to be facing. Probably 65.50, something like that. We're probably going to bounce in this area. This will most likely be short-lived over the next 2 or 3 days, probably. Trading days, we'll probably see something similar to what we had over here. Okay, and that pullback to 62.12. That was a 200-point move. Okay, we're below the 20-day. So my guess is we're going to test the 50-day. 50-day, we usually anticipate test of the 50-day once a year. 4 to 5% pullbacks 2 or 3 times a year. That's normal in a bullish trend. We're still in a bullish trend. The 50-day is up and to the right, so is the 200-day. We're just a little bit over our skis. So that's the reasoning behind taking some hedges. Yeah, I know, Vinny. I didn't listen. I didn't take the hedges. What do I do now? Well, I would sit tight. If you didn't take hedges, maybe we get a nice little bounce. I just bought some more puts there. They're still a little bit more expensive just for insurance purposes. I have a put fly on right now that expires out first week of November, I believe.
TDIC may resume in less than a minute.
We put plans together to get the company to the financial results that we want to get to. I participated in those plans very closely. So my priority is to continue executing on those plans. We've seen the last few quarters how Black has been seeing those results. We have improved our gross margins. We have
USARW.
We have plans to get to gross margin neutral by the end of this year, and if that's positive in 2026, and that's going to be 100% my priority.
Okay. Okay. Palantir pulled back decent, but we got buyers. We still got buyers there. Keep showing up in this area. So that's got to be institutions. Palantir, we still got buyers coming in. Look for these signs in whatever you're trading. Okay, Palantir is above the 50-day. Okay, we had this big move lower on Friday last week over an issue with security of the software that Adderall and Palantir provide to the Army, whatever services they're selling to them. Okay, so there was probably a software patch. The only issue I had was that it was out there in social media. So anybody that wants to try to hack into a system would be alerted if they didn't know so already. If they were trying to get into, Defense Department software that Palantir provides and Anduril, then they were alerted to it. Now, Anduril is being cited as a potential next Palantir, the next big thing. Now, what I'm noticing is we had that big down day. Okay, erase that red candle, the middle one, and look to the left. Okay, look at all the buying along this area around 175. The significant fact is that above 170, 175, we've had buyers for the last 3-4 weeks. So if we lose this level, that would be a clear signal to get out of Palantir. But if not, and we get buyers to show up at the low of the day like we're seeing right now, that's telling you there's still somebody sitting here accumulating positions at the highs. It's a cup and handle. This handle's getting a little long. But if you erase that big red candle that we had last Friday and just look at everything else, you can see very clearly, at least I do, and I wear glasses to look at my computer screens, everything above this level is being bought. Okay, look at all the wicks at the low of the day. Look at the volume. Okay, well, it's not like this over here. We're still seeing some positive accumulation. And we're staying above the 50-day. We're back above the 21-day and about to get back above the 90 EMA. So Palantir has been showing signs of buying. Been telling you that over the last few weeks. Every time it dips, it's an opportunity. Okay. So we want to see RSI stay above 50 for sure. Palantir looks good. S&P trying to hold this level, suck in some more put buyers like me. I bought some puts for insurance. Okay, I have the 65.75 and 65.65 put vertical. I bought it for $2 and change. Okay, that's just cheap insurance. Those expired next Friday. Okay, so if this meltdown does, if we do close at the low of the day today and we continue to show signs of weakness, I'll hold on to those.
So hydrogen is something that
DHOE halted.
already for many industrial processes.
Oh, you mean the put fly?
Refineries use hydrogen. So hydrogen has always been
TDIC may resume in less than a minute.
Matter. We have gotten different administrations over the past years support from both sides of the aisle, right? So we see that still, and we hope that even and actually with the
Yeah, Sean, that's something that we look to close when price is at that target.
we see the opportunities there. Regarding the DOE loan, we keep on talking to the DOE department. Not at this moment because there was a shutdown, but after the shutdown, we're trying to work through the process, and we hope that things will move on.
And Jose, finally, I wanted to ask you, some have considered Plug Power a bit of a meme stock in the sense that
CATIC may res in 10 seconds.
UNRX.
we've seen that big move in the shares, which can sometimes characterize that sort of meaningless or retail interest. And I'm just curious, as you step into the CEO role, do you have any plans to sort of engage more directly with the retail investor community as you make that transition?
Plans to engage with all investors, and the retail investors have always been very important for Plug. So yes, we
CATX.
value the
UNRX.
trust of the company. So all investors are
Oracle just sitting here just off the low of the day. Oracle.
And so we are.
All right, will cooler heads prevail? I mean, what's changed aside from the news? Nothing's changed. Earnings are the same. Nothing's changed. Earnings are the same.
UNRX.
MP. MLTX.
Yeah, Captain, I'll show you what I have here. This is pretty good. It's not expensive. What are we doing here? All right, USAR fading a bit more. USAR. All right, so we took that off, right? USAR. Yeah, that got a limit fill at the high. USAR. I still have calls. Okay, I have calls in case this spikes again. USAR. Took the shares off at the high, had a limit order to sell. USAR 40.45 call verticals, 40.45 for November. Okay, who is this? PHOE. 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 Okay, that one gapped up. PHOE. Phoenix Asia Holdings, whatever that is.
TDIC halted down.
What's going on there? All right, PHOE.
PHOE may res in 10 seconds.
PHOE. Oh, that's a very, very thinly traded. Yeah, I'll pass on that. Pass. Okay, let's look at Trace. Okay, we're starting to bottom here. Trace is showing a bottom. Yeah, I would say so. Joel, I would agree with you 100%. Exactly my thoughts. Nothing's changed. We still have good earning.
SOAR.
Better than expected earnings.
FRMI.
Cooler heads will prevail.
Welcome back to Yahoo Finance. I'm Brooke Palmer. We're live at the NASDAQ here in Times Square. Let's turn now to some of today's top analyst calls on Wall Street. First up, we have Baidu. That stock was raised to outperform this morning, up from neutral over on Macquarie.
Cooler heads will prevail. You know, things are said. The markets, algos, news algos love this stuff. Yeah, we can get oversold. There's no doubt about it. I've said that many times myself. Oversold can get oversold. I'm just looking at what the dealers are doing. Dealers will tell. Dealers, you can see hedging flows are turning. Okay, USAR continue to drift lower here. CRML. Okay, let's keep an eye on these metals companies. CRML. CRML. Okay. So this is hanging in here at the highs. Okay, so basically right now we're just sitting here in a range. Okay, we're in a range. Assume that's going to stay like that for now. Okay, we'll turn off extended hours. Don't need that right now. Okay, so that's what we'll look like right now on CRML. Continue to move higher. Volume, you see the volume coming in, starting to pick up the last couple of trading days. Today, yesterday, we had above average volume on Monday. Many of you got into CRML. I'm still in calls. I have the 1757, 2250 call vertical. Those are up quite a bit right now. USAR still drifting there. All right, CRML. All right, drifting lower too. USAR is doing the same thing. Okay, let's go see what's actually holding up. Okay, let's see what's holding up here. Okay, so PepsiCo still up 3%. Philip Morris, Erie, I believe it's energy, right? Orly Automotive, AutoZone, Verisk Pharmaceuticals, Campbell's Soup. That's a good one. Campbell's Soup, double bottom on Campbell's Soup. Consumer staples, if things start to, unwind a little bit up here at the highs, all I'm expecting is a little 2 to 3 to 4, maybe 5% pullback in the S&P. If we start to see that, defensive stocks will be bid. You'll see consumer staples turning up. You should see consumer discretionary turning down. It is. Okay, so right now you can see they're coming out of consumer discretionary stocks like Tesla. Tesla and Amazon make up almost 50% of the weight of the XLY. XRT retail, we're going into the holidays, so this pullback is going to be a good opportunity. Costco, I guess Costco more viewed as a consumer staple because you get value for your money. We get a lot of things at Costco. Walmart, same thing. Do you know in the 2007, 2008 bear market, the market's dropped over 60%? Walmart gained something like 50-something percent. I saved the chart. I refer to it on occasion. Let's see. It's in the retail group, I guess. Retail, Walmart. Okay, there you go. All right. So in 2007, 2000, and I'm not looking for a bear market, by the way. I just want to make a comment that when people get nervous, they buy consumer staples and companies like Walmart. Back in 2007, when the markets peaked, Walmart initially dipped, but then it went on to make 52%, 53% for shareholders. Okay, so one of the first things I think about when the markets start to come unraveled, I immediately go to Walmart. It's just something that you get used to over the years, right? Let's see what the group looks like. Let's see what retail looks like right now. All right, the strongest of the group, Elf Beauty. Elf Beauty, that's consolidating. All right, so a lot of these stocks, when they pull back, are going to give you an opportunity for the Christmas holidays, fourth quarter. Fourth quarter generally is a pretty decent time. Okay, so those last 3 lines on the graphic that's posted on the live stream. Okay, so these last three lines, fourth quarter, what we're looking forward to. We're in October. October tends to be a period where if we didn't have September pullback, August 16th through September 30th, if we didn't have that pullback, if you've been paying attention to Gamma, if you've been paying attention to the weekly videos, we talk about October becomes more risky then. You know, we've had some pullbacks in October. I'm not looking for October 1987 style pullback. I'm just looking for 4 or 5%. And then, more importantly, what happens in October through December, right? That's what I'm focused on. Okay. So let's go take a look at the S&P. All right, S&P. S&P up here. Got a lot of charts here. Got to wean these out. Okay, here's the S&P. All right, so we've already marked the chart up. So I've been anticipating that we'd get this pullback. Okay, you can see that I've marked this chart. Let me go to, you know what? Let me save this. Save as 7, 4 month. Okay, let me save that. Save. Okay, and I want to go to 4 months. Reason being is I want to zoom into this a little bit. Okay, so here we are. Here we are. S&P. Okay, so the markets total have made quite a gain. 10 weeks higher. We've been anticipating that we might see something like this. 50 days right there. It's about a 3.5% pullback. That's all I'm looking for. If it turns out to be more than this, we'll be sure to update you. 9 EMAs right there. Okay, RSI. Okay, so we looked at that RSI divergence. Joel and I were talking about this. Spent cattle. Joel from Michigan. You'll be familiar with this, right? So we have that divergence. We're making higher highs. S&P 500 made higher highs. RSI is making lower lows. Plus, we had junk bonds, if you recall. Vinny, I get tired of you talking about junk bonds. Don't get tired of me talking about junk bonds, because that is probably one of the things that short-term swing traders should pay attention to the most. Junk bonds, high-yield corporate debt. What is Bitcoin doing? What's IWM, biotech's doing? These are all risky assets. So if you're paying attention, you'll have a better feel for the market money flow. Where's the money going? It's coming out of the S&P right now. You may be hoping for a bounce. I would like to see a bounce. I'd like to see us get back above the 20-day. That'll give us an opportunity to take a few more things off, but I'm under no illusion that we'll probably follow through down on Monday, unless there's something that's said over the weekend. China and the U.S. can come to some agreement. Like 2 bulls in a China shop at one time. It's bad enough you got 1 bull in a China shop. You get 2 of them. No pun intended with China. But you got the heads of state for China and the U.S. at loggerheads. So this is what you would anticipate. Again, a reason for taking some hedges on a 10th week higher, right? 10 weeks up. You'd have to go all the way back to 2023 to see this kind of move. 1, 2, 3, 1, 2, 3, 1, 2, 3. 9 weeks up, 10th week down. Into 2024, towards the end of the year. 5 weeks up, sideways. Another 5, 6, 7, 8 weeks up. Right? 13 weeks up, and then we have a pullback. You have to go all the way back to 23 and 24. And on top of that, we're up quite a bit. 30, let's go to the other one. We're up, what, 40% from the April 7th low? I mean, if you can't live with a 40%, a little 2 to 3% pullback after a 40% gain, if If you can't deal with that, I don't know what to tell you. Let's see. Let me just annotate this one. Where's my
may resume in less than a minute.
annotate? All right. I realize I'm being very talkative right now. Okay. Geez, where did it go? There it is. Okay, we're up 40%.
SGPX. QNRX.
%40 up. You get a little discount. And we'll look for a 3 to 5% pullback. So let's say you're a swing trader. You have hedges on. What am I waiting for next? Okay, so I'm waiting for the pullback. Remember, I'm 80% long in my 401k. I got 20% cash. So I've been looking for this for weeks now. Been looking for a 2 to 3% pullback so I can put some of that cash to work. No big deal. No big deal. 9 EMA, 21 day. 21 day. 9 EMA. 50 day. 200 day. Okay, and it looks like we're going to push lower. Now, they could trick the bulls or trick the bears and bounce this. I'm anticipating we're going to see a bounce. Now, let's say we bounce back above the 21 day. What would I suggest you do? I would suggest taking some hedges. If 95% of your portfolio was long, and maybe short-term portfolio, trading account. If you like 95%, 90% long, take a little bit, take 2 or 3% and buy some hedges. Just in case we pull back. If we don't, hey, no love lost, right? But you hedged and you can sleep at night. Market's not going to go up every single day. Today is our first day after a shot across the bow with junk bonds on Wednesday, dropping below 50 day. A DP? I've had two this week. Actually, this would be the second. All right. I'll do that. Maybe, what time is it? Oh, it's lunchtime. Okay. Maybe soon.
GWH.
Can't believe my Yankees are out of it. Looks like the Dodgers will be going back. They have the best lineup for sure. So Corey's probably happy. I saw him mention the Dodgers earlier. LA. Used to be Brooklyn. Brooklyn. What am I trying to do here? Okay, we're getting a nice little reprieve here. The markets are moving a bit higher. Do we want to buy some calls? Want to buy some 0-day calls? Can we get back to 6,700? What about 67.10? That's 60 cents. 6,700. Buy some 6,700. What the hell? What the hell? I got some puts. I just bought some 6,700s.
what the cycle is going to look like. And I think
Yeah. Those are cheap anyway. 6,700. So if we get back to 6,700 for whatever reason, USAR. Okay, higher lows, higher highs. All right, BINI's back. Benny's back. Benny's back. BINI. BINI. Okay, starting to move. Coming off the low.
Low tick alert minus 800.
All right, Benny's coming off the low here. Benny and GWH. All right, while we're waiting for, the big caps like Netflix to continue, the New York Fangs are still messing around here. All right, GWH. Gap up this morning, GWH. ESS Tech, GWH.
HNRG.
Is there anything that would change your mind? Well, not change your mind, at least slow your roll.
GWH. TDIC.
The Q's right on Kumo. Lose Kumo. You know what happens there. We get a Kumo. We get a Kumo twist. All right, GWH. What do they do? GWH. ESS Tech. Missed estimates. Earnings growth. Loss. Revenue growth. 577%. Designs, builds iron flow batteries for long duration commercial and utility scale energy storage applications. ESS, formerly known as Acon S2 Acquisition Corp. Based out there by ULA, Wilsonville, Oregon.
BINI may resume in less than a minute. AZN, QNRX may resume in less than a minute.
And to me, it speaks to this is going to play a major infrastructure role in human career.
TDIC.
When you think about the AI future, Bob, you're going to need
Take it easy. Take it easy. GWH. All right, just watching this one. Just entertaining myself for a few minutes. What is that Hims and Hers doing? I haven't looked at that in a couple of days. GWH. Okay, let me go put something on. Let me put something on for lunch. I'll be right back.
Because my view, and it's our view, that in the future, the Face ID, showing your driver's license, traditional forms of identification, that's not going to be, in the AI world, that's not where it's going.
SKBL.
Human proof, when we think orbs and everything so long now to build, that's why we're such believers that this is going to be the single sign-on in the AI future.
Dan, when you quit your day job, now you're chairman of this company that doesn't stand this verification. What's the path forward look like for Dan Ives?
Look, it's another hat, right? I mean, I was just looking at ETF and you know, a lot of the other initiatives. To me, it's such a passionate believer in the AI revolution. From being a tech analyst to being chairman of ECO and Orbs, this is just the future. This is the future.
QNRX.
I now believe this is actually just the start of a fourth industrial revolution. To play a role in that is super exciting. I'm full of that. It's like when you talk to millionaires. This continues to be the biggest tech trend we've seen in the last 40, 50 years.
Dan, I want to ask you something else, and I ask you this as somebody who likes and respects you, and obviously we've talked for a long time. How is it not a conflict when you're the head of a company or the chairman of a company that is doing this kind of work and also offering this investment research that, you know, clients can trust you to be, I mean, unbiased is the word I was going to use. We know you're not unbiased. You love this stuff. You love the technology. You're very optimistic. But how do you sort of approach that when you are wearing those different hats?
It's totally separate. I mean, the work that I do as an analyst is totally separate from this. I mean, this is really, you know, this is really focused on WorldCoin and everything that we focus on Malvern House. And my belief that this is going to be the single sign in AI.
DGXX.
Really, it's a total separate role than my role at Wedbush, you know, in terms of head of tech. And I think about
TDIC may resume in less than a minute.
I understand everything I do, just like my ETF. There's obviously a lot of things that I'm really focused on, but it all ties into the same theme. It's the AI revolution that, you know, in my opinion, this is going to change
QNRX.
consumers and enterprises. You know, I think act going forward and trend that.
Well, Dan, those Orbs shares are up 13.3% today. Not too shabby. It's great to see.
And also, I like your shirt. That's next level.
This is an Ives kind of shirt, isn't it? I didn't even think about it.
That shirt, I might use that for the Ives clothing line. Julie, that's next level.
I'll ping you and let you know where I got it from.
Okay.
Good to see you, man. Thank you. Much more market section coming up.
TDIC may res in 10 seconds.
QNRX.
Just 15 seconds to explain why you have to download Bingo Blitz. I mean, I need way more time. There's games, gems, seasonal rooms, special events, chef experiences.
Netflix. Let's look at PepsiCo. PepsiCo hanging out at the highs. Orly Automotive.
BINI may resume in less than a minute.
Orly at the high of the day.
QNRX.
Low tick alert minus 800.
Okay, we're resuming this move lower, looks like.
BINI may res in 10 seconds.
QNRX. VINI. QNRX.
Earth imaging and data company Planet is taking satellite imaging to the next level. The company announced in France to launch a new owl constellation capable of delivering AI images within an hour. And they're powered by NVIDIA chips. For more, bringing in now Planet co-founder and CEO Will Marshall. Will, it is good to see you. So, well, let's all
this news. You're launching this constellation of satellites called OWL. Help us understand, well, what these satellites do, what's special about them, and what do you think the competitive advantage you have is in the market with these satellites?
Well, great question. So at Planet, we have the largest Earth imaging satellite fleet ever in human history, and we use AI on top of that to do processing, and that enables us to answer questions about the planet for all sorts of customers around the world. And we have the most data of any satellite company, and that is really useful for training AI on what's going on around the planet. What we're doing with OWL is a totally new and unprecedented capability.
Low tick alert -800.
Landmass every day at 1 meter resolution, so much finer detail, and get the data back within 1 hour with that processing on the edge that you mentioned, the video processor chips on board, so that we can do AI processing upstairs. Do the image processing and send down the location of ships, or help us to do disaster response after a flood or earthquake or a fire, really fast to help real people on the ground.
So OWL will promises this sort of higher resolution AI analyzed images all within an hour. I'm curious, what are the kinds of
S&P 500. Orly's at the high of the day. S&P.
Kind of use cases that come to my mind are those that involve things like disaster response, where they need quick.
TDIC may resume in less than a minute.
Imagine after a fire, how do you get data on where is the building affected? How do we get that as quickly as possible to the first responders so they can get there on time? Or security, where if there's events, you want to know as quickly as possible if there's a new threat around the corner, on the horizon. And so it's those kind of applications. And this is why, by the way, we call them owls, because they are smarter and they're sharper. They've got big eyes, they're wide, and they're wise. That's why we call them owls.
Does OWL replace your existing satellites? You think of OWL as supplementing them?
It's an upgrade, so it will actually be backwards compatible with our present fleet, but it will be just enhanced resolution and faster timeline.
All right.
Well, whereas I understand it, correct me if I'm wrong, you may have a customer like Japan and you'll build and service satellites for Japan, but when the satellites aren't over Japan, you'll sell that excess capacity to other customers, which sounds potentially pretty lucrative. Will OWL be used for that as well?
You understood it perfectly well. So the partnerships that we did with Japan and now in collaboration with Germany are enabling us to build, launch, and operate satellites for countries that want.
I'm just sitting, eating lunch.
So the Japan deal is just over $200 million. The same with our partnership with Germany for a set of 10 satellites and 7. And what these can do is enable those countries to have their leading capacity in their area. But what we can then do beyond that is sell the data in the rest of the
All right, what's BINI doing? BINI. Okay, coming off the low, Benny.
Low tick alert -800.
All right, we're pushing lower now.
Extreme low tick alert.
Okay, S&P 500 pulling back.
Well, good question. I mean, there is CapEx, obviously, of building and launching satellites, but let me put it in perspective. All of our satellites combined that we've ever launched, which is over 650 to date, we launch about 4 times a year. We're extremely prolific on building and launching satellites. All 650 have cost less than the single last satellite before we started from our competitor. So one satellite, all 650 costs less than one satellite. So we are seeing more than 100x decrease in cost or increase, as we put it, in cost performance of satellite. That means we're stuffing more capability, more compute, as we said with NVIDIA, more processors, more better sensors, better radios, and so on, into the smaller package so that we can do more with less.
Finally, Will, you do have competition. You think of names like Maxar, for example. I'm curious what you think makes you all
QNRX.
What sets you apart, Will? Is it the tech? Is it just the size of the satellite constellation? What is it?
Well, the first thing is the size of the fleet. So We have around 200 satellites in space. That's more than 10 times larger than any other Earth imaging company in the world. Secondly, is AI, because we're the only ones that do a daily scan of the entire Earth's landmass.
Yep.
No one else does that. And with that, it unlocks huge applications across agriculture, forest,
QNRX.
insurance, sustainability, security, and it opens up the relevance of space to AI, because the upshot, everyone knows what's going on with the space revolution, cheaper rockets, but then the increased cost performance of satellites has gone up about 100 or 1,000x over the last 10 years, and the upshot of all that is
Low tick alert minus 800.
because AI is only as good as the training data you train it upon.
Extreme low tick alert.
CSL.
QNRX.
Just imagine the power of being able to answer questions, not just of the text of the internet, but of the real world. Imagine being able to ask questions about the farmer's field next to your farmer's field. Imagine being able to ask about disaster response. Imagine being able to ask real world questions. The power of that.
QNRX halted to the upside.
AI models are going to be able to do in combination with our data set, and Planet is uniquely set up for that.
TDIC.
WAI. CSL.
QNRX.
Hey, Blake Anderson here to tell you about this. The Flash Force Tactical Flashlight. Stick around because I'm going to tell you about an amazing offer just for our TV audience. Or, if you really can't wait, scan the code on your screen now and check it out. Let me just tell you how great it is to have the flashlight. It's literally like no other flashlight I've ever had. The one hiding LED is bright, super bright.
QNRX.
Up to 2,000 years away. It's built in lithium battery, it charges up to USB-C, and it even has a level meter on the side to show you just how much juice you have left. The features just keep going. The telescopic zoom gives you a range of lighting options to light up an entire area or spotlight on something specific. If you hold the power button down, you get the
WAI.
perfect for working in the dark. Push the button again,
TDIC.
flashing light, which is really helpful for emergency situations. The IPX4 waterproof design makes it great for outdoor adventures. I love having one around my house, and of course, I keep one in my phone.
QNRX.
You can use it as a power bank to charge your phone, and it's only available for a limited time. So scan the code on your screen right now to get your Flash Force Tactical Flashlight.
TDIC halted to the upside.
No chunks, no squeeze, no stuck pieces. It's faster, cleaner.
WAI. CSL.
TDIC.
Low tick alert minus 800.
All right.
SQQQ.
The government shutdown is in its 10th day, keeping hundreds of thousands of federal workers on furlough. At the same time, layoffs in the private sector are creeping higher. So how can you prepare yourself in the event of a similar shutdown? Chief going on emergency extent. Joining me, Edward Smith, Valor Wealth Partners founder and president for this week's FA Quarter, brought to you by Capital Group. And thanks so much for being with us. And you all do serve government employees, so obviously this is, I imagine this is very much front and center on their minds right now. But as they think about
SQQQ.
this situation, but future furloughs or other things that come up, how do people go about kind of making sure they have that emergency savings?
Yes, hi. We do serve mostly federal employees. One of the things that we look at is making sure that they're getting control of their expenses.
Extreme low tick alert.
YANG.
In these situations, it's very important to look at the cutting back, but then when you look at the savings, it's looking at how your savings. Maybe cutting back on your TSP, or other discretionary things that you're doing so you can build up those reserves and be comfortable when this happens, or more importantly, the fear of this happening, because we see more and more the fear of this happening, even if it doesn't happen. The last one was 2018, that was really big, but we've had a lot of time in between where people have been very much worried that they're not going to have a paycheck.
So when you're counseling,
YANG.
how need to think about setting aside, either as a percentage or, flat amounts when they're trying to think about building this up.
QNRX may resume in less than a minute.
Emergency reserve, which is the emergency cash. And that's no more like your credit cards or something you can do with your credit, but you can jump on a plane, pay for a car breakdown or something like that. Cash itself should really only be about 1 to 3 months of expenses. And then beyond that, we want to be looking at maybe about 6 to 8 months of what we like to call catastrophic reserves. And maybe a higher yield savings account, maybe an investment account that's actually
S&P starting to bounce.
this would go to that catastrophic category. If you want to reduce those risks in this period of time. But so generally, you're looking at somewhere between maybe 9 months to 12 months of overall reserves, but it doesn't always have to be in cash because it's not earning any money in that period of time.
And, I think people want to be able to reach
QNRX may res in 10 seconds.
instruments that they have that they have at hand. But I guess loans are also a potential. I mean, effectively, that's where you're getting to use your credit card as well. But sort of dangling more traditional loans. That's something that people need to think about in emergencies.
Yes, this is a very unique emergency, and we've actually heard of some agencies that are offering 0% for a period of time. Like we know one that says 0% for 60 days. They are an agency credit union, so they're offering a very specific loan to employees or federal.
TDIC may resume in less than a minute.
To prepare, you want to have
S&P trying to bounce.
you found the home and you have equity. Always having that on hand is always a really good catastrophic reserve. You can't
QNRX.
and then when you're in the situation,
VINI.
while we don't normally like that, the TSP loan is a way to be able to get money, or a 401k is a way to get money out of your 401k to be able to pay those bills. Because at the end of the day, if you are putting food on the table, if you aren't being able to pay for your bills, or you're hurting your credit, it's going to be very bad. It is worse. And so I would say getting some of those loans is something that's very viable for you.
And as you say, you have to prioritize. So, in pulling money out of
S&P, we had a very tight range until today. We're sitting right on top of an area of liquidity. Do we bounce there? We bounced a couple of weeks ago right in this area. Maybe some memory. We're due for 2 to 3, 4% pullback. Overdue, really. Energy stocks moving higher like Duke Energy, Southern, Erie, Orly Automotive coming off the low, AutoZone coming off the low, Philip Morris coming off the low, PepsiCo, 2 days out of a base, pushing higher, PepsiCo. Dow Jones, we got Walmart, still basing here. What's Disney doing? Disney still lower. McDonald's, Coca-Cola, Sherwin-Williams, J&J trying to do a deal. Procter & Gamble, nothing. Caterpillar hanging out at the highs. SQQQ. Seeing a bid, SQQQ.
Are you ready to master the markets and, dare I say, become a better investor in the process? Delphi's has you covered with our new full suite of original podcast content. Whether you're a seasoned investor picking up new trends or you're just starting your financial journey, we offer invaluable market insights and strategies from some of the most influential.
Okay, S&P.
Join us on YahooFinance.com, Yahoo Finance app, your favorite streaming platform.
Currently down about what? 1.8%, almost 2%.
Ticker minus 800.
Looks like we're going to go lower here.
WAI.
S&P trying to hold this level down here.
TDIC.
Let's see what the hedging flows look like. Still sitting down here at the lows. S&P still sitting at the lows. This is support right in this area. You can see the purple. We go to black screen.
YHGJ.
Purple area, that's support.
YANG.
S&P still grinding lower.
QNRX.
SQQQ. CSL. TDIC halted down.
It's a flexible insert that slides between your seat and the center console and stops everything from falling into that going seat. You know that gap. The one where your phone slides in, disappears,
YHGJ.
find yourself halfway under the seat, try and grab it while you're still driving, but no more. You just drop the console catcher in, no tools, no adhesive, it fits snug in just about any car. And when it's installed, that gap is gone. I've got the black ones that match my seats, but there are plenty of
CSL.
your car as well. No more fishing for fries, earbuds.
SQQQ.
Blends in, doesn't buzz, and honestly, forgot how much you used to drop things down there. It's one of those fixes that you don't really even think about until you finally stop losing stuff down there every time you drive. If you don't have one yet, scan the code on your screen now.
Low tick alert -800.
Still more downside. S&P continues lower.
Extreme low tick alert.
CONI.
YHGJ.
TZA. YHGJ.
BINI.
S&P continues lower.
CONI. CRCD.
YHGJ. BINI.
TZA. UVXY.
It's quite long, but summing up, criticizing China here, and he says some very strange things are happening in China. They are becoming very hostile. He's talking about the export controls that they want to impose.
CRCD. UVIX.
Talking about some other elements here, but it seems like that is something that may be affecting the markets at the moment. We would keep on it and keep you posted.
CONI.
Meantime, markets have traded at records throughout 2025. The Nasdaq now
Easy day. Fridays are usually easy days. We do have a significant downturn in the markets. Been looking for this with junk bonds moving below the 50-day on Wednesday. Suggested taking some hedges. So if you got hedges on, you're probably okay, I would imagine.
Low tick alert minus 800.
UVIX. UVXY.
Well, certainly, following the tariff tantrum in April, the market does seem to have moved on, saying, okay, 10% tariffs, not the end of the world. We got the one big beautiful bill. We got the whole AI.
Extreme low tick alert.
Adding a lot of tailwinds. And so, yes, but the China tariff negotiations, never really concluded. Right? We're on the second 90-day reprieve. And so, I guess it's a reminder that the tariffs have not completely gone away, and we still don't really even know who's paying for them, right? I mean, the
UVIX.
The exporters
UVXY.
bear the brunt of tariffs.
VXX. TDIC may resume in less than a minute.
Very small amount, and
SQQQ.
majority of the cost of what
S&P continues lower.
by American consumers and importers, but
Just watching these puts.
are rising because of the AI boom when they otherwise might have been falling because of the tariff. So it's a reminder to have a nuanced view about these things, that it's never just one thing monolithically driving outcomes. It always is a mosaic approach, and here we have a number of cross.
Trend is down. Hedging flows moving lower. S&P hedging flows moving lower.
TDIC may rise in 10 seconds. UVIX. UVXY. VXIQ halted down. SQQQ.
I mean, it's always good to have, obviously,
QNRX.
Tesla still pulling back. Tesla.
and it's actually a very good thing that this year the market rally that in the U.S. started 3 years ago next week really has broadened to the rest of the world, and not just China and emerging markets, but developed markets, Europe and Japan. So that is a pretty good hedge right there, even though they're all
TDIC halted down.
equities. But you could buy similar fundamentals.
Tesla.
In terms of earnings,
QNRX.
the growth in the payout,
SBIT.
dividends plus buybacks. That's the share of earnings that investors actually get back.
LOKBW.
And you can
Low
see
tick alert minus 800.
of the value of the valuation. And so,
RITMPD.
so there are ways to hedge.
VINI.
Obviously, bonds are a traditional way. Some cash. Gold certainly has been a very effective one as of late. But to try to time entries and exits over headlines is always a very difficult thing. We saw how bad the headlines were earlier this year, and the market, in its relentless pursuit of price discovery, read those headlines, and we fell 21%. And I think the markets are now like,
RITMPD.
if it happens, then I'll react. I'm not going to react just on headlines. So who knows? Maybe this is the art of the deal. But right now, I think the market is mostly focused on earnings season, which is starting next week. And whether the acceleration in estimates that we've seen since April or May.
Do you think that they will, Yuri? Do you think that we are going to see
S&P still pushing lower.
more banks than not in that first week than
RITMPD.
tech, which has been driving most of the earnings growth? Do you think, given that we continue to see stocks mostly push higher, that they're going to live up to those expectations?
TSLQ.
My sense is that they will. The last few quarters saw a very impressive bounce.
YANG.
We all know this is like the
SBIT.
oldest game in the book, right? Companies guide lower only to beat estimates, so they under promise and over deliver, I should say.
RITMPD.
And the last few quarters saw.
All right, still moving lower. Let's see. SPY, I have the 660, 650. Okay, we continue to move lower.
RITMPD.
The bounce is at least 300-400 basis points, but in recent quarters it's been more like 5-6.
Low tick alert minus 800.
So my sense is based on revisions made
TZA.
Hedging flows have not turned up significantly. We do have support down in this area. I wouldn't be surprised to see a bounce. We bounced earlier right near that 66.20 zone, but then resumed lower.
SBIT. CSL.
Extreme low tick alert.
YANG.
GWH.
And the idea that we could see a bubble and a bursting of the bubble. What are you seeing as you make these
EIXY.
comparisons? And if it is a bubble, how much further it can inflate?
That is the question, of the day, of course. And yes, I do like to look at price analogs with the caveat that they
Fourth quarter, we're due for some pullback, obviously up for 10 weeks. Junk bonds dropping below the 50-day on Wednesday. We're due for a 3 to 4% pullback. 40% up from the April 7th low. 40% gain from the April 7th low. If you can't handle 3 or 4% pullback, maybe you shouldn't be short-term swing trading. We suggested taking profits off into strength. We suggested taking profits off into strength over the last few days and hedging. I kept mentioning SPY puts, the 660, 650 call put vertical for one option, some additional S&P 500 big cap puts. Those are all working. Okay, we've gotten a little bounce here now. S&P is starting to bounce a little bit. Let's see if they're going to buy down here.
YQ may res in 10 seconds.
22%. BTQ. In both cases, the market came roaring back very, very quickly. And actually, the only other time other than this current episode that the market came back so strongly, so fast from a 20+% decline was that 1998 recovery. And guess what? Greenspan, cut rates 3 times, even though the markets had.
GDIC may res in 10 seconds.
And again, you can draw the parallel to the rate cut that we just had in a market that is making new all-time highs almost every day, and with this narrative of AI now, internet back then. So long story short, there are some similarities. Which is not to say that we're in a bubble or even going to be in a bubble. Certainly, I don't see any signs that
Junk bonds.
There are some signs that there's some froth coming into the market.
200 days coming up.
Profitable tech stocks are flying again like they did back in 2021. So certainly the elements are there.
Okay, last time we had this kind of pullback in junk bonds was back in February. A lot of similarities that we've been talking about over the last few days. So you should be well positioned. Fewer risky positions, taking some things off into strength. Hedged with puts. SoFi looks like we're coming back to the 20-day, so stopping out a lot of people who were still long SoFi.
It's certainly one of them. I mean, I look at a host of sentiment indicators, and there really isn't a lot of sign that sentiment has really gone to extremes yet. But the non-profitable stocks or like the retail favorites.
Low tick alert -800.
Some idea about the speculative side of things, because again, those stocks by definition don't have profits. And just like the internet boom, you can see in the AI boom that there is room for companies to kind of make lofty promises about the next killer app, and they get a ride, and they get a free ride, and we don't really know what's going to materialize, and that sort of is what happened a little bit in the late 90s. So it's sort of, for me,
Cooler heads will prevail. I imagine pullbacks like this will continue to be opportunities. I want to see if this trend is going to persist during the day.
SPHL.
Let's see if we can't get a turn in the markets. Looking for hedging flows to turn up. Watching the hedging flows. Okay, I'm going to take a 2-minute break. I'll be right back.
GWH. SPHL.
YQ may resume in less than a minute.
GWH. SPHL.
When your phone, wallet, keys, loose change, and more fall between the seat and center console of your vehicle, it's impossible to retrieve. Oh no, not again. Introducing the console catcher, the perfect addition to any vehicle. It's flexible, easy to clean, and even easier to install. Simply place the console catcher around the base of the seatbelt buckle, and that's it. The console catcher keeps anything from falling.
YQ may res in 10 seconds.
And it even doubles as a handy organizer. Scan the code on your screen right now to get a complete set of console catchers for both front seats.
TDIC.
UNRX halted down.
BINI.
Order right now with this special TV offer. You can take 20% off. If you have a car, truck, minivan, or SUV with that frustrating gap between the seat and console, you need the console catcher.
SPHL.
Console catcher moves with you. Scan the code on your screen now. Get your console catcher today.
SPHL.
Here's annual enrollment can feel overwhelming. The live video podcast, Decoding Retirement, is here to make it simple. All week, we will cut through enrollment confusion with expert advice, clear answers, and tips to save you money.
SPHL.
Choose the right coverage. Decoding Retirement. 5 days.
TDIC halted down.
Making Medicare decisions easier.
SPHL.
First and last stop on your retirement journey.
Let's get a check of the markets because
GWH.
taking a turn for the worst here right now. The Nasdaq bouncing off the lows, but still down 0.8%. The S&P up about 0.5%. The Dow down about 0.25%, just over 100 points. This is after a new post on Truth Social by President Trump, where he attacks China's recent move to withhold rare earth minerals
SPHL.
from the U.S.
SPHL.
Threatens to perhaps not meet with President Xi in South Korea as was planned. In addition to that, he says
GWH.
potentially considering reviving some of the retaliatory tariffs that had been floated, of course, prior to the latest detente between the two nations. So that was seeming to be the catalyst for the drop that we're seeing.
S&P hedging flows have flattened out a bit.
More about the state of the world broadly is Boston Consulting Group's global chair, Rich Lasser. Rich, we're going to talk about the reason that you're here, which is the energy transition moment. But I do want to ask you about this post because I know it's something you've been navigating with your clients. This one is that
GWH trying to make the new highs. Oh boy, watching the S&P 500, looking for a turn back up.
going to continue. And as a result, I think CEOs are putting much more time into it personally, engaging with public sector officials and others to try to understand what's going on where they can, shape it in a positive direction. And I think they're building what we would call geopolitical muscle in their organizations. So the ability to understand the implications, figure out what the no regret moves are.
All right. Futures trying to turn. Everything's on a sell signal, 5, 15, 30, 60. Tick cumulative is bearish. We've got junk bonds with a sell signal. Bitcoin with a sell signal. Biotech sell signal. Everything is telling us to be cautious, hedge, look for more downside until the dust settles and hedging flows can turn back up. SPY. Looks like we're going to hold here in SPY. Maybe I'll take some more of these hedges off and readjust. Maybe do something else. Okay, I'm taking some of these 660s, 650s off. More than 100% on those. Oh, damn. I can't believe it just did that. All right. Let's try this again. SPY puts.
But we could see the private sector start to fill in where the public sector's falling away. Brookfield, for example, just raised $20 billion for its second energy transition fund. You guys just did some research on this. You came out with a big report on the energy
SPY. Okay.
Entering a new phase. So is that what that new phase looks like? That the private sector, that they still want this and they're going to step in?
So let me just start by saying the focus of our report was global, not just the U.S. And I want to be clear about that.
Okay, it took some more 660, 650 put profits off right there. Looking for a bounce. Looking for a bounce here. Okay, so watching hedging flows. All right, I just took the puts off. I had 660, 650s. If this bounces and rolls over again, I'll get back in. Okay, the expiration date on those were working. No, filled orders. That was 21 November. 21 November or October 31. Okay, I might buy something a little bit closer and double up the size. I had November. Those were a nice gain. So if we bounce and fail here, what I'll do is I'll do something like October 31st, October 30th, something like that. Puts, I'll do the 660 again, 650s. All right, looks like we're going to fade. More importantly, once the hedging flows start to turn up, that'll give us a clear signal. Okay, that we're overdone. Nothing yet. GWH got filled. Filled out on the pop.
HGJ may resume in less than a minute.
As you say, it's because of, sort of increased costs in many cases too. an encouraging picture when it comes to furthering the transition.
So let me be direct on both sides of it. You are completely right that, we are off track in terms of the original projections of the Paris Agreement or whatever you want to talk about. We are going to be well above a 1.5 degree temperature increase. Probably on the trajectory of 2.5 to 3 degrees. That doesn't mean we shouldn't try to change it. 2.5 is better than 2.7, 2.2 is better than 2.5. So it doesn't mean we don't continue to try to make progress, but it would be unrealistic
YHTJ may res in 10 seconds.
to pretend we're on track for what the original hopes were in terms of controlling rises in temperatures. The second thing is,
All right.
TDIC.
we're just
GWH.
coming out of some work that we've been doing over the last few months.
GWH, nice pop. I got filled on that, +1 and change on GWH. GWH got taken out at 450 even. Okay, that's still going.
These are very, very large global markets. What most businesses are realizing is you need to make sure that your logic around sustainability is aligned with your logic around building and strengthening your business. Most businesses want to head toward markets that have tailwinds around them, and that will make a lot of sense. But that pressure to focus on the business element around this as you set policies around sustainability is really important. These are large and growing markets.
So, Rich, finally, is this what you're hearing from your clients? That they've invested in these markets already, they've invested in the transition, and they are still motivated to
GWH.
If you said on average, yes, that's probably right.
GWH.
But I want to highlight a couple.
GWH is still going.
Different technologies, because their cost profiles are different, depend on government policies to different degrees. And so if your business is in a technology where the costs aren't
Nice move on GWH.
policy, then obviously the kind of changes in policy we've seen in the U.S.
YHTJ. TDIC. GWH.
And if you're in other places where the technology's economics,
Hedging flows are turning. Turn. Do, 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 do. Do, 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 do. Do, 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 do. Okay, what's Netflix is they pulled back to 12:30. Netflix, okay. Netflix, Tesla. CRML. All right, let's take a look at CRML. All right, S&P is turning back up. S&P is turning.
YHTJ halted down.
All right, the Qs, QQQ, turning off the low. Wouldn't this be a snap if this turned back up and just rip right back up to the highs? The funny thing is we've been up 10 weeks in a row. We've got junk bonds gave us signals. We had IWM, biotechs all giving us sell signals. Breadth deteriorated. Yet we're up 10 weeks straight. And why are we up 10 weeks anyway? Earnings have been good, and we're about to start earnings again. The banks will start to report. We'll start doing some more iron condors and such for Sean. By the way, you joined not too long ago, this week, right? You joined this week. During her earnings season, we do a lot of iron condors, pick up a lot of extra cash. Sometimes they're overnight holds, $500,000 overnight, just on some simple iron condors. We do that a lot. Earnings.
GWH.
QNRX. GWH.
GWH.
Yeah, I think you'll like that. Okay. You may have noticed that the S&P put flies aren't really working that well because we passed the lower strike so fast. We have to bounce back up into the range. Okay, 6,700 would be a good number if we can get back to that or close to it. You'll start to see that those will go. Oh, we got a ways to go. We got to get past 6,650. I don't know that we're going to do that. Anyway, got plenty of time on those, the Novembers. What you could do is sell the deepest in the money put and the farthest out of the money put. They're both in the money, but the deepest in the money is the 6,700s, I guess. Let me just look at this real quick. Sean. Yeah, selling the 6,700s first, and then the 6650s second, and then close buying back the 6675s. You should net about, I don't know, $50 to $100 per contract profit. What you want on these put flies is for an easy move lower. You can see that this move was so fast it went right past all three strikes that we have on that credit spread. So we got plenty of time. Looking for that to bounce back up towards 6,700. Okay. Tesla just closed the Iron Condor for a partial profit. It's about $400 total. I just want to reduce my exposure because if we do get this more downside, I want to reduce some of these Iron Condors, puts in particular. Okay, so I just took Tesla off. Now I'm just looking at Tesla longs for the bounce. Okay, what's BBAI doing? Big Bear AI. All right, so trying to get back up to the highs of the day. Big Bear AI. Had a little dip from the highs. Big Bear AI, BBAI, Bravo, Bravo, Alpha, India.
TDIC.
Okay, hedge flows need to see more upside. Need to see some more concerted short covering. Tick cumulative is still pointing down. Let's go take a look at the S&P equal weight index. S&P equal weight.
TDIC.
Okay, yeah, that's a pretty definite break on the 50-day. If it bounces here, we could do what we did several weeks ago. Bounce off the 50-day on Monday. Number of stocks trading above the 20 and 50-day are pulling back to a reload zone.
Improving to the highest level since Q2 2021. A few questions there. When we talk about financial confidence, Brad, how are we defining that, and what explains that trend?
QNRX.
So that metric has to do with the outlook for the consumer, for their ability to spend and provide for themselves and their family. And it was really encouraging.
Okay, so let's say you don't have any hedges and you're considering that the markets are going to be moving lower down towards the 50-day. You may want to buy some puts up here on the bounce. Okay, I might do that actually. SPX. Okay. S&P 500. Maybe some puts up here. SPX. Come on. SPX. Not 0 day. I go out a week. To the 17th again. Puts.
That's right.
Vertical.
Encouraged with that result. 47% of our respondents in this quarterly survey that we've been doing going back to 2017 saying they expected to spend more this holiday season. That's the strongest number in 3 years and follows very favorable results on the question, did you increase your back to school spending? Of which 44% said that they spent more this year. And that's usually a very important indicator of how holiday sales will be. So I think some nice momentum and some nice intentions to spend.
All right, Trace.
Forward to these all-important months of November and December.
6650 overhead, mostly resistance, I would imagine.
What are they spending on, you asked? We're seeing a little bit of improvement in some of the discretionary categories, the home-related categories, for example, consumer electronics, which have been weak over the last 3 to 4 years coming out of the pandemic. So that's a really encouraging secular trend that we think is underway. in addition to some of the more broad confidence we're seeing from the consumer right now.
There are concerns, Brad, as you know, about this cooling labor market. I'm curious to know if it keeps cooling, Brad, what could that potentially mean for what we're talking about here for consumer confidence and consumer spending?
It's a great question. And I want to be clear, there's no question there are a number of cross currents on the consumer right now. And a labor market that's a little bit softer is one of them. I think the good news is that the labor trends tend to be a bit more of a lagging indicator, and the leading indicators, such as the wealth effect, monetary stimulus, the fiscal stimulus, we think that those point in the right direction and will underscore the consumer confidence, going into this holiday season.
There are different kinds of consumers, of course, Brad, higher income, middle, lower. What were the differences your survey was picking up there?
There's certainly some bifurcation. When you cut the data, it's interesting. It was 30 to 44 that seemed to have 30 to 44 that seemed to have the greatest
hedge flows, trying to bounce, put in a higher low.
And it shouldn't come as a surprise to us that those are folks that probably have more exposure to the stock market and some of the benefits of the One Big Beautiful Bill from a personal finance standpoint. As we look forward here, in terms of demographics, there's also some challenges that are coming up at the low end of the market. No question, the inflation will nip away a little bit more at their spending power. They were probably under a little bit more pressure from some of the softer labor trends that we've seen of late. And what we're seeing in our consumer survey is an increased likelihood to shop at the dollar stores. When we ask the question, which dollar stores have you shopped at, the likelihood to check those boxes has been going up for a couple of quarters now. And we think that bodes well for some of the trade down trends within the dollar store space.
So to add it up,
S&P dropping off a little bit there.
to get to some names you all like, it looks like you prefer, I see Walmart, I see Ollie's, I see Lowe's. Are there common themes and threads among those picks, Brad?
There are, and thank you for asking. There's two sort of buckets that we like to think about our top ideas as falling in. The first is sort of
All right, what's SPY doing? SPY.
Our names that we think company-specific tailwinds that are going to drive market share gains and an ability to perform in good consumer times and challenging consumer times. And we would put Walmart in that bucket. Ollie's Bargain Outlet, it's a closeout retailer that's benefiting from the pressure that's being put on many of the retailers you're seeing go out of business. A lot of that needs inventory at Ollie's, where the consumer can save money. And then we also need Casey's.
All right, bouncing a little bit here. Choppy, random price action right now. Doesn't feel like there's a lot of interest in trading at the moment. Looks like we might get more of a bounce now.
QNRX.
And we're hopeful that this group benefits from stabilization, hopefully growth in housing and home-related spending as we move into 2026. And our favorite names, as we think about that side of our coverage list, would be Somni Group. This used to be called Tempur Sealy, but they bought Mattress Firm. Now it's the ticker's SGI Somni Group. Lowe's in the home improvement space that has a lower valuation than Home Depot is why we prefer it to Home Depot. And finally, Williams-Sonoma. Those would be the three that we think have
QNRX.
exposure on the discretionary side of things, more so as we look at 2026.
Brad, appreciate your time and those picks. Thank you.
Thank you.
3 years ago, the
Looking for a higher low.
And as year 4 of this bull market kicks off, investors want to know how much room we have to run. And that's what we're focusing on in today's Stocks in Translation. This first chart here is courtesy of Keith Lerner
QNRX.
and is showing every third year of the bull market since 1957.
VINI.
Notice the far right. The current year, year 3, is the strongest of the bunch. So now we've got momentum, but how long do these bull markets typically last? Well, zooming out almost a century, here are the S&P 500 returns for all the 15 bull markets since 1932, including the current one.
Okay, where is SPY right now? Might want to enter some more SPY puts. SPY. All right, SPY. Let's see if this gets any kind of bid here. SPY could catch a bid.
QNRX.
This is going back 3 years. You can see XLK here is up 139.5%. That is the leader. And if we take a look over the last 3 years, you can see a few hiccups and some sideways action here. And by the way, that's when NVIDIA was also going sideways, but it has really rocketed recently. Number 2, that's communication services. That has Alphabet, and it also has Meta. Then we have industrials, financials, each up more than 70. And then XLY is consumer discretionary, bunch of retail names with Amazon and Tesla at the lead. Now, if we drill this down to 1 year, you can see a little bit of red. But aside from materials, XLB there, all the red ones are defensive, so this is still bullish in nature. Number 1, that's communication services.
Okay, if we can manage it, I'm going to save a couple of orders here. 660. Or
well, that's kind of an AI derivative play right now. So let's check out the NASDAQ 100.
660, 650 again, but I won't go so far out this time. 660. 650.
YHGJ.
That also corresponded with NVIDIA taking a pause, but again, rocketing higher very recently. But guess what? Palantir up 2,150%. That tops it. And you can see this is just really...
We're trying to bounce here. The S&P is just, doesn't feel like there's anybody interested in trading at the moment.
Then next 7 ETF, then ARC Innovation Fund, and we got software, Qs, that's basically the NASDAQ 100, the Internet ETF, and ITA. ITA is interesting because this was a really good defensive play when we had the post-Liberation Day sell-off. It didn't fall off as much as everyone else, and it's probably still a pretty good diversifier. So putting it all together, we got some good options here. We've had a lot of bullishness, but let's take a look at what to look for in the coming weeks and months as we head into the 4th year of this bull market. So as earnings from big tech come rolling in over the coming weeks, you want to pay attention to the AI leaders, which are currently priced for perfection, as the street says. Any misses, especially on future guidance, that could bite. Then we want to watch out for sector rotation on any pullbacks in tech. Rotation is the lifeblood of bull markets, as they say. And we want to see investors move into other areas besides tech to keep this bull market alive. Then you got to watch gold flows. According to the work of Todd Stone at Strategas ETF Research, the 1-year flows in gold ETFs have just reached the same level in 2020 that occurred just as the price of gold was topping and starting to turn down. Now, history doesn't have to repeat, but gold ETF flows are red hot, and if the trend reverses, that can hit the price of the yellow metal as well. And now that Bitcoin is back to record highs, watch the crypto bid. Bitcoin was famous for reversing short-term after hitting new highs, and a dip below 120,000 would be an orange flag for risk sentiment in general. Finally, meme stocks are surging, albeit for different reasons in 2021. But it's incredibly interesting that Roundhill just relaunched their meme ETF a few days ago, and when they first launched their meme ETF in late 2021, that essentially top-ticked the initial pandemic bull market, and it was the start of the 2022 bear. So putting it all together, this is not an old bull market by historical standards, but it is very speculative lately. Earnings will set the tone soon, so stay alert. And tune into the Stocks and Translation.
Very slow day. Quiet Friday.
Website or wherever you find your podcast. Stay tuned for more market catalysts up next.
Trying to turn here.
QNRX. QNRX.
All right, let's go take a look at VIX, see how that's doing, and junk bonds. Okay, a little bit of buying there, but the cascade lower is still, the momentum is clearly bearish. Could see a bounce in junk. UVIX. UVIX. This is a wasting asset. It'll bounce for 1 or 2 days and then just resume the path lower. Just watching this because it has seen a little pop. VIX. VIX at 21. So if you're buying puts, you get more and more expensive. As VIX spiked, you're paying up for that volatility.
TDIC. TDIC.
Etsy set to begin trading on the New York Stock Exchange next week, moving its listing from NASDAQ. Investors initially viewed the news favorably, with the stock hitting a new record high when the move was first announced. A company's choice of stock exchange could have a big financial impact, and there are many reasons why
TDIC.
move its listing. First, a company might be looking for better visibility. Larger exchange could help attract more investors and boost the company's credibility. Another reason for switching could be that a company is looking for lower listing fees. The NYSE typically has higher listing fees than the NASDAQ. The NASDAQ's lower fee structure is usually beneficial to startups, while the NYSE attracts more established companies that are less concerned with the fees. Finally, a company could also be looking for a more favorable regulatory environment when switching listings. Both the NYSE and the NASDAQ have initial listing requirements that a company must meet to be listed and continued standards to remain listed. A company can even be delisted if it no longer meets those requirements. One thing to keep in mind, a change of exchange won't really affect investors who own the stock. Shareholders could see changes in trading volume, but the actual ownership and number of shares held by existing shareholders will not change. One quick precision there, Etsy wasn't a record. It was, I believe, a 15.5. That's something to keep in mind. And that's it for our Market Catalyst. I'm Julie Hyman. Thanks for watching Worry on Finance coming up.
All right, just watch a bit. There's nothing going on at the moment. Just waiting for a potential bounce or just to sit right here and go nowhere.
TDIC vaulted to the upside.
Valuable market insights and strategies from some of the influential minds of Wall Street and the boardroom. The key insights to help boost your portfolio, build your wealth, and make you a successful investor. Join us on YahooFinance.com, the Yahoo Finance app, your favorite streaming platform, and wherever you get your podcasts.
We've all been there. A dead battery, a flat tire, and no help in sight. But what if you had the ultimate emergency tool at your fingertips?
QNRX.
Flash Charge 4-volt jump-start power and never be stranded again.
Hey, Blake Anderson here to show you the Veggie Vortex, the 3-in-1 slicer, shredder, and sanding shaver that spins veggies and
QNRX.
Scan the code on your screen now and get yours with this specialty job. This kitchen marble is pure magic. Watch this. Potatoes, boom. Chips in seconds. Hash browns so fast, pancake house is going to start calling you. Order at cucumbers. Perfect slices for salads, sandwiches, or slap them on for a crisp spa day. Ready to really go nuts? The Veggie Vortex chews through nuts like an over-caffeinated slow. When someone say cheese, look at that, perfect for pizza in seconds. This thing's fire. It's got a
QNRX.
strong, it moves tighter than skinny jeans after a big Thanksgiving dinner. 3 stainless steel drums, slicer, coarse and fine shredding. EVA made plastic, dishwasher safe. The Veggie Vortex will turn mealtime into fun time every time.
Hedge flows, trying to get this to move. Nothing.
It's about time. I manage your partner in my health. That waves and things aren't dismissed. With Central Well Senior Primary Care, it's about time. More one-on-one
QNRX.
50% more time with my doctor.
So I can ask all my questions.
And get the answers I need. I have a team of experts taking a proactive approach to help me be my healthiest. Our newest Center Well location is welcoming new patients.
GWH.
GWH is setting up again.
QNRX. GWH.
AVGL getting bought.
Every once in a while, something big happens.
Thank you.
Something that in hindsight changes everything. And now, in a defining moment for
Calden New York Fangs are down at the lows at the moment.
QNRX.
launching America's first ever CRO treasury. This is more than a partnership. It's the future of finance, built in America. For more, visit crypto.com, where millions trade CRO.
GWH.
Get the information you need to make the right trade for your portfolio. I'm Jared Bookery, your host, and with me is Yahoo Finance senior reporter Ali Canal, who's here to connect the dots and to be that bridge between Wall Street and Main Street. Today, we're going to be talking about fundamentals from a variety of Wall Street viewpoints, and our phrase of the day is price for perfection, meaning there's no rare bag. One misstep and markets can fall. We'll tell you which one. And strap on your seatbelt for today's market show and tell. We are
GWH.
breaking down margin of safety, which is something you'd want if your stocks are truly priced for perfection. And this episode is brought to you by the number 3,900.
TDIC may resume in less than a minute.
That is the current record high in gold. We know central banks are steering away from the dollar, but is it also the market's panic button hiding in plain sight? Today, we are welcoming back Michela Galina, who's seen markets from just about every role on Wall Street, investment banking, buy side, sell side, to the C-suite. She is now building her own platform as a founder and CEO of On Course Consulting as a strategic advisor, helping companies scale to the next level, among many other things. Michela, it's great to have you back here, and we're going to get to our phrase of the day in a second here. But tell us how you're seeing markets.
CERO.
I love how you open that, Jared, because price perfection is exactly what we're seeing in the market today. We're seeing very high valuations.
TDIC may rise in 10 seconds.
25% premium to its, call it, prior average over the last 2 decades. And at the same time, we're also seeing a highly concentrated market. So if you think the top 10 names in the S&P today, they account for nearly 40% of the
TDIC.
S&P's market cap. What's even greater than that is that 3 names today,
CERO.
Microsoft, NVIDIA, and Alphabet, have actually contributed 60% of the gains year to date to the S&P. So if you're thinking that you have the S&P index in your portfolio as a diversified index, it's not today. It's a concentrated tech portfolio.
Yeah, I want to pick up on that because that is our phrase of the day. Price for perfection is when a stock's composition assumes flawless growth and execution, even small disappointments.
TDIC.
So, Michela, you were just talking about some of those stocks that are very concentrated, valuations high. What do you think
CERO.
of the current bubble conversation that we've been having? Are
lot of hype right now, and I'm a big disciplined investor. I think if you go back to the principles of Buffett and Munger, they choose discipline over hype. And they look at things like cash flow and tangible value, like gold that's doing so well today in this macro backdrop. And I think that traders are telling you that there's not an all clear safety signal out there in the marketplace today, and they're looking for tangible value versus hype value. And just as you mentioned, as the margin of safety that's so important in today's market, I think that applies to some of the major
Hedging flows, just watching that, not going anywhere. There's just a lack of interest at the moment.
has no margin of safety right now. So the margin of safety allows you to have some flexibility for fallible human error, right? And valuation and what's happening around the corner with the economy that we can't see today. And with the market today and valuations in both megatech and generally the S&P, I don't think there's margin of safety.
I want to return margin of safety in a minute here. I want to ask you, in fact, let me just begin by paraphrasing John Maynard Keynes, who I think he's the one who said...
Futures, a little bit of short covering, not much action at the moment. The markets are very quiet. I'm your host, Cosmetic, coming to you from theclosingprint.com. Skipping over into the 2 o'clock hour. It's Friday, the 10th of October.
I think having a diversified portfolio is really, really helpful. You know, we see a lot of the trading right now as FOMO, fear of missing out, and momentum trading, but I see that there's an absence of the fear of risk right now in the marketplace.
Sure.
And when you think about another Buffett principle, he refers to the stock market as Mr. Market, right? And what he means by that is the market is essentially this moody person who comes to set prices every single day, just like you and I have moods. And right now in Mr. Market, but that doesn't mean that at some point in time he's going to be fearful or scared or nervous about what that industry might be facing from a challenge perspective. And so that Mr. Market theme essentially gives you the knowledge to say, hey, at any point in time you might be higher or lower than the norm, but likely the market's going to revert to the norm in the meantime. So euphoric valuations might be a great point to take some money off of the top to reap some gains for sure, because we know at some point Mr. Market's going to come back and he's going to be maybe slightly fearful in another day, and then that creates a buying opportunity. So staying
Hedging flows just sideways. You can see that we're just pretty much moving sideways all day.
I do. I think from a valuation perspective, we certainly are. And I keep going back to the saying on Wall Street where valuations mean nothing until they're the only things that matter. And I think we're at this point where there's been so much momentum trading in AI that we're maybe not necessarily pricing in some of the risk that's to come. I think looking back at history, right? History repeats itself all the time. There are great lessons we can learn from history. If we look back at the dot-com bubble, there are, I think, a lot of parallels. No one would argue that the creation of the internet and the revolution of the internet was a step function change in the way we operated as a society, created knowledge, etc. In the same vein, AI is
S&P equal weighted index is still showing selling. Number of stocks above the 20-day, number of stocks above the 50-day keep dropping.
big place for investment that needs to happen right now, it doesn't mean that the high valuations applied to every company in that space today are warranted on my part.
All right, let's do this. I want to pivot out to market show and tell because that is margin of safety. Directly relates to what we're talking about here. Margin of safety is Buffett's favorite seatbelt.
New York FANGs continue to hover near the lows for the most part.
QNRX.
Intrinsic value. It's what a business is really worth based on its cash flows and economics, not necessarily today's market price. It's a recent estimate that can differ pretty widely from the market quote. So, Michaela, tell us how investors can find this margin of safety and maybe just throw out some sectors or tiers there. What do we diversify into?
Definitely. So today we can look at average or median PE ratios or a certain type of ratio that indices are valued on. So for the S&P 500,
QNRX.
We talked about this earlier. The market is putting a PE of something 25% greater than it normally does. And to me, that tells you price at a premium and you do not have that margin of safety. If you're priced at a discount to that median or average multiple, then you're in the margin of safety zone. So those are the things I typically like to look at. I think one of the reasons that traders today are flying to assets like gold or precious metals is because they don't see a margin of safety in a tangible asset.
Oh boy, this is boring. Futures just sitting here for the last 45 minutes, just moving sideways at the low. Feels like we could get a flush at any moment.
I think diversification generally, as we talked about, the top 10 stocks in the S&P account for 40% of the market cap. If you
CODI.
market cap weighting to the S&P, those stocks have only increased about 4% this year. So you're seeing outsized growth, and I think there's confidence in the strength of the market because of that. When I think there are some fundamentals like wage growth not keeping up, sticky inflation, a softening labor market, that would say we need to be a little bit more conservative. Now, that's why gold is trading at the prices that it is today. It's up 45.
39.51, they say.
Exactly. Exactly. But you got to keep Mr. Market in the picture there and not chase the FOMO, right? And know that there might be some better entry points. But I think it just goes back to the S&P 500 and other indices have had so much outsized growth from the Mag 7 and the top names that you're really not as diversified as you think you are. So you need to pay closer attention to making sure you truly are diversified from a sector perspective. So what's not performing well, but as AI might tend to fade, healthcare perhaps, energy, industrials, things that need to be invested in order to keep that moving going.
Yeah, but you say industrials is connected to AI trade in many ways.
Definitely, but I think that's one of the reasons that AI in some cases is overvalued today. We know there's a constraint from a power problem, and we know further infrastructure needs to be built out. That's one of the reasons we saw AMD's stock pop this week, because chip makers are trying to solve that problem.
So that's one of your risks. And you were talking about risks in the AI trade. You think the supply versus demand picture is one of them?
That's right. And I think a lot of companies are ahead of the game. We're seeing a lot of deals being made in the marketplace to try and mitigate that risk. Not all companies are going to be able to solve that. Not all companies have the scale to solve that at this point in time. So I think that's a broader industry risk that isn't being priced into all of our AI stocks.
We need to take a short break, but coming up, we're diving into gold's big move as prices near 4,000 an ounce, plus a Warren Buffett-inspired runway showdown, pitting the hype cycle against the cash flow cycle. Stay with us.
Quiet day. Very quiet day.
TDIC.
From any meetings, maybe shook in emails, and he has matched 1, 2, or 3 of Cigarettes missing service. She's nearly completed another charming collection. And so here, before an enchanted evening of reality, we reach the top of the air. We're playing. Go for it. You're on a roll. Disney Magic Match 3D. Download now.
Yep. Slow day, quiet. Could go either way. Could get a rip higher, could drop off. I'd have an order ready for either side if you're so compelled.
TDIC.
Okay, we're close to break even on Charter. I'm just going to go ahead and take this off. Charter, going to go ahead and take this off. Give back.
TDIC.
All right, Charter, I just gave back the credit. All right, Charter.
This episode is brought to you by the number 3,951. That's gold's all-time high.
Charter. I just took Charter off at just above break even. Only loss was time. Not everything is going to work, especially in a market like we have today where we have this big flush and traders are trying to figure out which direction we're headed for. Momentum is clearly bearish for now.
QNRX.
More recently, we've seen the Fed have a dovish signal, and we know that they've indicated they're going to cut rates a couple times this year by a small amount, probably 25 basis points, and that is historically a tailwind for precious metals. So we've seen a nice setup for gold. I think one of the reasons that it's outperformed on even a greater basis than what we would see in that setup is because there is, I think, a hedge and a flight to safety for tangible asset-backed investments. And so, when you see the market being really strong alongside a precious metal market that's really strong, the equity markets and the precious metal market, I think there's something to be said about that because those don't typically happen in Canada.
QNRX.
I really think it's traders out there saying, we're playing the hype cycle, we're playing the momentum trade, but we also know we need a flight to safety with real assets that can be backed by physical value.
Anything else in that category, like real estate, physical assets?
I think just the economic backdrop that we've talked about, and I think a flight to safety for the concerns of the softening macro wage inflation that hasn't kept up. We're seeing consumers being crunched like we haven't before. I think we're finally seeing a softening of the strong consumer narrative in the data. Credit card defaults are at 11-year highs. We're seeing consumers who can't afford to buy homes. We're seeing hiring not keep up with the market. And so all of these things, I think, point to some cracks in the market. I don't think it's a coal mine and a canary. I just think we're in this period of a prolonged and delayed slowdown that maybe would have happened before had we not had some of the things happen in the marketplace over the last couple of years, some of the stimulus.
And what about Bitcoin prices?
I was going to ask crypto too. Put you on the spot here.
I'm sorry if I got on the
Because
spot.
it's at a record.
It's at a record. And there's more conversations about Bitcoin, yes, it's respond, but it also could be a flight to safety play. Do you agree with that?
I think in some ways the Bitcoin market, I think, has
QNRX.
not been proven out. In theory, is it something that I think
All right. GWH is not working there.
have we gained the trust that we have the right systems in place to make sure it's an asset we can trust? I think the general consensus is out on that. And I think the resurgence of retail traders has really piled on in 2025 and contributed to Bitcoin's recent highs. Because retail traders, even a few years ago, weren't nearly as meaningful as they are this year. And we know that retail traders pile on with momentum and they read the headlines. And we're seeing a lot of yes, exactly. And even the market performance, right? Because this high concentration of tech names is driving a great number of headlines related to them. In fact, 80% of headlines are related to these momentum stocks rather than the broader market. Same, I think, goes for Bitcoin in terms of the level of coverage that it gets in media. It gets retail investors engaged and wanting to pile on. So I think that's all been part of it.
I want to stick with retail traders because you hit the nail on the head. There's been a resurgence, if not a brand new kind of elevation for the retail traders. What would you say to somebody who's just getting their feet wet in the market right now? How do you kind of dip in without diving in?
If you're a retail trader just getting in the market right now, diversification is more important than ever. So pay real attention to indices and broader diversification versus individual stocks. in a lot of trouble with individual stocks. If you choose to be involved in individual stocks, you need to
S&P.
you need to make sure you understand.
You can see that we're going nowhere fast. Got this big range. Maybe we break out here. I don't know. We'll see.
Exactly, to protect yourself on the downside, because I think you can get caught up in the momentum trade.
You mentioned margin of safety a few times. Is there, I don't know, a formula that folks can use to determine what is an appropriate margin of safety, or what exactly are you looking for?
Okay, looking for a break above this level. S&P.
And if you're above that average or median, you're in the premium territory. If you're below that, you're in the discount territory. I would say a 10% bar on either end keeps you out of purchasing that stock, and anything greater than that, it's a good indicator that you should be smaller.
Great use of Yahoo Finance data right there. It's time now for a market take on a classic Hollywood gap show staple. Who worked that?
TDIC.
Today we are pitting the hype cycle against the cash cycle. On the left catwalk, the hype cycle dashes in, embodying the buzz phrase when a hot story like AI drives headlines, downloads, and dreams. It's a break for attention, but it's not always for profits. But then we have on the right catwalk, confidently striding in the cash cycle. Boring but beautiful loop where a company turns sales into cash, pays the bills, and still has money left over, what investors call free cash flow. It's glitter versus gain, spotlight versus spreadsheets. Mikkel, who's wearing this market better, the hype cycle or the cash cycle?
No question in my mind, the cash cycle is wearing this better. I'll go back to Warren Buffett, who is so much smarter than me, and he specifically thinks, and Buffett specifically says, you do not pay for perfection, you pay for cash flows. I think that ends that argument.
There you go. We got a few minutes left. You just started your own shop here. Tell us about some.
All right, let's see if we can't get something going here. S&P. Watch the S&P here.
Wall Street from C-suite to investment banking, buy side, sell side. How would you parlay that into what you're doing right now?
I have loved every role I've ever had in my career. I got to really understand valuation as an investment banker. I get to participate in the markets as a buyer and seller of consumer and technology stock when I worked on the buy side, which was fascinating. And then I went and did corporate turnarounds, so I got to see the other side of the table and create value rather than trade around it. And all of that has led me to a point where I can provide a level of expertise from all of these different perspectives rather than being or wearing just one of those hats.
All right, we're starting to test this 1 minute range high. See if we can't follow through with this.
Because I can imagine your time gets split up, but do you? Like, how does that work?
A fractional CFO is essentially an acting CFO for companies who may not need a full-time CFO or don't have one, and they need that level of expertise. So I might spend a day a week with them, improving their processes, doing financial analysis, modeling their company, really truly at the end of the day, helping them understand what drives value in their business and creating a roadmap to creating that value themselves and then helping them achieve it.
So you talk to companies a lot, and probably from a lot of different industries. I'm curious what they think of the current environment, both on the economic side and the market side, because we keep hearing about,
DGXX.
tariffs, inflation. What are the companies that you work with? What are they telling you?
The general consensus of the companies I'm working with right now is that they're cautiously optimistic. I think many of them are watching what's going on with tariffs, trying to do some prep work for how that's all going to shake out, anxiously looking at the economic indicators and what their consumers might be facing. But for the most part, I think everything for right now is on the rails. I'm actually working with a company in the broadband and data space right now who is growing so fast they can barely keep up with it, right? Because our country needs an infrastructure of data shelters on the way to data centers, and building that out is critical. It's just like what we're seeing in the AI race. How do you make sure you have enough supply to power the demand that's coming? So I think it's really sector specific as to how people are feeling, but generally, I think they're taking a wait and see approach, maybe a little bit of a cautious approach when it comes to hiring and spending to make sure they're being prudent. But overall, I think we're feeling okay about how the environment is right now.
I'm wondering if you could share with us, back in the day, and maybe you still do it, when you are or were screening for different industries or even individual stocks, some of the metrics that you would use to kind of filter things down.
Futures trying to push higher.
QNRX.
A little bit tighter area right in here. Range, trying to push through this area.
generating over time and the optionality that they have with the cash that they're generating.
We got one more.
QNRX.
So,
CCTG.
investor, you're not into the hype. How do you talk to someone though that is looking at this market, sees how well companies like Nvidia are doing, and says, "I need to be in on this"? Is it too late at this point?
That's a great question, and I think there's no doubt in everyone's mind that a lot of these companies are trading at premium multiples because they deserve to be at the time, right? These are the companies people are paying attention to. They're growing faster than most other companies, so they
QNRX.
times warrant a premium. I think the bigger discussion is around prudent investing as to how you place those in your portfolio when you buy and sell, and I think not getting caught up in a momentum trade and keeping the Mr. Market hat on your head to make sure that you're investing in a prudent and diligent way is the more important discussion that needs to be had.
Michaela, lovely having you once again, and I love how you were kind of breaking down the Mr. Market of Warren Buffett's idea. Good reminder that the market is always coming in each day, kind of wrapping us and saying, well, this is the price right here. Something we have to keep in mind, and we also have to keep in mind all the hype that we're seeing in the rally, which is now baked into a lot of the fundamentals that we're talking about. These stretched valuation that the S&P 500 is right now, and how diversification might be a very good thing to look into, because if you own the passive indices like the S&P 500 or the NASDAQ 100, you are not necessarily getting that diversification. So stock screening then and proper risk management and stock placement and all that good stuff is very important. So on that note, we are recapping, we're winding things down here in Stocks in Translation, but make sure you check out all our other episodes of our video podcast on the Yahoo Finance site. We're also on all your favorite podcast platforms, so be sure to like, leave a comment, and subscribe wherever you get your podcast. We will see you next time. Stocks in Translation.
MP, what's MP doing? MP. All right, breaking out. MP looks good. It's up $10 and change. MP. Rare Earths, USAR, and CRML. Those will probably be higher next week, I would think, unless there's some negotiation over the weekend.
QNRX.
Big Bear AI giving everything back, all the gains from today. Big Bear.
QNRX. VINI.
Futures pulling back. S&P.
TDIC. QNRX. QNRX.
All right, Rigetti, RGTI. That one's lower at the moment. Rigetti. They have a new 2 times short Rigetti ETF, RGTZ. RGTZ is a 2 times short Rigetti. It's moving back up. Rigetti. Stock's having an off day. We've been up every day for 10 weeks, it seems like, with a few interspersed pullbacks, but nothing of any significance. We were waiting for this 10th week. Maybe we'd see something. And we got it. We got it in spades today. It took China and the US going head to head for that to happen, but yeah.
GWH.
The Medicare open enrollment period runs from October 15th to December 7th, and it's an important time for beneficiaries to review their benefits and their coverage. Yahoo Finance senior columnist Carrie Hannon joins me now with the top 3 things we need.
GWH.
Hey, Julie, great to be here. And yes, once again, it is open enrollment season for Medicare. What's important about this is last month, everyone who's enrolled in Medicare got their annual statement, the notice of change in their plan. So whatever things were shifting around. But the truth is, 7 out of 10 people just jettison this. They don't even look at that. And that's a good reason to look at that. And so the important thing is, number one, don't do that. Examine what is changing in your plan. And number 2, once you see, where the changes are likely to be, look at what your medical needs are. What pharmaceutical drugs are you taking? What sorts of needs do you have? And how is that going to be reflected in your coverage needs? For example, if there's a certain drug that you take, is it still covered in your plan, in your Part B plan? We can get into that a little bit later, but that's very important to know. And then look for resources. It's pretty confusing. There's no question about it. So Medicare itself has a great tool called the Plan Finder. And it's a great way. You can go there. They just picked it up again recently. And so it's a good place to compare plans and make sure that your needs are covered there. Also, the Medicare Right Center has a hotline that can help you. There are other resources as well. But really, don't ignore it this year. This is really important. There are a lot of changes this year. And healthcare costs keep going up. So it's important to stay on top of it.
Quiet day on the East Coast. It's a little bit overcast, no rain though.
Yeah, Julie, this is the big story this year. It's the Part B. So Medicare has a couple of parts. There's Part A, which covers
SPY moving back down into this range. S&P back into this range as well. Feels more like we need puts than calls. Calls aren't working.
Drugs into other tiers so that your particular pharmaceutical drug may not longer be covered in your plan, and so it will cost you more. And if it is not covered in your plan, you're going to pay the full price of it. So
Low tick alert -800.
We're seeing that most plans are going to have a deductible this year, only 85% last year, and the experts I talked to expect that to ramp up, and that deductible could be as high as $615, and premiums are on the rise as well. And so by premium, some may have zero, but it could be up to $100 in monthly premiums. And so it all depends on your plan and where you live. It all comes down to do your research. This is more important than ever as healthcare costs are rising. great mantra on a great many different topics, especially this one, Carrie. Thank you. And for much more coverage, you can tune in to Decoding Retirement's Medicare Annual Enrollment Series. That starts Monday, October 13th and runs through Friday, October 17th. Americans are souring on the economy with consumer confidence near record lows. The share of consumers who think a recession is coming in the next year rising to the highest level since May. A recession, as defined by the National Bureau of Economic Research, is a significant decline in economic activity that is spread across the economy and lasts more than a few months. Collecting that data takes a while, and with the government shut down, reports are not being released from that source right now. So we want to look at some less than traditional measures to watch. Joining me now for that, Yahoo Finance personal finance reporter Emma Ackerman. Hi, Emma. So where should we be?
All right, just chop, chop, chop. Boring, I know. Not much to do. Whenever the markets get boring, you don't have to trade every single day. We're just hedged and watching.
We've seen cardboard box makers cut back on production recently. We've even seen a few mills close this year. And some of the steepest cuts since the Great Recession, actually. And one economist I spoke to noted that this is especially interesting right now, given that this slowdown is happening right before the holiday shopping season, when we've been sort of expecting to ramp up. Interesting. Okay, so that is a more serious indicator. Now I'm going to go to one I think is less serious, and this one's been around for a while, the headline indicator. In other words, that where women's skirts are trending is an indicator of the economy, right?
Yeah, so I'm a fashion person. I care about fashion history. So this one is particularly interesting to me. It's also just not true.
Come on.
Like, it is true that fashion can get more conservative in times of an economic slowdown. Palettes may get more neutral. People may buy less. Makes sense, right? But when it comes to hemlines, like the idea that shorts get shorter in times where the economy is doing well and skirts get longer when it's not doing well, that just doesn't hold up. Like right now we're seeing that mini skirts are trending, right? Harkening back to Y2K, which is when we also had a recession, right, with the dot-com bubble bursting. And longer skirts were trending pre-pandemic when the economy was doing pretty well.
Maybe it's a contrarian indicator. I don't know. We'll get to think more about this. And then sticking sort of fashion adjacent, the lipstick index is something else that folks talk about. The lipstick indicator, I guess.
Right. I think that this can hold a little bit of weight, but it's perhaps more complicated than just lipstick. And so this theory came from like post 2001. I think it was the CEO of Estee Lauder who said that essentially when the economy is in trouble, women buy lipstick as a little pick-me-up. Of course, people buy a lot of little things as a pick-me-up, whether that's lipstick, coffee, Louis, which some people have thought of as keychains, maybe a sign of a recession. But ultimately, what is a better indicator is restaurant traffic, which could be considered a little treat. When we start to see people cut back on eating out, that could be a sign that they're tightening their purse strings, and we have seen that restaurant traffic is slowed a bit.
And then finally, and this one, admittedly, I've never thought to think of this. We're in Halloween season, spooky season. Those big skeletons that I see on my neighbor's lawns, that's an indicator?
So this one came to me, and again, I was looking for sort of like fun pop culture indicators. This one came to me from a statement in Iowa, who had sort of theorized his constituents that maybe this could suggest an economic slowdown. He himself is a fan of Halloween decorations, and so he keeps an eye on how those big skeletons.
Okay. GWH trying to move higher here.
Checked out when they started going up for sale, were they selling out because they hadn't prior years. He found that they were not. Of course, this could mean a multiple.
TDIC. LFS.
Or everybody may already have their fill of skeletons and doesn't need another one. But one thing what did strike me as interesting is you can even try a Facebook group for other fans of Halloween decorations. And people were saying in the comments there that they were pulling back on Halloween spending just because things were a bit tighter this year. And of note, I did check to see if those giant skeletons were still in stock.
Well, I just did a quick search to see how much they cost. Seems like there's a pretty big range depending on whether the
LFS.
the eyes light up or they have different features, but we're talking like in the 100s up into the multiple hundreds of dollars.
Right. So this is, I mean, it's still a luxury product, right? When you say that I spoke to what he had,
TDIC.
this is sort of a thing where it's like, it's suggesting how excess money to throw around to make your kids happy. Like same thing as like, taking your kids to a theme park for a day, maybe not, if you have to include like flights and hotel and stuff like that. But it might be this sort of thing where if you buy to make your kids happy, we're seeing less of that.
Coming up, the cost of refinancing your mortgage, plus our weekly segment, Ask the App and Finance Anything. Back to the break on Mind Your Money.
GWAB.
Now you can. Mosquito bed. This heavy marble harnesses sound waves to create an invisible shield. No nasty chemicals.
TDIC.
Worked up to 130 hours on a single fast charge.
S&P continues to move lower.
For every member of your family. It's the healthy way to yell, stay away mosquitoes.
QNRX.
Special free offer from Flashforce Tactical Flashlight. With its powerful telescopic zoom, the Flashforce Tactical Flashlight gives you a super bright light visible at a distance of over 2,000 meters with 7 useful modes plus a USB rechargeable battery. Flashforce Tactical Flashlight is always ready to light up the night. And if you scan the code on your screen and order right now, we'll send you a second Flashforce Tactical Flashlight absolutely free. Hurry, this is a limited time offer. Scan the code on your screen to order now.
Say hello to the Cobb Goblin, the effortless corn strip. That's cream of the crop with its ergonomic design. Peeling corn has never been melted. Crafted from solid rust-proof stainless steel, the Cobb Goblin is built to last.
I love the Cobb Goblin. Totally changed my salad game.
I use my Cobb Goblin so much.
LFS.
More. It shuts great.
Elevate any dish with freshly shucked corn. It's quick, simple to use, and easy to clean. Scan the code for an exclusive discount.
QNRX.
If you've ever tried to clean your garlic press, you are going to love this. Introducing Great Garlic. No chunks, no squeeze, no stuck pieces. It's faster, cleaner. If you cook even a little bit, you're going to need one of these. Scan the code on your screen.
Oh man, it's just like nobody trading.
LFS.
Just sitting here moving sideways. S&P looks like it wants to keep going lower.
NDRA.
LFS.
LFS.
The National Mortgage Bankers Association, mortgage refinancing demand fell 8% in the week of October 3rd. Here with more on why the refinancing demand is tapering off, Yahoo Finance senior housing reporter Claire Boston. This is a number that tends to be volatile, right? It bounces around a lot. But why do we see that latest trend?
Definitely, Julie. So right now, I think we are kind of at the tail
LFS.
end of a refinancing wave that we have ridden for the past month or so. Mortgage rates took their big leg down from 6.7 to 6.3% about a month ago. And so there's been a lot of
LFS.
refinancing action from those people who had those 7% mortgages. Those people, generally speaking, if they wanted to refi, they probably already did it. That being said, we're still pretty much near year-to-date lows in mortgages right now. So I am curious if anyone maybe kind of missed that wave, if they will come back now, but we'll have to see.
And just like
LFS.
with mortgages, do follow rates? In other words, we've seen rates kind of tick up a little bit. Is that why we've been seeing some weakness?
Yeah, that could definitely be part of the issue. You want to make sure that you're in the money with that refinance. You're going to have rate savings that make sense to actually go ahead and pay those fees associated with refinancing. And mortgage rates have kind of been up and down in recent weeks, and so those few basis points can make a difference here. And when you look at it year over year instead of the weekly trend, we're still up double digits. So we still see an increase in refinancing versus a year ago.
All right. Some of the positions that we've been watching, LAES, that one pulled back into yesterday's price action.
LFS halted to the upside.
LFS is at it again. S&P 500, very large body candle. Not expecting much of a bounce, so I would definitely, if you haven't already done so on the bounces, you should be thinking about hedges. I have S&P hedges, Spiders hedges. Thinking that this gets resolved in the next few days.
Refinancing a mortgage allows a homeowner to trade in their existing loan for a new one with better terms, like a lower principal, interest rate, or monthly payment. And there is a cost to refinancing. Here to break down what homeowners can expect to pay, Yahoo Finance personal finance editor Lauren Grace Tarpley. So Lauren,
Low tick alert -800.
that people have to be aware of with refinancing.
Hi, Julie. Yeah, so like you just said, when you refinance your mortgage, what you're actually doing is replacing your original mortgage with a new one, which means that you do have to pay closing costs again. Refinance closing costs typically come to about 2 to 6% of the loan amount, which means if you're taking out a $400,000 loan, you can expect to pay roughly $8,000 to $24,000 in closing costs. And those can cover a variety of things from your application fee to a home appraisal, because when you refinance, you do have to get a home appraisal again to get the updated value of your home. Also, because you're taking out a new mortgage, you do have to open a new escrow account. And this is the account where you put money for things like your homeowner's insurance and your property taxes. Depending on your lender, they may require you to put 1 to 2 months of homeowners insurance and property tax money into this new escrow account, along with what you're moving over from your old one. So that's an expense you should be prepared for.
And what are some of the factors that affect that cost of refinancing?
Yeah, the most obvious one is probably the loan amount, how much you're borrowing. For example, if the lender charges a 1% origination fee, 1% of $500,000 is going to be more than 1% of $400,000. Another one is location. Your local government can play a part in what you.
The put flies I closed.
For example, property taxes vary depending on where you live. You'll also pay reporting fees, which is the fee that covers putting your loan details and documents into the public record, and that varies depending on your state or local government. Another one is your credit score, and I'll get into this a little bit more, but generally, like the higher your credit score, or the better your overall finances, the better terms a lender may offer you. Another one is your home equity. If you refinance into a conventional loan and you don't have 20%,
I took the put flies off. They're not working. We're past the lower strike. So I'll close that out.
LFS may resume in less than.
Puts are working a lot better.
finally, the lender and something called mortgage lender fees. There's some closing
Puts are working better anyway, so S&P continues to move lower. New lows of the day.
Low ticker minus 800.
And every lender charges different fees for this. So one might charge a lower origination fee than another. One might just not charge an application fee at all. So the lender you choose will also play a role in how much you pay in closing costs.
And sir, do you have any control over these costs? Are there any ways to lower them?
Yeah, absolutely.
LFS may res in 10 seconds.
That you can do. Going back to that credit score, you can work on improving that by making sure you're making all of your bill payments on time and paying down debt. Because once again, the stronger your financial profile, the better terms a lender tends to offer you.
LFS.
You should also compare mortgage
LFS.
finance rates among different lenders. So you can refinance with the same lender you use, but you don't have to. So it's good to compare three or
TDIC.
4 different companies to see which ones offer the lowest refinance rates, which ones offer the lowest mortgage lender fees, and see which will offer you the best combination of those. Another one is that you can negotiate on closing costs, especially if you have a high credit score and
LFS.
good income. Or good
I imagine this drop today screwed up a lot of people's previous trading thesis. Basically, we felt like we could see another. We could see some weakness given what we were looking at on junk bonds. Junk bonds giving us a sell signal earlier in the week, as previously mentioned. So taking profits into strength starting off around Tuesday, Monday, Tuesday, where it felt like we should tread with a little
Low ticker
caution.
minus 800.
Oh, here we go. Dropping off a little bit more. I have SPY puts the 660, 650.
Extreme low ticker.
Okay, we got more selling here. LFS is going. Okay.
UBIX. UBXY. VXX. VIXY.
I'm 50. How do I find my magic retirement number to retire how I want? How much money will I need to have saved? This is a great question, Carrie. How do people plan for this?
It is a super question, and it would be so awesome if there was only one answer. The problem is, there's not. Of the Gen Xers I've talked to for the book, about a quarter of them said they thought
S&P still moving lower.
would be the right amount of money, that magic number for them to retire. But you know what, Julie? They're guessing. Most people do not take the time to actually run the numbers, as we call it. And so, you need to grab a retirement calculator. There are a lot of really great ones out there. AARP has one, Schwab. Most of the
LFS
financial
halted
services
down.
companies have these, and they're only as good as the numbers you input into these calculators. But you're looking at everything from, what are your retirement
UBIX.
savings? What are your savings outside of retirement? What do you expect
UBXY.
from Social Security? There's
VXX.
lots of different retirement income sources that you need to think about, and where you live, what your health is, how long you're going to live. I mean, it's a lot of information, but you need to take the time to do it. One quick way to think about it, though, often I hear financial advisors say, think about having 10 times your annual salary when you're age 67 as a good number to kind of float around in your head.
UBIX.
That's how much you might want to save. If you're a globetrotter, you might
VXX.
your annual income at 67 is the rough age, but you could say 65. That's what I play around with, but there is no magic number. I'll tell you that. It's always going to be shifting.
Okay, no easy answer to that one. Another viewer question says, I'm still in my 40s and wondering how should I think about Social Security?
Yikes. This is hot button, right? I mean, Social Security is problematic.
Mhm.
A lot of stress and fretting and anxiety isn't going to be here. Most financial advisors I spoke to, when you're specifically looking at the Gen Xers, which are 44 to 60 in age range, they run their scenarios for them, actually taking Social Security out of the equation altogether, so that they're looking at their financial future without it. But in reality, and then they also may run it with if there's a cut in the benefit by 20% or something, which is maybe possible. In my gut, I think Social Security is going to be there for you. But again, it's probably wise to run your numbers thinking if it might be a little less than you anticipated. But my gut sense is it will be there for you.
Yes, but if you plan without it, then it's just a bonus, which is a good way to think about it probably. Here's our next question. I turned 60 soon.
Okay.
Think about retirement. What's the biggest expense?
Nice little bounce so far. Looking for bear flags. The markets are weak. I don't think institutions are going to bite at this point. I think they're going to wait for this to pull back more close to the 50-day. That's my guess. S&P equal weight index. Equal weight is still dropping off here. So my guess is that we're going to pull back into next week, unless there's some news over the weekend. Like 50 days right there. 50 days right below. That'd be a good 3.5%, 4% pullback.
IZEA.
TDIC.
Low ticker at minus 800.
IZEA halted to the upside.
Yes. $85.
And it's probably going to be backloaded. In other words, it could potentially be towards the end of your retirement. So you've got to make sure you sort of parse it out.
Yeah, Julie, those last couple of years are really the killers. That's exactly when people
TDIC.
start to have these costs that they hadn't planned for, assisted living care, that kind of thing. So
IZEA.
it really is something we need to start focusing on it and have these discussions early.
Very great, as always. Catch up with you. Thank you.
Thanks, Julie.
That's it for Mind Your Money. Scan the QR code below, sign up for the Mind Your Money newsletter, and stay tuned for market domination. That's next.
LFS may resume in less than a minute.
I know it's good. What's that? What is CashNetUSA.com? I can apply minutes of food. Saving the day is easy. CashNet USA. When you need money fast, you will. Go to CashNetUSA.com to apply for the money you need now.
LFS may res in 10 seconds.
All right, another little range here. Another little range starting to build. 50 days down here. I'm thinking we're going to come down to the 50-day.
And UA Alpha.
Scan the code on your screen now. Enter console enter today.
All right, nice little bounce. Nice little bounce there. Netflix, looking for that bounce on Netflix. Nothing yet.
IZ eating may resume in less than a minute.
Hello and welcome to Market Domination. I'm Josh Lipton, live from our NYC headquarters. The trade war is back. Wall Street.
What's Oracle doing?
Massive increase in tariffs on China's imports, signaling inflation on security. We're going more in depth with the market reaction right now. Just an hour ago.
Oracle.
YANG.
Major average down near 636 points. The S&P 500 broad gauge down 2%. Second Nasdaq is down 2.7%. Let's welcome here data and markets editor Jared Woodbury to break down the news. Jared, what
IZEA may rise in 10 seconds.
There's a lot of red. We haven't had a day like this, almost 2% down the S&P 500 since April. And if you remember, that was the post-liberation day
Low tick alert -800.
Okay, rolling over one more time. S&P.
YANG.
I'm going to dial this down to a day chart, and we're going to go straight to the Dow Industrials. Down a little bit less, about 1.4%. Spent a little time in the green, but that was wiped out very quickly on the news. Nasdaq Composite taking it the worst. Tech is down by the most today as far as the sector action is concerned at the lows, and it is down 2.77%.
CRML. Trying to turn the corner. USAR. Both of those off the highs. MP Materials. Same thing. Oklo. Fade from the highs. Big pop today on Oklo.
Want to show you what's happening in volatility land. Have not seen a VIX with a 20 handle in quite some time. Here's a 3-month chart going back. You can see almost at about the level that we saw around August 1st. That was another big day. Nowhere near, though, the levels that we saw in the post-Liberation Day sell-off when we had intraday, I think, north of 60. So nothing approaching that right now. Although it's a little bit of concern for investors. We haven't seen anything like this.
LFS may rise in 10 seconds.
Here is the sector action. XLP, that is consumer staples, kind of defensive. That's the only thing in the green, and just barely at that. As I said, tech taking it on the chin, down 3.09%. Energy, the second worst off, and then consumer discretionary down more than 2%.
Oklo with a bounce. Broadcom. Yeah, stocks are off. Not surprising. The index is off nearly 2%.
LFS.
Almost all of that red. Nike down 4%, a lot of China exposure. And let's just jump to the China leaderboard here, where you can see Alibaba down 8%, Pinduoduo down 5%, Baidu down 8%, and the list goes on. So a lot of carnage within tech. Here's a quick look at the semiconductors, a lot of dark red, and all you got to do is judge by the color on software as well. Not as much dark red, but some of those names experiencing some pretty sharp losses here. Shopify down 7%, SAP down 3%.
LFS.
Low tick alert -800.
S&P 500. My guess is we're going to test the 50-day.
frustrated, Jeff. He's threatening these massive tariff hikes on China, big threats. No specifics yet, Jeff.
UVIX still going here. It's at the 50-day.
Well, as Jared mentioned, we haven't had a 2% sell-off in close to 6 months. It's been almost a straight move higher off of the Liberation Day lows. And investors were looking for an excuse to sell, and this is as good an excuse as any. This calls into question the President Trump and President Xi meeting in Korea at the end of the month. And if the truce is not extended by November 10th, tariffs could move back up to 145%. So that certainly is a real risk. I think that some of this volatility and uncertainty will bleed into next week, which could create more downward pressure in markets. But ultimately, we are buyers of this debt because when you look out to 2026, you have a very powerful policy mix of Fed rate cuts and the peak stimulus from the One Big Beautiful Bill, which is a policy mix that you only see out of recessions.
So you're buying on this dip, Jeff. What would make you question that decision? What would make you question that strategy?
Well, if we start to get closer to November 10th and it doesn't look like things are thawing between the U.S. and China, that means that there is a real risk for dramatic escalation of trade tensions. And let's not forget, even though Chinese imports are down 30% on a year-on-year basis, it's still the fourth largest trading partner for the U.S. So that will cause a lot of disruptions and it brings back a lot of that anxiety that we saw in March and early April.
So I'm curious, so you're buying this
Another bear flag.
When you saw that headline, though, Jeff, and it looks like all right, trade tensions ratchet back up, tariff threats ratchet back up, ratchet back up between Trump and Xi. Does it make you reconsider all, Jeff, how and where you want to commit that one?
It doesn't. And given the policy mix, as I mentioned earlier, and the fact that earnings expectations are continuing to move higher, not only for 2025, but for 2026, I think you want to be exposed to the more cyclical areas of the market. We like consumer discretionary. A lot of that key fiscal impulse next year is going to be going through higher tax refunds in the first half of 2026. That's going to support the consumer and consumer discretionary more broadly. We like financials. We're going to get a steeper yield curve as the Fed continues to cut. Some looser financing conditions. So we think loan activity is going to pick up. More M&A activity, less regulation. We also like IT. We think that IT CapEx story is alive and well and will continue into 2026. So what has been working may not be working today, but we think there will be a continuation of that next year.
What about, Jeff, I had investors come on, maybe more on the skeptical side, who said, listen, big move off that April low. Valuations are looking too stretched. I mean, we heard Jay Powell himself seemed to suggest. He said, we're looking at a big stretch here. What do you say to those? Hey, listen, they would, I think, acknowledge valuation is on market timing.
All right, bringing that bear flag. Oh, man, this is so boring. We had a nice drop early, so everybody's guessing the potential for a bounce. Just feels very heavy. We could hear some negotiation over the weekend and change everything. So the most I'd be doing is hedging at the moment. I took the put fly off. Wasn't working. I got out for $85 even. So basically a wash on that trade. Should have done a little bit wider and a little bit lower in hindsight, obviously. Straight puts and put verticals are working. VIX is a bit high, so you might want to check UVIX.
Well, I think the cost of not investing are greater than the cost of investing at this point. It could be a winner-take-all type of environment. And the investor sentiment has really kind of looked through all of that free cash flow generation that's being thrown into that AI CapEx cycle. So until there are tangible signs that there is overinvestment and their payoff isn't going to happen, I don't think investors are going to punish the hyperscalers that are investing in
as an investor, you're looking through that, but elaborate on that for me.
We are looking through it. The markets were looking through it until today's news on China. Unfortunately, we don't have the catalyst of a debt ceiling agreement that
We've had 10 weeks up. Not surprised to see a 2 to 3% pullback or more. Presently, we're off what, 2%? A little bit more than 2%. These bounces give you an opportunity to buy puts. All right, what's GE doing? GE.
Low ticker alert -800. Extreme low ticker alert.
Are you ready to master the markets and, dare I say, become a better investor in the process? Yahoo Finance has you covered with our new full suite of original podcast content. Whether you're a seasoned investor picking up new trends or you're just starting your financial journey, we offer invaluable market insights and strategies from some of the most influential minds on Wall Street and the boardroom. We're also teaming with some of the biggest rising stars.
All right, we're making new lows here. Futures making new lows. Okay, dropping off here.
Welcome to the big idea. Welcome to Yahoo Finance Sports Report. Welcome to Word of Money from Wall Street to Main Street to the C-suite. We're your daily lifeline. Because behind every great investor is Yahoo Finance. Join us on YahooFinance.com, the Yahoo Finance app, your favorite streaming platform, and wherever you get your podcasts.
From check to check in. Download the WSOP free-to-play app for a chance to win a World Series of Poker vacation for two in Vegas.
Okay, we got a little bit more than 47 minutes to go.
LFS.
Found out you're related to your spouse? There's an article for that. It's just the beginning. Get all kinds of deliciousness delivered in an hour or less at ethical.com. See website podcast restrictions.
How do you know it's the most important tool for your adult and sexually healthy? Perform the talent test.
Oh, man.
Sorry to break it to you. Every guy will experience sexual decline.
Looks like another bear flag coming.
CONI.
Stick around because I'm going to tell you about an amazing offer just for our TV audience. Or, if you really can't wait, you scan the code on your screen now.
LFS.
Let me just tell you how great it is to have this flashlight. It's literally like no other flashlight I've ever had. The one hiding LED is bright, super bright. You can see it up to 2,000 meters away. It's built in lithium battery, charges up with USB-C, and it even has a level meter on the side to show you just how much juice you have left. The features just keep going. The telescopic system gives you a range of lighting options to light up the entire area, or spotlight.
CONI. IZEA.
Which is really helpful for emergency situations. The IPX4 tonight makes it great for outdoor adventures. I love having one around my house, and of course, I keep one in my glove box too. You can even use it as a power bank to charge your phone. And it's only available for a limited time, so scan the code on your screen right now to get your Flash Force tactical flashlight today. Hey, Blake Anderson here to show you the Spicer Shredder and Sanity Saver that spins veggies and more.
Boring, slow drift. After the more significant part of this drop earlier. We just rolled over and continue to move. So if you haven't done anything yet, probably best to just wait for the next bounce if you're thinking about hedges, or maybe buy some UBIX calls, or maybe better off not doing anything. Just wait until Monday, Tuesday. This could all clear by Monday, Tuesday. Earnings have been good. We got banks starting to report soon. JP Morgan reports next week, Tuesday, I believe, right? Bank of America. When do they report? Bank of America reports on Wednesday. Goldman Sachs, I believe, on Tuesday as well. JP Morgan and Goldman report on Tuesday. Let's see. Wells Fargo, Tuesday. What about Morgan Stanley? Wednesday. Okay.
Dan, thank you. Appreciate it. Well, while the government shutdown persists, the U.S. Bureau of Labor Statistics is calling back workers in order to get September's Consumer Price Index report. BLS is set to release the data on the morning of October 24th. Here with more on the significance of this move, we have William Beach, Fiscal Lab on Capitol Hill Executive Director and former Bureau of Labor Statistics Commissioner. Bill, good to see you again. So the government shutdown continues, but BLS being recalled to be able to finish the September CPI report.
SOXS.
I'm curious, can you walk us through the sort of consumer implications of this? You know, what does this mean for Social Security checks, for COLA announcements, for payments, Bill?
Yeah, well, it's good to see you again, Josh, and glad to be talking about BLS. And looks like we're going to get a CPI report for September. I'm kind of surprised with everybody else. So,
RGTZ moving higher.
COLA adjustment recommendation from BLS. BLS makes that every year to the Social Security Administrator. Is due on November 1st. It is composed of the average of the CPI for July, August, and September. Well, we've got July and August. It's in the bank, but we don't have September. So I guess the administration really wants to make sure.
Rigetti, RGTI, Rigetti, TI, RGTI. It's been trending. Rigetti's been trending. RGTZ is a 2 times short. RGTZ. RGTZ is higher. That's short Rigetti. S&P, more bear flags, S&P.
There's another customer for this, maybe even more important, and that is the FOMC, Federal Reserve Board's Open Market Committee. They're going to be meeting later this month, as all your viewers know. I'm sure you've told them many times. And they'll be really happy to get a fresh CPI report, which I guess they didn't really expect. So there are 2 big customers there, and I think we're all to the betterment by having that report out.
And it sounds like, Bill, based on that answer, you would have full confidence in this CPI report. I only asked, Bill, because I just wondered whether you would have any questions about it, given, it's taking place during a government shutdown. And I guess my question to you is, does that in any way, Bill, does it increase risks of errors or mistakes being made?
Yeah, I don't think so. I mean, first off, it was fully collected before the shutdown. That's really important. And then the same staff that's been doing this for a year is going to be doing the processing of the data. That's all going to be up and running and writing the report. And boy, I tell you what, they're going to be doubly checking this report because everybody is going to ask the same question you asked. Now, we just shift for a moment. We're not collecting any data right now, any price data for October. And here we are, October, what's the date? 10th. And I think that maybe there's a good chance we will miss the October CPI because you can't go too many more days before you just don't have enough days of collecting data on the hundreds and hundreds of products.
S&P, bear flags.
But I have full confidence that the CPI report will be gold standard.
So let me ask you, Bill, if you did miss the October CPI,
ATHD.
and maybe even November, what are the ripple effects of that for both consumers and investors that are listening right now?
Well, I think we just lose track of where prices are going. I mean, there are a lot of private sector price series. We have the Million Prices Project. We have all of these, but everybody calibrates to the CPI because that's the standard. That's kind of like your spinal column. You can lose a rib or two, but you know, if you've got your spinal column, you're okay.
Netflix starting to show signs of short covering going into the last 30 minutes of the day.
GDIC may rise in 10 seconds.
CPI is going to be what those prices are going to be for those for products or for wages or for any of the elements that go into those calculations. A lot of important decisions need to be made by the Federal Reserve and other banks around the world who use the American or U.S. CPI for calculation purposes.
TTIC.
Josh, we're not going to get the jobs report for September. That's not.
All right. Let's see what CNBC has to say. I'm going to tune into them. Hope everyone's having a good day. It is a little soft. The markets did pull back 2%. Not surprising. We've been looking for this. Finally starting to get it.
TTIC at the AM.
Okay.
Really have much exposure to the large banks, do you?
No, I haven't. I play it via Apollo and KKR, which I started buying really around the April tariff tantrum. And so I'll continue to add to those. I would rather own those. I think they have a lot of flexibility, especially right now with the negativity. I may be adding to them on Monday, Adam, if we do find a bottom.
I disagree. I think it's interesting. I mean, you only have 38 minutes to add them now, so
Yeah. Well, I mean, those stocks. It's interesting that you've chosen to express your view of financials through the prism of some of the alts and PE stocks, the ones that have really been in the eye of the storm. The KKR is down here 15% over a month. Apollo down just about 11%. Bryn.
I see.
Yeah, this is when you want to buy them. And so these instead of buying small caps, think about Apollo and KKR. They buy businesses. And they want to buy them for X and sell them for X plus. And so they're very economically sensitive. And so as rates are coming down, that's very positive. On top of that, I think with the deregulation that we'll hopefully get next year, that benefits not only, I think, the regional banks, but also these managers. But from an economic perspective, if you look at the regional banks, we're worried about the lower end consumer. I think we have like an economic scare right now, and these companies will sell off on that. I just think GDP is going to continue to be strong next year. And so this is why I would rather add to these names on weakness, sell them on strength. And so this is where, these set up to be potentially good ads for me next week.
last question. Here's what I want next week. I want you want to make one. I want Diamond to say something negative about the market because that makes it go up. I want Monahan to say something positive because that makes it go up. That's what you're looking for. You don't want Jamie to get bullish because he's been bearish for 2 years while his stock and the market is ripped. So let's make sure he stays negative.
All right, we'll leave it there. Anna, thanks. Court, thanks. Bryn, we'll see you soon. We're talking here. We're just getting started here. Coming up next, Mohamed El-Erian. He joins us. We'll get his take on the sell-off, these trade tensions with China. Some of the Fed commentary over the last few days has been very interesting. And now we're down allegedly to the final five of who could be the next chair of the Fed. We'll ask him about everything.
Call credits, selling call credits overhead. All right.
at the AM.
A lot of these stocks are really expensive up here. IONQ, Oracle, Snap, 94%. When do they report? When did they report? Snap. When did they report? SNAP. Snap.
Low ticker alert -800.
November 5th.
VIXY. UVXY. TSLQ.
Okay, Snap. Let's see. November 5th, huh?
At the AM.
November 7th. What about those? Anybody selling these? Nope. November
FEAM.
21st.
TSLQ.
Another cheap. Snap. Yeah, pass on that one. Snap. IBM.
UVIX. UVXY. VXX. VIXY.
Google. LAC. AMD. Well, I haven't looked at AMD. What's AMD doing? AMD. Okay, looks like we're turning lower for AMD. When do they report? AMD.
UVIX. UVXY.
AMD. November 4th. Okay. AMD 450.
TSLQ.
AMD. Let's see what AMD looks like. All right, so 270 would be
UVIX.
10% from here.
QUP halted.
10%.
UVXY.
Low ticker alert -800.
All right, we'll continue to move lower.
RGTZ.
Well, it's an ugly day for the NASDAQ. You know that by now. We're looking at a 3% decline. We're right there. I mean, the Dow's down 750, but the NASDAQ has certainly sold off harder. Big declines in chip stocks today and some of the mega caps, too. It's all about those trade tensions with China renewing themselves today based on a presidential social media post. So we'll continue to follow that. We'll bring in Mohamed El-Erian now. He's Allianz Chief Economic Advisor. It's good to have you. Thanks for joining us as we try and take our viewers through these last 30 minutes or so of this sell-off today. What do you think about it?
Thanks, Scott. I'm not surprised at all. I'm not surprised to what's happening in equities, what's happening in the bond market.
Yeah, I don't think anybody's surprised. 10 weeks up.
Because we've had two bits of news today that challenge something that was deeply rooted in the marketplace, which is that growth is sound, inflation is stable, the Fed is going to continue cutting, and policy volatility, the worst of it is behind us. So it doesn't surprise me. The social media post by President Trump is that phrase, massive increase in tariffs. And don't forget, we're talking not just about direct tariffs, but also secondary tariffs. So there is quite a big scope. And this comes at a time when the market assumed that things were fine, and by November we would have a friendly announcement. And then the second one that's flying under the radar screen, but it matters, the second announcement is the layoffs are started, which questions the notion that this is just a regular shutdown, where once we reopen, everything will be fine and the markets will just look through it. So it's two bits of news, a big bit of news and a secondary bit of news that is causing us to question what has been very friendly assumptions about the environment in which the stock market has gone from record to record.
So you really think that maybe this is the first showing itself of the shutdown, which the market had all but ignored up until today, if in fact it is, as you suggest, thinking about the layoffs that, were announced via social media posts from the head of OMB, as well as this escalation with China?
I do, because the market has seen this movie before, the shutdown movie. We thought we knew how it ends. It ends by people getting paid for what they've missed and no layoffs. And now suddenly there is a higher probability, it's not overwhelming, but there's a higher probability of permanent layoffs. Now you're dealing with the bit of the economy, the K-shaped economy that's already vulnerable. So this is another development that is pulling the rug from a working assumption that was actually a very comforting working assumption that this is the same movie, we've seen it, we know exactly what happens.
No, but you talked about these assumptions earlier where you almost suggest that the notion that growth is sound, that's the word you used, and that the Fed is going to cut more, aren't based in reality. I mean, the growth is sound. The economy is sound. I mean, we're according to Atlanta Fed 3.8, and we know the Fed's going to cut more, Mohammed, don't we?
So first, I think the economy is sound. I want to argue this is distributional effects, but you don't want to push the lower segments of the population too far. Why is it sound? Because of AI. AI has a significant direct and indirect effect on growth. The direct effect is all the investment in the enablers. The indirect effect is through the wealth. The fact that people feel wealthier and may spend more. So this AI engine will continue. What is more in doubt is the consumption side, which normally has been a big driver, and particularly the consumption by lower income households. But this is a sound economy, don't get me wrong. It's certainly better than anywhere else that I look at, and that includes Europe and China.
Let me ask you about the so-called Final Five, which we believe is left out of a larger pool of potential successors for Chair
Got 27 minutes to go. Pretty quiet.
Reader, Warsh, Hassett. We'll show you a wall here that we've created to capture that as this process appears to be winding itself closer to the finish line. What do you make of that group? If that is in fact the last five before we find out an actual name?
They are a very solid five. All of them had experience. All of them have an amount of economic training that is significant. I'm comfortable with the five. I have preferences among the five, but any of the five would be a very credible replacement for Chair Powell.
I mean, do tell, right? You don't shy away from expressing your opinions. Who do you think would be best?
So I think of the five, three dominate. Two that I know personally, a third person that I got to know through his many speeches. So the two that I know personally are Rick Rieder and Kevin Walsh. They're both incredibly capable individuals and would be a very good Fed chair.
Imagine Rick Rieder as a Fed president.
In recent years, and has been much more open about how he's thinking, and he would also make a really credible Fed chair. The other two, I simply know less about their views on monetary policy than I do the first three.
Which one do you think would be best for the markets that investors would say, okay, that this speaks our language, so to speak?
The two that know the markets best, and that is Rick Rieder and Kevin Walsh. They are familiar with market developments, they're interested, they have a really good feel for technicals.
Low ticker at -800.
You don't have a really good sense for market technicals, which is really important. So those two are known commodities that have a significant amount of market and economic expertise.
Mohammed, we'll see you soon. Thank you. Appreciate it. As always, Mohammed El-Erian.
Thanks, Scott.
All right. Be well. Up next, 314's Warren Pies. He talks about this sell-off today. The Dow down almost 770 points.
Wow. S&P is still dropping here.
We're back up.
TSLQ. LTZ.
GWH.
GWH.
FEAM.
UVIX. UVXY. NVD.
We got 24 minutes to go for the regular session. Bears finally getting a day in the sun. All right, we're almost going to we're going to hit the 50-day at this rate. Headed towards the 50-day moving average.
RGTZ. UVIX.
Low
NVD.
tick alert -800.
GWH.
Okay, SPY. I have the 660, 650s. I bought some more for October 31st, 660, 650. I might take half of these off. If we continue to flush, I'll take half of these off and then hold some for Monday.
NVD.
Or maybe I'll sell all of these and keep the S&P puts 6570, 6575. S&P 6575. Wow, we're already there. Shit, I got to take these off now. 6570s. Okay, I got to take these off.
Extreme low tick alert.
Okay, I'm right at that level now.
UVIX. VXX.
Okay, just took some 6570s off in the money.
RGTZ. NVD. TSDD. UVXY.
Wow.
YDKG halted down. TSLQ.
SPY still going.
TDIC may res in 10 seconds. UVIX. PLTZ. VXX. RGTZ.
Okay, where are we? S&P. Wow.
CCTG.
All right, let's take a look at this real quick. S&P.
TDIC halted down.
Okay, so we said 65.85. Where are we right now? 65.65. All right. Dealers start selling futures down below this level.
20 minutes to go. It's 8:20 or so. Every sector within the S&P but staples is red today. Technology obviously is the worst, down 3.5%. But declines in discretionary stocks and energy, those cyclical areas of the market are certainly getting hit. Industrials are down some 2% as we track these final moments of this trade for this week. Warren Pye,
SPY.
14 Research's co-founder.
All negative gamma below 668.
3.3% down on the NASDAQ. Is that what catches your eye?
This is the SPY. Everything below 670 is negative.
I mean, that's where the leadership's been, so it's not surprising to see that's what's giving the most back. You know, when I, it's a little bit of a stressful day, I guess, but when I zoom out and look at the market where we've come from, we've gone now 119 trading days in a row without a 3% pullback on the S&P 500, and that's the seventh.
Yeah, everybody's on the same page, seems like.
Historically, going all the way back to the 1950s. And when you look at those streaks, we've returned like 28% before today. And that's the strongest performance we've seen within any of those streaks.
SPY.
So when I think about it, this is just, I think, a needed correction and a needed pullback.
Yep.
Something we've been waiting for. Sentiment's been extreme. Talks of bubbles, talks of doubling between now and March of next year, and analogs to 1999. This is healthy. We're in this window where you'd expect it in October, and that's how we're approaching it as of now, as a healthy pullback.
But I mean, sometimes you look at these things and it sounds like this is what you're suggesting is we were overbought, we were due for a pullback, and now we're getting it. And sometimes you can't point to an actual catalyst that would send you into that sort of atmosphere.
Sure you can. Junk bonds.
Today is we have
You heard what Wapner just said?
a renewal of tensions between the United States and China. We're talking about the possibility of more tariffs, not less. The market had sort of been anesthetized to the whole issue because we haven't really talked about it all that much, and it figured this too shall pass, and we'll get on to talking about rate cuts and positive earnings. But now we have a serious concern to think about, depending on what the president does and if he does it.
Yeah, I mean, it's a concern. I've been a little bit in recent weeks talking to clients and saying, we were so concerned about tariffs, and tariffs are a real drag, and we didn't have a full taco from the first round of tariffs, really, and so we've expected somewhat of a fiscal drag. Our recommendation for clients is to keep a full equity position and then have an overweight bond position, and in fact have a skew towards a little bit of duration. And you can see it on a day like this, because I think that if we're gonna have another flare up in these tariff negotiations or some kind of trade war, I think that bonds will end up being the place that you want to be, because it's going to manifest itself as a growth scare. So that's been the way we're playing it. I think we've gone through this, and ultimately we've already tested the limits of what Trump can tolerate. And I don't think I think the taco trade is still with us. Yes, there could be a little bit of danger in saying that, but if we get a little bit more weakness in this October period, I think you'll see a capitulation on his part, and ultimately we'll get back to where we were, a few weeks ago, and it's just going to be a nice sentiment reset. That's how I interpret it.
Okay. I mean, how are you feeling, though, about risk around the AI trade, which I thought Adam Parker put very well? We have to be really clear. We're not just talking about the mega caps. This trade has metastasized, so to speak, to utilities, a usually boring area of the market that you go to when a safety trade is on, or like a yield proxy. Now we're treating them as the new growth stocks because of AI. And then you'd say, well, industrial stocks are at record highs. Why? Because of the larger ones that are leveraged more heavily to the AI trade too. So that just brings the risk factor up, doesn't it, when you have so many different stocks under the umbrella of a single trade?
Yeah, I mean, the economy is very dependent on AI. I think everybody knows that at this point in time. And what we do at 314, I work with Fernando, my partner, and he is deep in the AI world. And so we're constantly monitoring things like chip demand, and chip pricing.
All right, S&P starting to see some short covering.
Everything we can see, I think that this AI demand and the AI story is.
I don't know, maybe some calls for next week out of the money. Maybe we snap back or do nothing. We could see a rally off of this level. We're right above the 50-day moving average. S&P, if you use I'm sure if you use the exponential moving average, that works.
But yeah, you're gonna need AI to do that, and then you're gonna need some participation from the rest of the economy. That's where I think the rate cut story comes in. Ultimately, is that if we have rates restricting the rest of the economy, and the hope is that this cut cycle will loosen up some of those other areas. But I don't see anything too real. I know everyone's nervous about the 99 analog, but I'm not there yet. I don't think that the AI trade has. I don't think it's like 7th inning on it or 8th inning on it. I think we're still in the middle innings.
Let's finish on gold, if we could, because we were just below 4K earlier. Like halftime, I checked it, we're at 39.99 or something like that. And we've had a bid back. There it is. You can see the intraday go right back up to 4,032. We, of course, got over 4,000 for the very first time this week. And there are a lot of forecasts out there that we're going much higher from here. I'm wondering what you make of it. And since you talked about how you're advising your clients in other areas, what are you telling them about this?
So yeah, you're hearing the debasement everywhere. You know, I don't want to take total credit for that, but we've been talking about a shift to a debasement mindset for some time now at 314 Research. I think that prior coming out of the GFC, the worry was deflation, protection of principal, and we're seeing a societal shift, investor shift to a debasement mindset, and that's protecting purchasing power. I think gold is the biggest beneficiary. We've been on this trade since we saw the Russia-Ukraine war start.
What's Palantir doing?
Palantir
Palantir.
buying gold up. That was the first leg of this trade. Our target for the year was 3,500, and it's blown past it. Our opinion is that this is a new secular bull market fueled by this debasement mindset. And when you're in a gold secular bull market, gold can do nothing for years on end, decades, and then it can explode higher for 8 or 10 years. We're in an explode higher phase, and you don't want to call a top. This is not a top on gold. We will be going higher. My view is if you compare it to old secular bull markets for gold, 5,000 is probably in the bag over the next couple of years. And I think all roads, a lot of the things we're worried about societally and globally lead back to gold. So, and it's really interesting to see its strength on a day like this. I think it just reinforces the bullishness.
Yeah, thanks for helping us dig into these markets today. Warren, we'll talk to you soon.
Thanks for having me.
Warren Flies up next. The green arrows in today's sea of red. Yes, there are some things that are working today. We'll show you where next.
IZEA.
TDIC.
All right.
QNRX.
YDKG may resume in less than a minute.
All right, just looking at some potential positions to sell covered calls on. Let's see.
ENTX.
Since we are pulling back. Okay.
IZEA. YDKG may res in 10 seconds. IZEA.
All right, I sold some covered calls on my UNH position.
Low tickler -800.
I sold the 25s. I sold 10 of those for $150. Wow. I don't know about that. Would love to see Bitcoin bounce. Okay. All right, what's S&P doing? S&P, a little rollover there. All right, we got 9 minutes to go.
All right, with 10 from the bell, let's get back now to Mackenzie Sagalos for the look at the key stocks that she's watching. Tell us what you see here.
Okay, Scott, let's take a look at the names in the green today. Despite market pressure, shares of PepsiCo higher and leading the S&P. UBS raising its price target on the Frito-Lay and Gatorade owner, pointing to innovation and cost cutting as reasons for its confidence. And then auto players, AutoZone and O'Reilly are bouncing back, but both are still negative for the week. And shares of AbbVie are higher as Piper Sandler raised its price target and reiterated an overweight rating. The firm said AbbVie is one of the few among its peers that offers a trifecta of revenue growth, asset durability, and M&A bandwidth. And lately, we're seeing strength in biotech overall as well, Scott.
All right, Mac, thank you. Mackenzie Sagalos coming up next. We count you down to the bell. The final moments of a pretty rough trading day. We've got movers today, tech, consumer stocks, and much more. We'll document it all in the Market Zone, which is next.
All right, I'm probably going to do a long iron condor on the markets as a strangle with the extra wings. 67.05. And on the put side, below the 50-day, 65.50. 65.45.
TDIC.
Low tick alert minus 800.
YDKG may resume in less than a minute. CCHH.
TDIC. CCHH.
Okay, it took a long iron condor for next week.
IZEA.
CCHH. IZEA.
YDKG may res in 10 seconds. SQQQ. NAMS.
IZEA. TDIC.
Extreme low tick alert.
IZEA.
Low tick alert minus 800.
SOXS. NVD.
IZEA. TDIC.
NAMS.
We are now in the closing bell market. Market Zone. PNC's Young Yuma here to break down these crucial moments of the trading day. Plus, Steve Kovac has more on the sell-off in big tech today, and Courtney Reagan is watching consumer discretionary names for us. Steve, why don't you tell us what we've been telling our viewers? This is really bad in tech today.
Yeah, it's really bad. And let me pick out a few specific names for you here, Scott. No one with more tariff exposure than Apple, of course. We've been talking about that much of the year. Down about 3.5% as we go into the close. Apple's already expecting about $1 billion hit to revenue in the September quarter due to tariffs. And that's even after it won some relief from the president after CEO Tim Cook gave him a trophy and promised to spend $600 billion within the U.S. over the next 4 years. Now, that even increased the production in India, which has a lower tariff rate, but Apple is still very dependent on China. So an increase in tariffs there will put more pressure on Apple's margins and perhaps accelerate its supply chain diversification. Now let's move over to Qualcomm, because that's down more than 7% today, not just because of these tariff concerns, but also China opening an antitrust.
Oracle taking out the low here. Oracle.
Amazon down nearly 5%. Retail business heavily reliant on Chinese imports. Of course, sellers have been feeling the pressure most of the year. And related to that, all that retail stuff, digital ads and consumer businesses, Alphabet, it's off about 2%. Meta down nearly 4%. Currently at its lowest level of the day, Scott. It's just worse from there.
Okay. Yep. Steve, thank you. Steve Kovac. It's good that Steve mentioned Amazon because obviously, Courtney, it has an outsized role in what consumer discretionary stocks do. Not to suggest that there aren't a lot of other names that I know you're watching today.
Yeah, exactly. So Steve hit the Amazon effect. So let's give you some other ones. The consumer discretionary sector writ large is the second weakest of the day here. And this, of course, after President Trump threatened massive tariffs on China. So the sector down about 3% on the session. Best Buy getting hit really hard, down about 5%, now more than 6%. Remember, its vendors use China for a significant amount of consumer electronic manufacturing. Hasbro, the toy maker, also lower by about 5%. It produces toys in China. It has been working on lessening its reliance on the nation like many others, but still, there is an impact. Nike, down more than 4% today as well. It manufactures a lot in Southeast Asia. We talk a lot about the Vietnam manufacturing footprint. But China is also a market for its shoppers. It's an international. It sells there. That has been a weak spot. So further push down on the shares of Nike today. Now the defensive consumer staples group, it is up just ever so slightly. The only sector in the green. I just mentioned it because it also has the name consumer in it. And we know that there is a big difference between a staple name and a discretionary name for the consumer. Scott?
All right, thank you. That's Courtney Reagan. Young Yuma, as I said, of PNC, is with us. We're going to close either at the lows or certainly near the lows. We're down by, wow, it's hard to even, we haven't seen this in a while. I think that's why it's a little jarring for people. We're down 800 points on the NASDAQ, 3.5%.
Okay, we're almost at the 50-day now.
Dow, Young Yu.
These are big numbers. It is jarring. This is a sea of red out there, but I think it's important amid this pullback and this downturn to keep two things in mind. One is that President Trump didn't actually call off the meeting. I think there's still some prospect that President Trump and President Xi could actually meet at the end of the month. And secondly, the president only threatened tariffs. They weren't actually announced. So this hasn't been taken all the way. We do think this is a bumpy path toward negotiations between U.S. and China, but we do think it's a path that will ultimately start to have some progress. Both sides are carving out very tough negotiating positions, but that's the nature of the tension between these two superpowers.
Mohamed El-Arian suggested that at least some part of what we're seeing today has to do with the government shutdown and the fact that layoffs have now begun. You buy that as well as just one of the other things?
All right, that's a wrap, folks. That's a wrap on an ugly day for the Bulls. Ugly day for the Bulls.
But I think broadly what this does is it injects uncertainty into the economy, into the markets, where before there was an element of complacency.
Hope everyone has a great weekend. Weekend video obviously will be out Sunday around 2 p.m. or so, as usual. Other than that, I just want to grab a beer. It's been a slow day, slow drift lower. We're right above the 50-day moving average, as you can see on the right side chart. Took a lot of things off again today. Took a lot of things off during the week. don't fret if you didn't take the opportunity to get hedged, or maybe you're sitting on a lot of long positions. More than likely, we're going to bounce on Monday. That was a big drop down to the 50-day. So I'm thinking we could bounce. I took a long iron condor on the big cap S&P for next Friday expiration, shooting for 6,700. If we get a taco trade, or if we lose the 50-day and overshoot it, produce maybe a hammer, the put side will take care of the call side. So still have some puts on SPY. So I'm looking forward to next week. Enjoy your weekend. We'll see you on Monday. Not to worry. Got plenty of time, especially if you didn't take that that put fly off. Don't worry about it. Got plenty of time. That's out in November. So I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is October 10th. Have a great evening and a best weekend. Take care. We'll see you on Sunday. Ciao.
Retail also